Hello everyone, this is CA Ravi Taori. Guys, for CFIL audit in simple English, yes, especially for South students, we have prepared two special things for revision. Number one, we have prepared around 16 hours of 250 plus important questions. It will be in two parts. And next is we have prepared important concepts from our FADU chart book. From the whole chart book, it will be around 12 hours, one video. Links are given in the description. You can get soft copy of the 250 plus important question, 350 plus important questions. You can see our marked copies, also marked PDF for the Param question bank and other resources. Everything is given in description. Make full use of these two things. Do these two things first properly, and then you can enhance your preparation by adding more questions to it if time permits. Okay. On the last day of 250 plus important question, I was not well, but still I have managed to take the session. Cover both the things. If you cover both the things, important questions and FADU chart book revision, if you do both the things, you will be doing extremely well. Good morning, guys. So for upcoming exams, we have designed two things. One is important and tricky concepts from the FADU chart book, and second is important questions from Param question bank. Okay. We have already recorded video for 250 important questions. For 250 important questions, okay. I will try that. Till then, let's continue this only. Okay. So you can watch notes there. Now, so we have planned that 250 plus important questions. We already recorded those sessions. So you will be provided with that. And next is the tricky and important question from FADU chart book. In 2 days, we are going to cover those tricky concepts. If you do these two things properly, you will be well prepared for the exams. I can assure that at least 50% of the paper will come from here, at least. And if luck goes in our favor, it may increase to 70-75%. I think target should be to finish off these things first and then keep adding as time permits, keep adding few more questions. See, in CA, studies are incremental. They are never exhaustive. No one can cover CA final any subject thoroughly everything. So you have to prepare few things first, and then you need to keep on adding more things. So in these sessions, be relaxed, be happy, because that is the best mind for studies. Okay, don't be tensed. See, there will be two ways of looking at things. Whenever they see a new concept, new thing, some students will think, oh my god, I was not aware of this. I was not aware of this. I don't know how many concepts I don't know. And they will get tensed and they'll be worried throughout the session. And there will be some students, great, 5 marks done, 5 marks done, 5 marks done. They'll be so happy. End of the day, they will say that I have covered 600 marks today. Tomorrow again, I will be covering 600 marks. They'll be extremely happy. So we want that positivity. And our focus, our target will be to use every moment effectively. See, it's a huge chart book, around 100 plus pages. We'll try to cover maximum of these things. Okay, guys, let's see. You will need FADU chart book. If you're not having, you can take it from the admin. Come to page number 3. Page number 3, middle column. You will see professional skepticism quickly. It's very simple. What do you mean by professional skepticism? It means whenever you go to audit, you get information. It can be oral information, it can be written information. Don't rely blindly on it. Be alert. When you get that information, you should question it, critically assess it. When you find that there is nothing suspicious, nothing wrong, then only show faith on it. That's a very simple thing. That's what is written there. So whenever you go to audit, you get information, don't show blind faith. Remain alert. C, don't try to mug up the complete sentence. Either of the extreme is bad. Just having an overview of the concept is bad, and trying to remember each and every sentence statement is also bad. You need a middle path, and middle path is to remember few important words which will explain the whole concept, and then you need to explain it in your own words. That's the only solution. Don't try to mug up complete sentence. It will give you only one thing, lots of frustration, nothing else. You will need loads of time to memorize it, cram it. You will forget it n number of times. One day before the exam, it is going to drain you out like anything, because you'll be covering only some part in that. Correct? So don't try to remember the complete thing. So first thing, just be alert. Don't rely blindly on everything. Be alert. Question it. Is it all right? Critically assess it. Now give examples. They say that give examples of what do you mean by what we do exactly in critical assessment. So see far is the shortcut. So in professional skepticism, you should see far. That's how you should remember. C stand for always look for contradictory evidence. So you got this is the stock at branch. What insurance document says, what internal audit document says, internal report says. Go and look at it. Is there anything contradictory? Is there any pressure on the management or employees? Are there chances of fraud? Think about it. Are there chances of fraud? Then think about it. What additional thing I am supposed to do apart from what is given in essays? Apart from what is given in essays, am I supposed to do anything additional? For example, 510. Everyone knows 510? Initial audit engagement. It gives limited number of procedures to check opening balance. Always think about it. How, whether additional procedure required, how can I go beyond standards and auditing? That is professional skepticism. Go beyond standards and auditing, and then always try to think whether documents are reliable. If whether there is a overwriting, is it reliable? It's a very fresh document. How come it is 2-year old? Is it reliable? And so on. So when we say professional skepticism, C for look for contradictory evidence. F for whether there is a fraud involved, fraudulent thing involved. Then A for additional procedures. Go beyond essays. Then R for always look for reliability, whether documents are reliable or not. If you do this, what will happen? Three things will happen. One is there won't be overlooking. Important things won't be overlooked. They will not be overlooking. That's great. Nothing will be left. Not important things won't be left out. Overgeneralization. Overgeneralization means taking very small portion and just incorrectly generalizing it about the whole population. That is called overgeneralization. We just saw 5 salary slips and we are trying to make conclusion about 10,000 employees. That is overgeneralization. And inappropriate assumption. He is senior, he must be correct. He is a reputed person, he will always speak truth. These things won't happen. Overlooking won't happen, overgeneralization won't happen, and inappropriate assumption won't happen. Let's freeze, guys. The first concept was professional skepticism. Words to remember is be alert. Then questioning mind and look for critical assessment. Example is CFAR. And if you do this, 3 things will happen. No overlooking, no overgeneralization, no inappropriate assumption. So be relaxed, be happy, keep on marking a lot of things. And if you feel that ACs, if the temperature is low, we can switch off ACs for some time, There's a direct relation between as AC starts working properly, correct? It is inverse. We stop for studying. It's good that ACs are sometimes switched off. So if you feel laziness or something like that, we'll switch off the ACs. That I've seen across India, so I'm skeptical regarding ACs. Now, guys, as I said, as time permits, we will see important things one by one. I'm trying to focus on the things which are tricky, which students find challenging. Okay. Now come to next page. Okay, you guys are having remote there, so moment you feel that AC temperature is quite low, you can switch it off or increase the temperature. So you will get a question. Only one thing will be different, what is shown on the screen and what you, in my chart book, numbers are given, concept numbers. You won't be having that, don't worry. Okay. Now, what is this lower level of assurance? What do you mean by this? You will get a question that you are appointed as auditor, and then a client says after few days that please don't do audit, do review. Or after few days, he will say that don't do review, go for AUP. AUP stands for agreed upon procedures. So in audit we have high level of assurance, that is a reasonable level of assurance. And in review, review means two things. Checking juniors work is review, and doing the whole assignment in less time, checking things in less time, that is also called review. For quarterly financial statements we do review. And then we have AUP. AUP stands for agreed upon procedures. Client is going to call us and say that just perform three things. This trial balance, simply match it with the ledger. Next, match this trial balance with financial statements. Okay. And whatever difference you get, give those different to us. That's it. Do only this much. Don't do anything else. First match with trial balance, next match with financial statement. What is the difference? So give it to us. Assignments in which it is clearly specified, these 2-3 steps need to be done. And whatever facts come out, simply share those facts. Nothing else. Such assignments are called agreed upon procedures. We are not giving any opinion. We are not giving any assurance. We are simply giving the facts. Okay, guys. So question is, client comes and tells move from audit to review or review to agreed upon procedure. What will you do? So answer will be, if any client comes and does this, this is called client is asking for change in terms of engagement. Client is asking for change in terms of engagement. If they are asking for change in terms of engagement, you need to explain the theory, and you will explain one by one. What are the general reasons why change in terms happens? What are the general reasons why change in terms happens? These are very simple example. It may happen because of these things. There is a misunderstanding. There is a misunderstanding what client thinks their responsibility is and what they think what is our responsibility. They are asking for why haven't you filed GST returns? Why are you not giving us how much TDS to be paid? Come on, that's not our responsibility. If auditor anytime feels that there is MCLR, that means there is a misunderstanding, he should say that, come on, let's sit. Let's again write what are your responsibilities, what are my responsibilities. Let's do that and let's clarify things. Let's again make engagement letter. Or there is change in need of services. They want more reports from us. Their company secretary says, no, I am not going to give corporate governance report. Okay, we as auditor will give you corporate governance report. They want more service from us. Again, there will be change in terms. Or sometimes they will ask for lower level of assurance. That means move from audit to review, review to AUP. Or sometimes they want to put restrictions. No, you cannot March 15 days, last 15 days you cannot come. We are very busy with our business. Lot of orders are punched, lot of dispatches happen, our whole team is busy, you cannot come and disturb us. You won't come to audit for last 15 days. Okay, so that is a clear instruction. they may put restriction on scope. So simply explain, yes, it is possible, engagement letter is made, audit is going on, and client may come and they may ask for change in terms. It can happen because of these reasons generally. M stand for misunderstanding. C stand for change in need of services. L for lower level of assurance. R for restriction on scope. This is a very simple thing. Ask only one question, is it justified? Is it justified? They are saying that don't do branches of Delhi, Kolkata and Chennai. Is it justified? If say that they hardly contribute 0.5%, it is justified. Fine. Give it to the local auditors. Fine. Give it to the local auditors. Agree and record new terms of engagement in writing. SA 210 says you can change terms anytime you want if it is justified. It is absolutely fine. But suppose these branches contribute 75% of the turnover. If 75% of the turnover is done by someone else, what will the principal auditor do? What will the HO auditor do? It is not acceptable. If it is not justified, not able to agree, continue with the original. He try to mark single word. That single word should give the complete clarity. Last day revision will all depend on how good is your markings. Student with good markings will be able to revise very fast. Go and see original terms of engagement. Continue only original terms of engagement. If they don't agree with to do that, withdraw. Okay, fine. You don't want to continue with the original terms of engagement. It's a very big change. We cannot accept it. Withdraw. And then once you withdraw, report. We all know section 140. Whenever you resign, you are supposed to communicate to company, to ROC, and then to CAG if it's a government company. If you are not going to audit, you are going against initial terms of engagement, you should keep people informed. Such a big thing has happened. So go and report about it. Let's please, guys. It's very simple. Can, as per SA 210, can change in terms happen? Yes. What are the common reasons? Misunderstanding, change in need of services, lower level assertions, and there is a restriction. Simply ask one question, is it justified? If it is justified, make new terms of engagement in writing. If it is not justified, then try to continue original engagement. If that's not possible, withdraw from the assignment and report people. Then you explain, one of the example is moving from audit to review. One of the example is moving from audit to review or moving from review to AUP. Again ask the same question, is it justified? Client says I have less time. I thought 2 months are there before investors come. They are coming within a month. Go for review. Or he comes and says they are coming within a week. Go for agreed upon procedure. If is it justified, absolutely fine. Get a new revised engagement letter. Absolutely fine. If you feel justified, you can give those services. Give a revised engagement letter. Now, when you make new report, you will make a review report. You will make a AUP report. Generally, don't give reference of the earlier engagement. Don't confuse people. That we were appointed as auditor, then he came and requested to us to change it, then we accepted it, then we performed the assignment. Don't give reference to the earlier assignment. Avoid confusion. SA says avoid confusion. Don't give any kind of reference. But there is one thing, AUP, agreed upon procedure. Okay. But then one exception is AUP. AUP is agreed upon procedures. In AUP, AUP is a standard. See, earlier it was in the course. AUP is covered by SRS, Standards on Related Services. It says that whenever you perform AUP, it's a very unique assignment. Only 2, 3, 4 steps are performed. For any person to understand what was done, you need to specify all the 3 or 4 steps which were done in AUP. So in AUP, you need to give reference to all the steps performed. It may happen that out of 4 steps, one step was performed when assignment was being done as a audit. So then you will say that, okay, one step was performed from the point of view of audit and three steps were performed in the when the assignment was converted into AUP. That is the only time we give reference to the old assignment. Otherwise, we never give reference to old assignment. Let's freeze. So if you are shifting from audit to review or review to AUP, you feel it is justified, simply go for the revised terms of engagement, give a new report. No need to mention earlier assignment. Only exception is AUP. In AUP, because you have to specify all the steps performed, it may happen that one of the step was performed as audit. That's the only time you'll have to give reference to the earlier assignment. Otherwise, no need to refer earlier assignment. Is point clear, guys? Okay, so this was the tricky concept. As I said, guys, the tricky concepts which generally students are not able to get, we are going to focus on that. And 250 plus important question videos are already there, so you can refer that. Combination of these two things are going to make comfortable and convenient for you. Quickly, so in essay 200 we saw professional skepticism, and now 210 we saw change in terms of engagement, and that too moving from higher level of assurance to lower level of assurance. Now, next thing is, again, this is something which students generally don't understand, they are not aware about. You may get MCQs. In fact, CA Institute's booklet, MCQ booklet, is having MCQ on this. Correct? Now, so see, whenever plan comes to us, we know as per essay 210, first we are supposed to see whether there are pre-conditions. Where there are preconditions. How many preconditions are there? Two. Two preconditions are there. Once preconditions are satisfied, then we go ahead and then we make engagement letter. Now, this is what normally is done, but some assignments are special. They are different. There are some challenges. So they are discussing those. In some assignment, you may get different challenge altogether. How to tackle those challenges? So there are three special situations. Situation number one, financial reporting framework prescribed by law is unacceptable. We all know what is FRF. Basic principles and format which is used for preparing financial statement is called financial reporting framework. Okay. So AS plus Schedule 3 is a framework for small companies. Ind AS plus Schedule 3 is framework for big companies. Then AS plus RBI circular is framework for banks. AS plus IRDA regulation is for insurance companies and so on. So now they are saying a situation where FRF given by law is unacceptable. This may happen. For example, say take example of ISRO, Indian Space Research Organization. Confidentiality is extremely important. Extremely important. So ministry has released guidelines how financial statement should be prepared, and they say it should be a single page. Income expense difference, asset liability difference. That's it. Nothing else. Only one single page. If we want any additional information, we'll ask for it. Now, this kind of financial statement is not giving any kind of understanding what is happening. No previous year, no current year, no comparison, whether there is a growth, whether there is a decline, nothing, nothing, nothing. And they are simply seeing difference, nothing else. It is unacceptable. Now, you as a chartered accountant are called for doing this particular audit. Financial reporting framework is prescribed by law and it is unacceptable. This will happen in government organizations, ISRO, defense, such things will happen. What to do in such assignment? So SS says, okay, let's try to resolve this. We can accept only if two things are done. Only two things are able to be done. First, management do one thing, give some additional disclosures to make understanding better. Give some additional disclosures. What were profit previous year? current year, what's the increase, decrease, what's the some disclosure about financial performance, some disclosure about financial position. Management, you try to give more disclosure to make this statement understandable to people. And we will put EMP. We will put EMP. You give additional disclosures. We will put EMP and explain this particular situation. We both will make user understand financial statement better manner. Let's do it. Except only if they are ready to give additional disclosure and we are ready to give EMP. You should mark only one word, additional and EMP. Don't try to remember whole sentence. Only single word. Only single word. You go for additional disclosure, I go for EMP, let's go for it. And let me clarify that we will not use the word fair. Fair means something which is very good, giving very good understanding to users of financial statements. We will not use word fair. Okay. If above things are not possible, ministry says don't act smart. No additional disclosure will be given. If above things are not possible and we are under compulsion to do audit, at the time of empaneling with the government said when we give assignment you cannot say no. If above things are not possible and we cannot leave this particular assignment, fine. We will warn management in the engagement letter that listen, this assignment FRF is unacceptable, is highly unacceptable, and we are going to modify our opinion. Give this warning in engagement letter and finally give modified audit report that financial statements are not giving true and fair view. Is this point clear? Let's freeze, guys. So you may get a simple MCQ or a case study on this. Special case number 1, that is FRF is unacceptable, except only if two things are there. Additional, you give additional disclosure, I give EMP and no use of word fair. And then we go ahead. If it's happening, it's good. Continue the assignment. If it's not happening and still there's a compulsion, so we'll give warning in engagement letter. So warning word should be highlighted and finally we'll modify the audit report. That's the only solution. So you may get MCQ or a case study on this. Next special case is first FRF was unacceptable. So you do something, I do something. Next is audit report format is unacceptable. It may happen. Ministry will say that this should be the format of audit report. This should be format of audit report. And we say that it's unacceptable. It is unacceptable. There is chance of misunderstanding. This format is absolutely unacceptable. There is only auditor's responsibility and auditor's opinion. As if we are responsible for every damn thing. They don't want to give management responsibility. People may misunderstand that this is a report and these are financial statements they are prepared by us. If you feel the report is unacceptable, what will management do? Who prepares audit report? Auditor. So whatever needs to be done, who will be able to do it? Auditor. Try to give additional disclosures in audit report. See whether it can resolve misunderstanding. Law has prescribed the format. Law has prescribed the format. That is unacceptable. See if you can give additional disclosure and review that misunderstanding. If you cannot, don't accept it. But again, there is a compulsion. Fine. Whatever law says, law is supreme. We will not give reference to standards on auditing. We will not say that this audit is performed as per standards on auditing. That's it. So guys, second special case, audit report format is unacceptable. We try to resolve it by additional disclosures. If we are not able to resolve it, still we are supposed to do it, we'll do it. But we will not give reference to standards on auditing. See, the two outcomes are different. In the first case, ultimate solution was we'll give warning and we'll modify. Okay? Because you are also not able to do something, I am also not able to do something. Next, we will not give reference to standards on auditing. Now, next is law and accounting standards contradict. Can that happen? Yes. That can very well happen. Now, best examples are insurance. In insurance, the way assets are valued is totally different from what is given in AS and Ind AS. What is given in AS is absolutely different. Ind AS is not applicable to them. Okay. Now it is different way how to value things. What will happen? There's a conflict between, for example, there's a very famous case, very old case here only. Many years back, High Court says that okay, leasing company in Chennai and around areas no need to follow AS 19 when it come first time. No need to follow AS 19. So there's a contradiction. Law says don't follow, AS says follow. If there's a contradiction, then let's see two things again. Management do one thing. Give additional disclosure notes to accounts. That if you follow AS 19, this will be the effect. If you don't follow, this will be the effect. So that users get full understanding. Okay. If AS 19 is there, this is the case. If not there, this is the case. You give additional disclosure, or you do one thing. Change description of financial reporting framework. Generally, you know what is description of financial reporting framework? Financial statements are prepared as per Companies Act, that means Schedule 3 and all related things, plus accounting standard. This is a description. So modify this description. Financial statements are prepared as per Companies and accounting standard, except that accounting of lease is done as per High Court order, and we are not complying with AS 19. So two things are possible. Either in notes to account you go for additional disclosure, or second, you modify the description of financial reporting framework. If you are able to do that, answer is yes, we will give clean report. If answer is no, we will modify. We will say that okay, when it comes to leases, AS 19 is not followed. Let's freeze, guys. As I said in this particular session, sit, relax, be cool, calm. Just there is only one target. We are not in rush, finish off everything. No, it doesn't make sense. Whatever we do, you should be able to write in exams. So one more important thing in audit, sometimes students ask me this question, sir, I am having time, what should my strategy? Simply try to have overview of everything, or I should again remember every sentence of the question? No, again the middle path. Simply having overviews and not able to write in exam doesn't make sense, and trying to mug up every small nugget doesn't make sense. Take every concept and every question to a level where you are able to explain all the important points. If you are not taking concept to that level, doesn't make sense in just having the overview. Because if you are not able to write on the basis of overview, you won't be getting marks. Let's freeze, guys. We have discussed three special cases. Special case number 1, that was financial reporting framework is not acceptable. You give additional disclosure, I give EMP, let's resolve it. But if that's not possible and still we are supposed to do it, we will give warning in engagement letter and will modify the opinion. Next was audit report format is unacceptable. What will you do? I will go for additional disclosure. Try to resolve it. That's not possible. Simply don't give reference to standards on auditing. Then there's a contradiction between law and FRF. Okay, let's do one thing. Number one, try to give, see, financial, whose responsibility to follow financial reporting framework? Management. They are preparing financial statement. You do one thing. First, you try to give additional disclosure. Or there is one more solution. You modify FRF description. That's FRF is so and so, except AS 19 is different. If you are able to do it, it's great. Okay. If you are not able to do it, then we will modify the audit report. Let's freeze, guys. So we saw one very important thing in SA21 professional skepticism. We saw two tricky things of SA21-0. What if there's a change in terms moving from higher level of assurance to lower level of assurance? And next, three special cases. Next SA220. Okay. What do you mean by quality? What do you mean by quality? What do you mean by quality audit? So we know what is quality food. If it tastes good, hygienic, it is good quality food. But what about good quality audit? So you can speak up. Whatever you feel like. There is no punishment for it. Yes, appropriate. Appropriate evidence should be there. So if there is appropriate evidence, it's the quality audit. Okay. Keeping audit risk low. So if you're keeping audit risk low, it is a quality audit. Okay. Okay, fine. The two things. Very, very simple two things. And across this essay, they will keep repeating on these two things. Number one, audit work should be done systematically as per, see, whatever I say in the complete FADU chart book, okay, you'll always find some flow in the charts. I'll be explaining what is the flow. You catch that flow. If audit work is performed as per legal requirement, law is the most important, legal requirement. Below that, regulatory requirement. Below that, professional standards. When work is done systematically as per legal requirement, regulatory requirement, professional standard, that is the first condition. Second, and the final report which we give is appropriate, it is reliable. If anyone challenges it, we'll be able to prove it is appropriate. When these two things are there, when the work is performed properly and the report is reliable, we say that it is a quality audit. Now, there are two standards for it, SQC 1 and SA 220. SQC 1 gives us firm level policies, principles which should be followed to ensure any assurance assignment done in the firm, any assurance and related assignment done in the firm should have the quality. So SQC 1 gives us firm level policies and principles which need to be followed to maintain quality of different types of assurance and related assignments. So it gives us firm level quality control system. Firm level quality control system. Quality control system is nothing but steps of how to perform audit, how to perform any assignment. That is firm level quality control system. Now, SA 220, how SA 220 is different? SA 220 talks about how to implement firm level policies and principle to assignment level, specifically to the audit level, how to implement them. And there's one very important thing, it is engagement partner's responsibility to implement all these things in the assignment and take responsibility of quality. And SA 220 is applicable only to audit of historical information. Audit of historical information. That is nothing but audit of financial statement. Financial statements are nothing but historical information. Okay, so the difference is one is talking about firm level and one is talking about engagement level. One is covering all the types of assurance and related assignments. Assurance and related assignment means it is covering audits, it is covering reviews, it is covering audit and review of other than historical, like projected financial statements, like chart of the internal controls. It is covering related services also, like compiling financial statements. So SQC 1 talks about firm level and it is covering how to maintain quality of all the assurance and related assignment. But when we talk about SA 220, it is talking only about audit of historical information. Okay, so that is the difference between both. Now, so see, quality means two things as I said. While working, you are complying with these three things, and finally the report is appropriate, reliable. If challenged, we can answer it. SQC 1 talks about firm level quality control, how at firm level assignments should be planned, performed, and then how at engagement level it should be implemented. Now, this particular copy is also available. So you can simply go to our Audit Guru Telegram channel. We have explained how to get this copy. You can get this copy also. The FADU chartbook copy with the markings, but definitely that is not downloadable. Only you can view it. Now, both these standards focus on 6 elements. They focus on 6 elements. 6 elements of quality control. Let's see. They say that if you want to maintain quality, it's a big challenge. Firms are having 500 clients and 3 to 4 reports are issued, and we have to maintain quality of say around 1500 reports. 1500 reports. How to maintain this quality? They say focus on 6 things. Number 1, the most powerful, most important, experienced person in the team is engagement partner. He should take responsibility of quality control. He should take responsibility that quality is maintained. Okay, someone else will take care of the timing. It's okay. Someone else will take care of the cost. It's okay. He should take responsibility of quality. But he alone won't be able to do everything. So you need good human resource. You need adequate number of people, well-trained people to perform the assignments. Okay, now we have engagement partner and we have adequate team, competent team. They both should be ethical and independent. Next is they both should be ethical and independent. They should follow ethical principles. We all know there are 5 ethical principles. They are also called as fundamental principles of our profession. 5 fundamental principles. What are the 5 fundamental principles? If you want a shortcut, you can have a shortcut as CBI office. CBI office is ethical. What a joke, okay? CBI office is ethical. C stands for confidentiality. There's C square. C again stands for competence. Maintaining competence, maintaining competence and performing assignment with due diligence. Competence and due diligence. B stands for behavior, professional behavior. That means respecting law, respecting agreements, and not doing anything which bring disrepute to the institute. That's called professional behavior. I stand for integrity. I stand for integrity, and O stand for objectivity. Objective word again means 2 things. One is aim, goal, target, and next thing is being unbiased. So objective means I will keep my personal likings, dislikings, opinions aside, and with unbiased manner I will interpret the information and go ahead. Quickly, 5 principles. C for confidentiality, C for competence, B for behavior, professional, I for integrity, and O for objectivity. Okay. So team should be ethical as well as independent. Finally, they are ready. Be careful when you accept the assignment. Acceptance and continuance. Don't accept anything which you won't be able to deliver. However good you are, however honest you are, if you're taking assignment of space technologies when you don't know anything about it, you don't have any information, you don't have team members, you don't know how to get this information, don't accept such assignments. And finally, if accept assignment carefully, after accepting, the most important thing is engagement performance. Okay, so it's a very beautiful thing that by Shah Rukh Khan, people try hard for the opportunity, but once they get opportunity, they forget to deliver. Okay, so most important is once you accept the assignment, there should be engagement performance. For what is good engagement performance? Direct people when they go for assignment. Supervise them when they are working. If they are stuck anywhere, get them consultants. They should be consultancy. What is difference between consultants and experts? Consultants and experts. Consultants give advisory services. Expert, they come and work with us. They work. So if someone is giving only advices, they are called consultant. They're working with us, expert. Give them consultants, experts where required. When they finish up their work, junior's work should be reviewed by senior. And most importantly, after work is done and before signing, one thing should be done. EQCR, Engagement Quality Control System. Engagement Quality Control Review. A non-team member should come and see whether the assignment is performed properly or not. And then you sign. It's called very good engagement performance. See, it's in a sequence. You don't need to make a mnemonic for this. First, direction. When people are working, supervision. When they are stuck, consultants or experts. When their work is done, review. Before signing, EQCR. That's called good engagement performance. And the last thing is that whatever you do, there's always scope of improvement. And in today's dynamic world, there is always scope to change, not just improvement. So, last thing is keep monitoring your quality control system. Quality control system means the way you are doing audit or the way you are performing any assignment. Go and monitor it whether improvements are required. You are not doing good audit of bank, change the way. You are not doing audit of mutual funds properly, change the way. So go and see whether the improvement is required in your quality control system. That's called monitoring. Let's freeze, guys. How many elements are there? 6. First, engagement partner, then human resource. They should be ethical and independent. They should accept and continue assignment carefully. After accepting, engagement performance. And end of the year, you do monitoring. Okay. Now, we'll focus on EQCR. Come here. EQCR. Okay. So it's very interesting. EQCR, first thing, it is mandatory for listed companies. EQCR is mandatory for listed companies and for other assignments as per firm's policy. So firm may have a policy that all the clients having turnover more than 100 crore. More than 100 crore. More than 100 crore, they should have EQCR. Fine. So it is mandatory for listed assignment, listed companies, listed entities, and next it will be done as per firm's policy. Okay, fine. So you should remember only, see, try to focus on single words. So you should focus on only this thing, maybe listed entities, and next as per firm's policy. Now, what is responsibility of engagement partner? Again, simple. It is his responsibility to ensure the reviewer is appointed. Okay. So reviewer should be appointed by engagement partner. Appointment should be done. It is his responsibility to discuss all significant matters. What do you mean by whenever in audit you see the word significant, it means matter is such big that it should be discussed with the seniors, managers, and engagement partners. Something which is so important that it should go up to engagement partner, that is called as significant. And the examples are, initially you got a very big risk, significant risk. In test of control, you got very big deficiency, significant deficiency. While performing substantive procedure, you got a big mistake, material misstatement. You got anything which affects audit report, it is a significant matter. Correct? All these are example. So first thing is engagement partner. It is your responsibility to appoint reviewer. It is your responsibility to go and discuss significant matters. And then don't date audit report. That means don't sign. Correct? So date means a lot of things nowadays. Don't date audit report. Don't sign it till the time reviewer gives his till the time reviewer completes his review. In fact, he writes a statement. I am not aware about any unresolved issues. So indirectly he is saying all the issues are resolved. Till the time he is not signing it, completing his review, we should not sign it. There are only 3 responsibilities: to appoint, to discuss, and not to sign. What is responsibility of the reviewer? When you come for review, your responsibility is also to discuss all significant matter. Okay. Even you are made responsible to come and see all the significant matters. Next is see all the supporting documents. All the documents, all the documents where significant judgments and conclusions, all the documents which are supporting significant judgments and conclusion. Lot of judgments are taken throughout the audit. Whether to rely on controls, whether to take help of internal auditor, whether I should put EMP or not, whether I should put key audit macro or not, whether I should modify or not, all these are called as significant judgment. First thing is go and discuss all significant matters, go and see documents with all significant judgments and conclusions. Then finally go and see whether the final conclusion opinions are appropriate in the audit report. Once you file these things, okay, give a final review to financial statement whether everything looks appropriate, audit report whether everything looks appropriate. 4 responsibilities. Go and discuss significant matters. Go and see documents for all significant judgments and conclusion. Finally, whether opinion is appropriate, conclusion is appropriate. Give a final review to financial statements and audit report. That's it, done. Do only 4 things, nothing else. Then additional matters are there only for listed entities. Listed entities is sensitive. Listed entity is sensitive. It's very important. First thing is go and check whether the team was independent. Why? Listed companies, so many people are associated. There are lakhs of shareholders, thousands of employees, there are many depositors, there are many customers, supplier, etc. Go and see whether the team was independent. This should be done only in listed assignments, listed companies, listed entities. Next, whether for all complicated or contentious matters, difficult matters, whether proper consultation was taken. Go and see whether they were independent, go and see whether proper consultation was taken. And third is whether documents supporting significant judgment, whether document reflect the work. See what is the difference? Earlier we only saw documents, okay, they are documents for significant judgment, significant conclusion. Now we will see whether this document reflect the work. Are these documents genuine? Are they really, whether really such work was done or not? We are going one step ahead. Only in case of listed entities. 3 things: independence, consultation, and go beyond. See whether the work is really performed. Guys, there was a question. Now in 250 plus important question I have this. Very wonderful question. And there was a question that it's a listed company. So EQCR is applicable. And 2 people are fighting. Engagement partner. And the next is reviewer. They are fighting with each other. You can switch off the ACs for some time if required. If required. Okay. Otherwise, I understand when ACs need to be switched off. Now, they are fighting. What they are fighting for? They are fighting for engagement partner is saying it is my responsibility to ensure the team is ethical and independent. I will ensure independence. Reviewer says that I will also go and check independence. He said, what nonsense, I have checked it, you didn't know what, you don't need to see it. So what is the answer? Both. Even engagement partner is responsible. Okay, so please everyone check your mobile phones. Yeah, I will also check mine. It's on silent. Okay. Now, it is responsibility of the engagement partner also, and in listed companies, it is responsibility of the reviewer also. So engagement partner was saying he was fighting, you cannot see, he is incorrect. This question is not yet asked in exams, but it is there in MTP RTP. Highly probable that it will make its way to the exams. Okay guys, let's freeze. Essay 220, we focused on elements and we focused on EQ, CR. What is responsibility of engaged partner? What is responsibility of reviewer? And additional responsibility in case of listed entities. This conflict in the sense engagement partner was saying you don't need to see this. So they are fighting on this. He's saying even I will have to look at into it. He's saying you don't see it. So we'll say that okay, engagement partner is not correct. He will also have to ensure independence, and reviewer will also need to see whether the team was independent or not. So basically engagement partner was not agreeing to it. That was the issue. Okay. Now say 230 guys. If you go to page number 5, second column, what is completion memorandum? Completion memorandum, and is it mandatory in audits? Okay. First of all, completion memorandum is not mandatory. It's up to audit team. It is up to audit team. They may prepare it. The first thing is they may prepare it if they think, if they have time, resources, and if they feel it is appropriate for them. What is it? It is summary of all significant matters which arise during the course of audit. So it is a summary of all significant matters. Key to memory is just focus on one word. It is very easy to remember one single word. So may, you know, it's completely optional. You write one sentence. Summary, you know, it's summary of significant matters. And then cross-referencing. So it's a summary of 2 pages. And in these 2 pages, there are 8 significant matters explained. What was the matter, how we tackled it, what was the conclusion, and so on. You give referencing. Refer file number so and so, page number so and so. So that if anyone wants to see detail, he knows exactly which file, which page number he should see. There should be cross referencing to other audit documents. Fine. What are the benefits? What are the benefits of preparing it? See, first of all, if I number it, first benefit is when people make this summary, they again carefully think about significant matters. They reconsider it. What do you mean by consider? Consider means to think carefully about something. So when you make this, you are carefully thinking about the significant matter again. What was the matter? How it was tackled? What we did? What was the conclusion? Whether something else needs to be done. Okay. Then consider this. So it helps in considering the significant matter. We also again check. We again check what? Whether objectives of essays were met. Everyone is aware? Every standard sets target for the auditor. Every standard sets target. This is your target. So as per essay 200, there is a overall target. What is the overall target? Give opinion whether financial statements are as per applicable financial reporting framework. Whole society expects it. Whether it is as per accounting standards. Whether it is as per accounting standards, okay. So it's your ultimate objective. Whether it is as per accounting standards and schedule 3, whether it is as per applicable framework, and if it is a fair presentation framework, you need to additionally say one more thing, whether they give true and fair view. Overall objective is whether it is as per applicable framework and whether it gives true and fair view. Second, Okay, for this is the overall objective. Fine. Now, apart from this, every essay sets target. So, whatever is the related standard, whether you have achieved those objectives, for suppose it was a related party issue. So, whether you have achieved target set by 550, it was a going concern issue, you have set target set by 570. So, making this summary is really good. Like for all the difficult topics, you should try to make your own summary for difficult, not the whole subject. Students go in extreme. Either they will not make any chart or they will try to make chart for the whole subject, and that's the problem. There's the middle way. If you're comfortable with existing charts and notes, it doesn't make sense you go and make again charts. It is foolishness. There will be some difficult topics. Even after going through charts or content given by your books, you're not comfortable. Simply go and make charts for them only, not others. It is not required. So the extreme is, the middle path is, whatever complicated topics, even after going through the material you are not sure about, just take a page, make your summary and simply put it there. So when you make summary, you are reconsidering the matter, you are making summary, you are again ensuring that objectives are met. And third most important, it is very helpful for seniors. It makes review by the seniors very easy. Before completion, when people come and check your work, that is called review. After completion, people again come and check your work, peer review, quality review, that is called inspection. In large and complicated assignments, it makes review and inspection very effective. So let's freeze, guys. So sometimes student asks, sir, I don't get marks. And they simply say that, no sir, I was not writing proper language. It's not about language, you are not writing all the points. Moment you start writing all the points, you'll automatically get marks. So see many times to what students remember, completion memorandum is a summary and they will write everything about summary. It is summary of audit, it is summary of opinion, they will write summary and summary and summary. It is specific. If you explain this one by one, first word to add was may, it is optional. Summary of significant matters. Then you have to give cross referencing. Then you explain what are the benefits. There are two benefits. See, try to two benefits to juniors who are working. They are reconsidering the whole matter. They are ensuring whether objectives of essays are met. And there is one benefit to senior. It helps in review and inspection of the assignment. You write all the points. Okay. Now, let's come very interesting. Come to page number 6. See guys, we are seeing critical things. So we started, we saw critical things of 200, 210, 220, 230. Next is fraud. Essay 240 has two critical concepts. One is fraud risk factors. Other is indicators of fraud. Okay, what are there? What is the difference? Can anyone, what is difference between fraud risk factor, fraud risk factors and indicators of fraud? Anyone? Yes, come on. Her. We're bombarding so many concepts. Correct? Okay. So our mind is now already involved in that. Better you only tell. Now, circumstances, situation which increases chances of fraud to happen, which may lead to fraud. These are the reasons because of which fraud can happen. That is called fraud risk factors. The shortcut is POW. P is for pressures. If there is a lot of pressure on the top management, or there are a lot of incentives attached to financial statements, they may go and manipulate it, and that is called FFR, fraudulent financial reporting. Fraudulent financial reporting. So how P is for pressures or incentives. So you go and look whether pressures or incentive on the top management. Okay. Next is what stand for attitude, rationalization, bad attitude. Management says we want profits at any cost in any situation. We are not concerned. You are doing ethical things, you are doing unethical things. We want profit. Anyhow, we want profit. We are very aggressive. We want profit at any cost. Okay. So if they say that we want profit at any cost, any manner, we want profit, that's it. Then that attitude is reason for fraud. Or they are very careless. Or it is saying there is a deficiency in wages, improve your system, improve your system, improve your system. They are not improving. Careless. So if attitude is bad, again it may lead to fraud. Then O stand for opportunity. Situation is such that there is a lot of opportunity to do fraud. For example, 90% of the business is in foreign countries, foreign branches. It is difficult to visit branches, difficult to get information, difficult to communicate because there is a language barrier, and their laws are different and here laws are different. There is a lot of opportunity to fraud in foreign branches. Because auditor will not be easily able to identify the frauds. Opportunity. Are you getting this point? Let's freeze guys. There are three reasons. There are three reasons why fraud may occur, which increases chances of fraud. P for pressure, A for attitude, O for opportunity. Now what they have done? There are three factors, and how many types of fraud are there? Two. One is manipulating financial statement, that is called as fraudulent financial reporting, FFR. And next is stealing thing, that is misappropriation of assets. So they are saying, they are giving examples of POW in FFR, examples of POW which may lead to FFR. Then again examples of POW because of which misappropriation will happen. So there are 6 things. Examples of pressure, examples of attitude, example of opportunity which may lead to FFR. An example of these 3 things which may lead to misappropriation of assets. And any one may be asked for 3 to 4 marks. Any one of them may be asked for 3 to 4 marks. Okay. Now, it's not possible to take all of them. See, audit is one of the very voluminous subject, and today is a big challenge. So my objective is very simple. Every moment we should be learning something good concepts, and I want to touch maximum topics. So it gives a good confidence. Okay, I know about critical concept of this standard, this standard, this standard, this standard, this chapter, and so on. So it boosts your confidence, and with the help of this confidence, you do more number of topics. You do more number of topics, and more often than not, that is sufficient. As I said, exhaustive study is a myth. First rank holder scores 70%. So 30% even he was not able to do it. And God knows what else he was not aware. Say 10-15% more. So he was not having 30-40% of knowledge maybe. Correct? Even he is going with 60-70% of the full preparation. Why are you worried? First rank holder. Okay. And then you should be always hopeful. While studying, you should think, okay, this is going to come in exam. Isn't it possible that whatever we study in these 2 days and those 250 questions, maybe 60-70% paper comes from there? Be hopeful. Correct? Because that will give a lot of positivity, that will keep you going, that will increase your energy levels, and you will become more efficient and effective. Okay. So, and if I understand not all of you are very comfortable with Hindi. If you are comfortable, there is a FADU chart revision. It was a few months back we did it. The fresh one is there, but the fresh one is a classroom recording. It is having more explanation. So each concept is revised, explained. But then we prepared for 1.5 days. The whole chart book is covered in 12 hours. Whole chart book. It is so fast. It is studio recording. It's a bullet train. Only word will be said only once, no single repetition, nothing. Because the target was to make something which makes revision possible in 1.5 days. And it is very fast, no explanation, zero explanation is there. And if you want to, if you can use it, you should use it. The trick is reduce speed to 0.74. Reduce 0.75, at least you'll be understanding, okay, what are you saying? Okay, if possible, you can use that also. And then in professional ethics, I'll be sharing all the resources. In professional ethics, we have covered the whole professional ethics, cut to cut, end to end. One revision is there is of 2.5 hours. That is in Hindi, but there is in English also. Only 1.5 hours. But how it was recorded, I will tell you. After each lecture, I make a revision audio. Revision after each lecture. That is super fast. So the whole professional ethics, every concept is covered in 1.5 hours, and that is in complete English. If you can reduce the speed, and listen to it, even that will be covered. Okay. Anyways, let's cover few things. I will cover the first thing, pressure. So fraud risk factors, there are 6 different topics in fraud risk factors: POW for FFR and POW for misappropriation. Let's see pressure, example of pressure. Example of pressure, POWs. Now here, if there is any situation which threatens, puts pressure on profitability of the company or financial position of the company, that becomes one of the reason for manipulating financial statements. So they are giving examples of the threats. Let's see. In sequence of importance, again you'll always find some flow. See, I am a person not blessed with very good memory. So I always think of how to remember myself. And in the process, I check it. If I can remember, then students can. If I would have been a person with a very good memory, not this very easy, next, very easy, next. Okay, so you will always find some flow. There will be memorization, but with logic. Now see, again I have written there in the sequence of importance. So if there is a new law, there is a new legal requirements, it may create pressure on the companies. For example, Ola, Uber, they say that there should be a mic and there should be a camera in each taxi, like in Dubai. Each taxi will be having cameras and internet and mic and 24 hours connectivity. Government can go and see what is happening in any of the taxis. No privacy, correct? If that is a new law, lot of expense need to be done, and it will create pressure on their profitability, and because of that they may go for manipulation. Below law, there is market. If there is a lot of competition in the market, creating pressure to show that we are the winner, people will go for manipulation. Below market come business. Lot of businesses are failing in the industry. They need to boost their investors. We are doing fine. Show faith on us. Give us more money. They may go for manipulation. Below business comes customer. Customers are declining. Customers are declining, putting a lot of pressure on the company, and company need to assure all the stakeholders, don't worry. In the process, they may go for manipulation. See, it's in a sequence. First is law. Then below law, there is a market. Below market, there is a business. Below business, there is a customer. See, all the 4 points are in sequence. Next 3 points are connected to each other. See, key to memorization is break, divide and rule. Don't try to remember all points together. Break it. Then we have broken it. There is new accounting requirements. There is new accounting requirements which are requiring more loss booking, more provisions. They are creating pressure. And now after accounting, we are seeing a lot of operating losses. Operating losses, bankruptcy will happen, takeover may happen. To again assure people, we may manipulate financial statement and show good performance. And below that, there is a cash flow. If the cash flows are not going good, again there is a lot of pressure. Again, to assure investors, people will go for manipulation. So first comes accounting. After accounting, we come to know about profits. And from P&L, again we get cash flow statement. So there are 3 points connected to each other. First comes accounting, then comes profit, then comes cash flow statements. So 4 points in sequence and 3 points. All these are examples of creating pressure on the entity with respect to profitability. So I have taken that one. Next, let's take something from pressure. So come to opportunity in misappropriation of assets. Opportunity. See, opportunity can happen because of features. Characteristics means some important features, critical features. It can happen because of characteristics of the assets or characteristics of the items. See, again, everywhere you will find some flow. In balance sheet, first comes fixed assets, then comes investments, then comes current assets. In the same flow, in fact, in current assets, first comes inventory, then comes debtors, then come cash and bank, then come loans and advances. Even that is in a flow, you must be aware. Less liquidity is stock, then more liquidity is debtor, more liquidity is cash and bank. Now listen, if fixed assets are very small, fixed assets of small size, easily movable, easily sellable, there is no identification mark, no logo, it gives opportunity for misappropriation. Then we have investments, bond, chips, diamonds, very easily sellable, high value items, again opportunity. Then inventory items, same thing, very small, easily transportable, high in demand, large cash. Sometimes because of nature of assets, characteristics of assets, because of characteristics of the asset like fixed assets, investments, inventory, cash, it is very easy to misappropriate them. These are example of opportunity. This creates opportunity for misappropriation. Next is weak controls gives opportunity. Again, it is in a sequence. There is no physical safeguards. There is no lock and key. There is no lock and key. There are no security guards, no lock and key guards. It creates opportunity. There is no segregation of duty. Only one person is given the full responsibility. Creates opportunity. Then there should have been authorization. Anyone goes inside, there should have been authorization. There is no authorization requirement. There should be record. Who went inside, who went outside, what they brought, what they took. The complete movement should be recorded. If no proper records, again problem. No one should be able to manipulate those records. There should be reconciliation between records and physical assets. And a senior person should have oversight. Oversight simply means supervision again. He should be having an oversight over the whole operations of the assets. Again, and management should be aware about the IT systems, otherwise they will be fooled. And employees should be sent on mandatory vacation. You must be aware. Especially finance department happens. They are sent, there is a mandatory leave, 15 days in a year. Good. 15 days they have to go on leave so that someone else does their job, and when someone else does the job, they are aware. Someone else does the job, they are aware how the earlier person was working. Quickly, let's freeze. Again, it's in a sequence, guys. First of all, good controls means physical safety. There is no physical safety, then no segregation. Then there should have been authorization, no authorization. Even if there is authorization, there should be good records, no proper records. There should not be access to records by anyone. After records are meant, there should have been reconciliation, whether things in records reflect the reality. Then oversight of the seniors, and seniors should be able to understand IT system to some extent, and again they should go on leave. So all these things are not there. It creates opportunity. Let's freeze, guys. We are studying what asset 240 in that fraud risk factors. We saw examples of pressure because of which FFR can happen, and we saw examples of opportunity because of that misappropriation can happen. Now next is, see here. So if you go to third column, what are indicators of fraud? What are indicators of fraud? Yes. Indicators. How it is different from FFR? Anything which, whatever you want to say, speak up. Perfect. Correct. Fraud risk factor means because of this fraud may happen. Indicators means they show that maybe fraud is already happened. So if you take a parallel example, someone is doing rash driving, especially bikes. Accident may happen. And then you see a person walking with the bike. Correct? He is injured, his bike is damaged. It shows accident has happened. There is difference between fraud risk factor and indicators of fraud. What happened? Okay. So there are three indicators of fraud. First one, discrepancies. Discrepancies means something unusual. If you find unusual things in systems and records, if you see unusual things in systems or records, that's the indicator of fraud. For example, very simple, easy again. Again, it's in a sequence. You see unusual access. People are accessing system at 1 o'clock, midnight, 3 o'clock, 4 o'clock. Unusual. And people are accessing from China, Australia. We don't have any connection from them. That is a discrepancy. And then people are having access, number one. Then they are authorizing transactions, or automatically unauthorized transactions are getting processed. First of all, people are accessing unusual thing. Unauthorized transactions are getting processed, unusual thing. Transactions are not having supporting documents, unusual thing. Transactions are incomplete, unusual thing. All these are discrepancies. Are you getting this point? Then there are last minute adjustments. Lot of last minute adjustments which generally doesn't happen, unusual thing. Then there are a lot of complaints, whistleblowing. You are getting letters, this is not correct, that is not correct, this is that. All these are called discrepancies. Again, how I remember, first I think about access, correct? Then unauthorized people are accessing. Then transactions are getting processed. Transactions are not having supporting document. Things are incomplete. Finally, lot of last minute adjustments and lot of complaints. If you go to any assignment and you see such thing, that is called discrepancies. Okay. Then next is lot of missing evidences or conflicting evidences. Missing evidences. System development documents are missing. There was upgradation from one system to another system. There was authorization. There were list of changes. All those documents are missing. Something is wrong. Original documents are missing. Something is wrong. Electronic documents are missing. Something is wrong. Cancelled bill, cancelled checks, documents are missing. Something is wrong. Missing evidences or conflicting evidences. You are getting unusual ratios. Sales is increasing by 100%. Gross profit is decreasing by 20%. Unusual. And people are not able to explain it. Conflicting. Inventory doesn't match with the record inventory, doesn't match with physical. Conflicting evidences. So these are if you see missing evidences or conflicting evidences, again that is a indicator. And the last thing, which was asked in exam also, problematic relationship between management and auditor. Management is not giving time. Then whatever time they are giving, they are delaying the information. Extraordinary efforts are required to get evidence. In fact, they are making our complaints. So all these things show that relationship between both is not good. Problematic relationship. Let's freeze, guys. What are the indicators? Three indicators. Discrepancies in systems and records. Then there is a missing evidences and conflicting evidences. And third is problematic relationship between management and auditor. There is a wonderful question in the 250 plus important question. It is about fraud risk in revenue. Must do. Again, that is covered in the other session. Must do, very, very important, extremely critical. Again asked in MTP, RTP, but till now not asked in exams. Okay, now, and further I will try to cover those things which I have not covered in that session. So a lot of things will be covered in this session, lot of things will be covered in that session, and in combination you will be covering a lot of things across the 18 chapters. Okay. So guys, after focusing on 240 critical topics, we are moving ahead essay 250. Let's see. We'll go for 5-minute break at 11 o'clock. And that break is not to eat something or drink something or not to go and have tea. That break is peace for 5 minutes. Okay. 5 minutes, you can simply relax, listen to some songs, talk, stretch, and come back. And at 1 o'clock, we'll have lunch break of half an hour, where again you are not supposed to eat. You're supposed to have something light. In fact, maybe juice, fruits, or idli, but not a complete lunch. Correct? Because if you have a complete lunch, then you are gone. Already I can see one or two who didn't have a good sleep yesterday night, I think. Correct? So, moment they entered, their eyes were shut, even before they listened to anything. Okay, that's fine. I understand. Some of you, a few of you are traveling also. Some of you were traveling, and fine. See, if someone is feeling sleepy, it's absolutely fine. You know, I recollect my days. It was like that only. Okay, so little bit of time pass is required. Otherwise, lot of concepts after point of time you teach. We are gone. We are in different world. We are in trance. Where eyes are open and everything else is in air. So I was in a boarding school, 8th, 9th, 10th. So first of all, you need to ensure all evil elements have slept. Then only you can go to sleep. Correct? So in the process, you go to sleep late. Then our head was Brigadier Persokar. Now he was so strict. Winters, 5:30, he wants everyone on ground. We are not able to see our own hand. That's so dark. And everyone is on ground. Slept late, then woke up early. We are on the ground. Then we are supposed to run for 12 kilometers? What nonsense. If it would have been rounds of the grounds, then person like me, in first round it's second, in second is it fourth, and third it is seventh, done. No, no, no. They will make a route, a map, and then you run that. There is no chance of shortcut. And you cannot run slow, otherwise you miss the breakfast. You have to run fast beyond all your strength, energy, and finally you reach the mess. That was mess. There's a different atmosphere altogether. People try to prove their superiority by eating more, how strong they are. So idli used to be idla. Idli is supposed to be sponge, soft. It's supposed to be soft. It was not. And people used to eat something like 30 idli. What nonsense. 30 idli and drink sambar from jug. This is absolute nonsense. So in that atmosphere, tend to eat more. Otherwise, you will you will have inferiority complex. And now, no proper sleep. You ran so much beyond all your energy and strength, and you ate so much. Any subject, any teacher, it's a matter of 5 minutes. It is a matter of 5 minutes. I'm going to go to sleep, and then I devised all different ways. So simply throw pen down, and then go below bench and sleep there. A lot of tricks. So whenever someone sleeps in my class, okay, I know something must have went wrong with you. Now, listen. Now come to essay 250. Are we supposed to go and check compliance of all the laws? No. Then what will CS do? What will happen in secretarial audit if you are going to check compliance of all the laws? What should be our strategy with respect to various laws? So essay 250 is wonderful. It explains auditor's responsibility with respect to laws applicable to entity, and it gives simple things. Let's see. First step is understanding. First step is understanding. Go and obtain general understanding of different law regulations applicable. So basically make list of the laws applicable. And next is how company is planning to comply with them. Whether there is a legal department, how they are planning to comply with them. So first go and understand what is the legal framework, what is the different laws applicable, and what is their preparation. Once you understand them, divide laws in 3 categories. Once you have understanding, divide laws in 3 categories. Category number 1, laws having direct effect. Laws having direct effect. Now, what are laws having direct effect? Industry specific laws, especially for banks, especially for NBFCs, direct effect. Then affecting income expenses, affecting provision for tax, DT, IDT, POGA, that is payment of gratuity, POBA, payment of bonus, direct effect. Schedule 3, direct effect. Identify laws having direct effect, industry specific, affecting income expenses, and then affecting format of financial statements. You need to check compliance. That means catch hold of all important section and one by one check compliance. Yes. For laws having direct effect on the financial statement of the entity, you are going to be very alert. Your strategy will be check compliance. Then next categories, law. No, there is no word like indirect. So you may go and say one is direct, one is indirect. I know this happens. So what they say? Next category is laws which may have material effect. May have material effect. For example, now, for example, environmental laws may have material effect. Industrial Dispute Act may have material effect. Go and check non-compliance. Okay, don't go and check compliance. Go and check non-compliance. You do only two things in this. Call management, sit. Inquire with them whether there is a non-compliance with 1, 2, 3, 4. Only go and do inquiry with legal department, with employees where there is a non-compliance. And second, go and check correspondence, that is communication between company and authorities, and check whether there is any hint of non-compliance. Only two things. Okay. Direct effect, we have to check a lot of things. We have to check compliance. Which may have material effect, we have to check non-compliance. How many things? Two things only. Inquiry and correspondence. All other laws, don't do anything. Don't do anything. No obligation. Don't even do inquiry unless there is a suspected or actual non-compliance. Unless you come across suspected or actual non-compliance. See, wonderful essay. It is giving you strategy how to tackle things. How to tackle things. First, go and obtain understanding. What are the laws applicable? What is their preparation to comply? Then you divide law in three categories and have a different strategy. And the last one is don't do anything unless there is a suspect or actual non-compliance. Laws other than above. Last thing is remain alert throughout the audit. You may come to know about suspected or actual non-compliance from anywhere. You may get this information from media. You may get this information from board minutes, they were discussing something. You may get this information from discussion amongst the employees. Be alert. And lastly, 2 points in last. One is be alert and take written representation. After collecting all the evidences, whatever you wanted, if you feel you don't have enough assurance, you got all the evidence which you wanted. There is no problem, there is no lack of evidence. Remember this. WR is not for lack of evidence. Even after getting all the evidence, still you are not feeling confident. You want more assurance. You say management, listen, on your letterhead, legal head should write it down. All that these are the instances of non-compliances and there are no other non-compliances. Give it to us in writing. All instances of suspected actual non-compliances are disclosed to auditor and we don't know anything apart from this. So this is called responsibility of the auditor as per SA 250. First is understanding, then divide law in three categories and handle them properly, and lastly two things. Last, it be alert and get written representation. If you take each concept to this level where you can say that, okay, these are the three things I am going to focus on. These are the four things I am going to focus on. Then you will be able to write good answers. It's absolutely fine. Instead of studying 100 concepts, you may study only 60. But take those concepts to the level that you remember these are the 3 points, these are the 4 points I am supposed to focus on. But then don't try to mug up the each and every sentence. I spoke to one of our students, scored around 75 marks in audit, and he was a rank holder also. And I asked him specifically, did you cram everything? He said, sir, no, sir, it's not possible. Okay, good. Then, did you try to remember keywords? So nowadays there is a keyword, important words of each sentence. No, sir, even that is not possible. Huh? Even that is not possible. Then what you did? Sir, I broadly remembered which points I should focus on. which points I should focus on, and I explained it in good English. And automatically, if you have read well, automatically words come. You're called mistake as a misstatement. That's a common sense. You are going to call significant risk, not big risk. So those words come automatically as you read and go ahead. Just ensure that you use more technical words as compared to simple English words. That's it. And that's how I got the marks. Great. Correct. And then be careful with your handwriting also. It has a lot of impact on the marks. Like recently I saw a paper. It was so bad, so bad. I was not able to read. I zoomed everything. What is this? Somehow I read. He wrote things properly. He didn't get marks. And only one reason. Handwriting was so bad. Please work on that. Okay. And the final tip, one very important tip for paper writing: space management. Length of the answer definitely has psychological impact on person examining it. 100%. And you should play with the psychology smartly. I'm not saying to write garbage or to write BCom style paper, BCom, write everything. No. But you should play smartly, and very important is space. Now, what can be done? Fresh question on each page. Don't write the question on first line. Write on the second or third line. See, you have consumed 2, 3 lines. 2 lines. Yes, that's intelligence. Then you put not very big, small margin on the left, small on the right. Again, you are using the space, but small margin. Huh? Don't make it so big that your answer is in the margin. Then I saw this in a student's answer sheet who scored 95 in inter audit. 95. Two students will pass in this. 95. But he was very smart with the space. Then you give headings. Suppose now this was, if I would have been the person writing the answer, I would give first heading essay 250. See the magic of heading. 3 lines are consumed. One line above, one line below, and that is one line. 3 lines get consumed. So I will write essay 250. Then I will write essay 250, full name of the standard. And in short, what this essay is about. Responsibility of the auditor with respect to various laws applicable to entity. Then I will give next heading, understanding. Then I will give next heading, 3 categories. And then I will give again heading of each category. Listen guys, he is looking for the matters, expected matter. Moment he sees proper heading, he knows you know. And many times he won't even read what you have written. Because he knows that you know that, and that is sufficient for him. That is the magic of headings. And automatically your answer is becoming bigger and bigger. And moment it goes to 2 pages, fantastic. So much he has written. And giving space is making him easier to read also. Don't irritate him. Already is irritated by reading what nonsense people are writing. Sometimes we forget what are the proper concepts. So don't irritate him. And then you write 2 pages. Automatically you get 1 extra mark. And that 1 extra mark is not 1, that is 20%, 25%. Out of 5 or 4, you are getting 1 extra mark, that is 20, 25%. In fact, I have seen that, see, you don't need to know all the questions well. That's not possible. We are humans. Out of 30, how much you plan to score in MCQ? 20, 25. Let's take average. Okay, 22. 22 from MCQ. Reasonable target or it's very ambitious? Reasonable. Then give complete 1 hour. Some people act over smart. I will finish up MCQ in half an hour. What nonsense. It is going to give you maximum marks. Give 1 hour, complete one. I am not saying give unnecessary time. Give complete time. In fact, it's okay if you take 1 hour 5 minutes. 55 minutes is officially you should give as per marks allocation. It can go up to 1 hour 5 minutes. If you are not giving enough time, it is foolishness. Give more time. The amount of marks which you are going to score in MCQ is much higher than theory, which everyone realizes now. Moment much higher. Then out of 70, if you know, out of 70, I am saying, if you know very well, 40 marks question, not complete 70, 40 marks. And out of that 40, you score 70%. I'm not talking 100 or 90 or 80. What? 70%. So 40 marks into 30%. 20? बहुत हो गया तो. This too much. Let's say that you only know 30 marks question. 30 marks out of 70 only 30 marks and you scored 70%, that is 21. And out of that rest 40, out of sympathy, because you have written 2 pages, out of sympathy he gives you 20%. So that is 8 marks. Okay, so sir, please don't make total. I will cry. 22 plus 21, that is 43, plus 8, 50. Why I am saying this? It's absolutely fine if you don't know everything exactly. You should show faith in your preparation. You should know that there will be majority of the question you may not be having exact answers, but you should know that there will be few questions which you know bang on that these are the perfect ones. If you are mentally prepared for this, you are going to play well. So teams which you know that it's a bad pitch, I cannot score boundary on each ball. They know that it's matter of 1 and 2s. That's how I'm going to conquer this particular match. So you should know CA final is about 1 and 2s. It is not about exact answers. You are extracting 1, 2, 1, 2, 1, 2 from everywhere. And moment you start extracting 1s and 2s from everywhere, you will reach to magical number of 40s and 50s. An institute, however tough paper is, institute will always give chance of 40s and 50s. Students who are mentally strong, they will be able to extract it. And there's so much of repetition, so much. Last time 55 marks were from the IMP list, which we have issued. It was not rocket science. We have a database of 5,000, 6,000 questions. So we put a pivot table and we count the repetitions. Question repeated more than 6-7 times becomes important. Then all SM questions important. All the questions asked in past 4 MTPs and RTPs important. Minus question asked in past 2 attempts. Yeah, that's how important list is made because they have low probability. We are taking calculated risk because we live in the world of constraints. Had there been no constraint, I want to learn each and every concept 10 times. But there is a constraint of time. Okay. So, and out of 88 marks, including extra, 73 marks was from question bank. It means that was a repetition. Institute is always going to repeat. Why are you crying so much? Why are you tense so much? They are going to repeat. They have asked the question, what else you want? It doesn't happen in a lot of exams that questions are repeated. But then I understand. Questions which are asked, they itself is our ocean. Our question bank is having 750 questions. That itself is ocean. But I am saying you know what they are going to do. Play smartly. There will be loads of repetition. If time permits, focus more on question banks. focus more on question. After the concepts, focus more on question banks. Whenever you get time, keep increasing question from each chapter. Okay, anyways, come back. Now, let's see. See this page number 7, last column. Reporting. Reporting of non-compliance. I am focusing on things which are not covered in important questions. And so if there is a non-compliance, what we should do with respect to reporting? See, again it's in sequence. I have writing reporting to authorities as first point because they are big, important. Then next is reporting to shareholders. After authorities, they are important. Reporting to shareholders. And then after that, reporting to PCWG. So, if there is a non-compliance, we have to think about three things: reporting to authorities, reporting to shareholders, reporting to TCWG. When it comes to reporting to authorities, no need to inform any authority on your own unless specifically required by law. So, as an auditor, as a chartered accountant, we are supposed to be mum. Don't talk about non-compliance to anyone. I don't know whether it's ethical or unethical. It should have been other way around to be ethical. It should have been other way around, but exactly opposite thing is written here. Standard says that don't inform any authority about non-compliance done by your clients unless specifically required by the law. And the whole debate in the international world is about this. And that's why a new concept was introduced, NOCLAR. What to do when a chartered accountant come across non-compliance of laws and regulation, and that is professional ethics. Okay, this time NOCLAR is applicable, and they have just given overview. They have not gone in depth. They simply explain what is NOCLAR, what do you mean by non-compliance, to whom it is applicable, and conceptually what it is all about. In fact, they don't go in depth what we are supposed to do. They are just giving overview. It's very simple thing. It's applicable. Now, so don't go inform anyone unless required by law. What about reporting to shareholders? You report to shareholders in the form of audit report. So, what should be done in audit report? Number one, if you are not getting sufficient appropriate evidence, management is not giving you information. You are asking a lot of questions about compliance of law, about circumstances, but they are not giving you any answers. They are not giving you sufficient appropriate evidence. We know what to do: qualify, and if required, disclaimer. That's common sense. In fact, what to write in audit report is the biggest thing which is repeated again and again. That's the feature of the subject. Then, second thing, what if they have not done proper accounting? They should have made provision for penalties. They have not done that. Their licenses are going to be cancelled. They should have said going concern is inappropriate. They should have brought everything on realizable value, assets on realizable value and liabilities on payable value. They are not doing it. They are not doing proper accounting. Qualify, adverse. Simple. That's common sense. No sufficient information. Qualify, disclaimer. Misstatements, no proper accounting. Qualify, adverse. What if non-compliance is because of circumstances? Even management is not responsible. There was a war, there were floods, they were attacked, things were down, things got corrupted. What to do? If there is a non-compliance because of circumstances, it should be disclosed in notes to accounts. The complete situation should be disclosed. People should know that non-compliance is due to circumstances, and this is the nature, this is the impact. If there is an adequate disclosure, give unmodified opinion, because management is not responsible for this. At the max, you should give EMP, emphasis of matter, paragraph, and explain the situation. If they are not giving adequate disclosure, then they are at fault. They should qualify or give disclaimer. Common sense. No sufficient information. Qualify, disclaimer. No proper impact on accounting, financial statements, qualify adverse. And if it is circumstances, they should be adequate. Disclosure, no proper disclosure, qualify disclaimer. Are you getting this point? So first was reporting to authorities. Then smaller than them, reporting to shareholders, audit report. Three situations will happen. Then reporting to TCWG. You know who are TCWG? Those charged with governance, correct. So who are they? Management. Listen, people who are responsible for 9 to 9 operations, they are called management. You manage purchase, production, sales, accounting, financial statement, everything. You manage that. That is management. Throughout the audit, we keep on talking with management. We assume that management is aware about everything we are doing because we are continuously talking to them. But those charged with governance, they come on monthly or quarterly basis. They simply come for supervision. After supervision, they take strategic decisions. They make policies and they go back. They are called TCWG. It can happen that different set of people, CEO, CFO, CS, and some senior managers, management, all non-executive directors, they are TCWG. It may happen that both are different group of people. It may happen some people are common. Suppose MD is common, or it may happen both are same. In partnership firm, 4 partners are TCWG, 4 partners are management. So what they're saying, if TCWG and management are same, oh, they are already aware about everything. They are already aware about everything, no need to make any communication. They may ask in MCQ. No need to communicate, they are aware. They will get irritated, you are communicating same thing. Correct? This I love you is because arranged marriage, this I love you is because we had love also before that. It's not like that. Don't make two communication, not required. Then all non-compliances. Inform TCWG about all non-compliances unless inconsequential. Unless it's very small, irrelevant. Our trucks have broken some traffic rules and so on, there are some penalties. Don't inform all this nonsense, they will throw you out. Then, but if there is a material impact and it is intentional, inform immediately. It's very simple. First of all, I am discussing a situation where nothing needs to be informed if both are same. Then if both are not same, inform about all the non-compliances except if they are inconsequential. In that we are increasing the level. If it is material plus knowingly it is done intentionally, then immediately. And finally, if TCWG management are involved, inform higher authority if any. Some ROC is there or ministry is there, go and inform them. No higher authority, take legal advice. You may give public notices that I am disassociating with this audit because of some fraudulent activities. I will not disclose fraudulent activities because it will be breach of confidentiality. But then I will give a public notice and make everyone aware, or I will go and speak at AGM. So that was reporting to authority, reporting to shareholder, reporting to TCWG. In TCWG it was when no communication required, when communication is required. Well, to increase the urgency, when bar, make it immediate. Correct? It listens when it is not required. Now, SA 260 guys, come on that. Okay, now let's see SA 260 quickly. That is communication with TCWG. Communication with TCWG. Again, we have brought this in flow. There are some matters which you need to communicate immediately after appointment. Then there are some matters you need to communicate before starting audit. Then there are some matters which you communicate during the audit. There are some matters need to be communicated before you finalize the report. And there are some matters you should communicate maybe after audit is done. So moment you divide this in flow, it becomes easy to remember. Okay, let's see. Some matter immediately after appointment. You should go and inform your auditor's responsibility. Dear sir, our responsibility is simply to give opinion on financial statements. Okay, that's the only responsibility. You are still responsible to prepare and present financial statements. Follow. Then, before starting the work, give overview. This is our overall plan. We are going for monthly checking or quarterly or 6 monthly or annual. Explain overall plan, not detailed plan, overall overview. Otherwise, it will reduce surprise element. During the audit, go and communicate significant findings. Significant findings include what? Number one, whether when you went for audit, you experienced any significant difficulty. Again, the problems are same: giving less time, delaying, more efforts. So that is significant difficulty. Then while performing, did you come across any significant matter? Then at the end, what kind of WR you need? And you should also communicate about quality of financials, quality of accounting and financial statement. Quality of accounting include three things: AED, quality of accounting policies, quality of estimates, and how good are disclosures. So go and tell people what is, if you are very careful, policies are after a lot of discussion. That's called high quality accounting policy, well thought estimates, and giving very good disclosures. AED. Okay. Now, before signing audit report, go and explain anything which affects audit report. It can be key audit matter, it can be EMP, OMP, it can be modifications. Then other matters which are relevant for oversight. That means anything which PCWG should know is important for financial statements. For example, your data security is very weak. You can go and inform about that. And last thing is only for listed company. Always, many a times, requirements increase. Listed companies requirement will increase. Again, the whole communication is about independence. Whether team is complying with relevant ethical independence requirement, all the relationship, personal, financial, business, which management should be aware, TCW should be aware about, how some relatives are working, how some shareholders are working, what kind of fees you are earning from audit and non-audit. Moment you start earning more in non-audit assignment, it affects independence. And lastly, what are the safeguards? Safeguards means something which protects independence. You have restricted shareholding below 1%, safeguard. In case of relatives or any connection people, you are having double supervision, safeguard. Double review, safeguard. Compulsory EQCR, safeguard. All these are safeguards which reduces risk, or sometimes you have asked to close the demat account, that is eliminating risk. Let's freeze, guys. Communication immediately after appointment for responsibilities. Before doing audit, overview of the plan. During the audit, initially, whether there were significant findings, whether initially there were difficulties, if not, what were the significant matters, correct? What are significant matters? Then, what was the quality of financial statements? With presentation at the last, what kind of WR you need and quality. After audit is being done, anything which affects audit report, any other matter, and lastly, only for listed entities, whether team was independent, ethical, what kind of relationships and fees is there, and what kind of safeguards. So communicate everything about independence with TCWG only in listed entity. You may get a MCQ on this. And see, there's a common point in EQCR also. In listed entity, they were saying that go and check independence. Here also they are saying go and communicate with TCWG independence. SA 299 lot of things are covered when we see the Q&A, so we'll not cover anything here. I said 300 comes in chapter number 2. So guys, congratulations, we have covered a lot of tricky concepts from 200 series. 200 series, and now next is 320. Essay 320, and the first thing is I would like to discuss is okay, materiality at financial statement level and TBD level. For example, that we have turnover of 100 crores. Turnover of 100 crores. Turnover of 100 crores, and so materiality is suppose 5%. So very common way of computing materiality, 5% of, sorry, not turnover, 5% of profits. So we have profits of 100 crore. 100 crore into 5, so 5 crore becomes materiality level. Now this is called materiality at financial statement level. So any misstatement individually or in aggregate with other misstatement process 5 crores, it will become material misstatement. So you all know that what we do in audit is we keep accumulating all the misstatements. As per SA 450, moment you get misstatement, you should accumulate them at one place. That's what happens in audit teams also. You go and inform the manager about the misstatement, and he has an Excel sheet. He is accumulating everything at one place. Now, so moment it crosses materiality level, it becomes material misstatement. What about transaction balances and disclosure? If 5 crore is for financial statement, what about area level? What is the materiality at transaction level, balance level, disclosure? How will you compute TBD level materiality? How will you compute it? How will you compute it? Any idea? Should we do it proportionately? Yes, no. Yes, no. Answer is no. Answer is materiality decided at financial statement level, same is the materiality for TBD level. If a misstatement is material for 5 crores, and if 5 crores material misstatement at fixed asset level, it will be called as material. So point is same, generally same materiality level is applicable. Generally same materiality level is applicable at TBD level also. If required, you can reduce materiality level. If some area is very sensitive, for example, people are paying a lot of attention to particular aspect. What do you mean by aspect? Part. Simple meaning is part. People are paying a lot of attention to geo. Reduce the materiality to 3 crores. Because people are paying a lot of attention, and materiality is all about what users are focusing on. If they are focusing more on something, reduce its materiality, it becomes sensitive. Is this point clear, guys? Listen, that's what they are saying. Listen, first go and compute materiality at financial statement level, and then same materiality generally. This generally word is very important. Everything generally same materiality is applicable, but in some circumstances you can go for lower, never higher. You can go for lower materiality because that area is extra sensitive, extra important. We are giving examples. Factors which indicate you may need lower level of materiality, 3 types, very easy. See, always you will find that I will write first point of law. If law, regulation or FRF need separate disclosure, for example, they need separate disclosure for managerial remuneration, for related party. Everything which needs separate disclosure, more importance is given to it, it will become very sensitive. So you may have 5 crore at financial statement level, for here you can have 3 crores. as materiality. Next, key disclosures of industry. In every industry, some things are very important. In every industry, some things are very important. For example, in pharma, R&D expenses, very important. In FMCG, advertisement expenditure, very important. In automobile, product recall costs, very important. So you can keep industry specific in some areas very low. Or third, any aspect of business, any business which you are going to acquire or you have just started, very sensitive. Any business you are going to close, very sensitive. Any business in which government is interested, lot of action is being taken, very important, very sensitive. Let's freeze, guys. So you will explain what is at financial statement level, is at PBD level. Sometime it can be lower. And then you explain that yes, in some areas it will be lower, and you give examples. First is when law FRF required separate disclosure. Second is anything which is important for the industry. And third, you explain sometimes people are interested in aspects of the business. So that becomes, you can have a lower level materiality. What management, TCWG management, views of TCWG and management are important. Why? They understand users well. Go and talk to TCWG and management and speak to them. They know what users want, what government wants, what law wants, what user wants. Not every TCWG and management is a fraud. And even if they are fraud, don't worry. They are not the only people we rely on. We always corroborate. Corroborate means to confirm one evidence from another. That is called corroborate. So every time students say, sir, how come management will tell us all the truth? They are not the only people we rely on. We ask the same question to 2-3 different people. So don't worry about that. Now, very interesting. Now it is full, that is performance materiality. It's always suspense. Many times it says, what is performance materiality? So, revision of materiality and performance materiality are same. No, it's not same. You said at time of performance we revise it. Then it is a lower level. So generally I get the answer. Level which is lower than actual materiality is performance materiality. But when you read the text of performance materiality, you are lost. What the hell are they writing? And why are they writing? Yes. Yes. We won't be, or we will be. Okay. Yes. Anything else? Okay. Fine. Let's see the back. It's very simple. Out of experience, we always understand that every year we find that some misstatement of the previous year were undetected. Audit is not foolproof. It is having its own limitation, limited time, limited powers, excessive dependence on management. There are inherent limitations of audit. There are 3 limitations. What? Nature of financial reporting. Financial reporting is full of judgment. So we are excessively dealing with judgments all the time. Next, practical legal limitations. Less time limitations. We don't have adequate powers and we are excessively dependent on management and we cannot change it. Third, time and cost. So because of this, they explain first thing that audit is not foolproof, there are inherent limitation. And because of this, we know that every year we come across undetected misstatement. So what we do? We make an estimate that every year I come across undetected estimate of 1 crore. So do one thing. Allocate some part of materiality level for undetected misstatement. Allocate it. And so people from Big Four, they call it maybe sometimes stylishly haircut. Some of you must be. I did my articles PwC. It's fine. Haircut. So cut some part and allocate for undetected misstatement. And that's a common sense. That's what you do in budgeting also. You always know that there will be some unexpected expenses and outflows. So you keep some reserve. On the same lines, we allocate 1 crore for undetected misstatement, and the remaining portion is called performance materiality. So you should explain, after allocating some part of materiality for undetected misstatement, what remains is performance materiality. And then we instruct our audit team that, listen guys, while doing risk assessment initially, while before that planning risk assessment, TOC, test of control, substantive procedures, analyzing material misstatement and reporting, you will use performance materiality, and you will try to ensure that uncorrected misstatements are within performance materiality. You make all the efforts to keep uncorrected misstatements within the limit. Used at many places. What will happen because of this? Because of this, undetected misstatement is within the estimated 1 crore. Uncorrected misstatement is within 4 crores. So total misstatement, undetected plus uncorrected, is within total materiality of 5 crores. You got this point? So it's very simple. So this flow is important. Okay, first to explain is not foolproof. Then you explain there is always undetected misstatement. Then you explain some part need to be allocated, and then you explain remaining thing is performance materiality. It is used everywhere. Then you explain because of this uncorrected misstatement will remain within performance materiality, and with the help of this total misstatement will remain within total materiality. Correct? Okay. So now we know what is perform. Now very important thing. See, there is an example given. 10 crores of total materiality, 30% is a haircut. That depends on experience. How much undetected misstatements are expected? 30% is deducted, 70% is performance materiality, 7 crores. Now the interesting thing is performance materiality is computed for both financial statement level as well as TBD level. So you are having, suppose you are having financial statement level materiality 10 crores, you will have performance materiality, financial statement level performance materiality 7 crores. Suppose TBD level materiality was 6 crore, you will have 4.2 crore as TBD level performance materiality. Are you getting this point? Performance materiality will be computed for both, for financial statement level as well as TBD level. Okay. Now guys, let's come to SA 330. 315 is again covered later, chapter number 3. See, as I said, every moment we should learn concepts, we should revise them. That should be the focus. Next is 330. 330 is for 330 is for response to risk. In 315, we identify and assess risks. Risk is assessed at 2 levels, that is any risk, circumstances in which any item of financial statement will get affected. We don't know exactly which. That is called as financial statement level risk. For example, integrity of management is not good. Anywhere they will do fraud. This accounts head is useless. He doesn't understand India's. He doesn't understand India's. Anywhere things will go wrong. He will make wrong policies. This software is bad. Any entry gets deleted, any double entry happens, the software is useless. All these issues are anywhere things can go wrong. I don't know exactly where. That is a financial statement level material, financial statement level risk. Yes, no. We don't know anywhere. Like 15th of August and 26th Jan, they are very important days for India. And our enemies would want to attack on those days and show us down that we are not capable of defending our country. So 15-20 days, a month before that, and during that day, across India, everyone will be on high alert. We don't know where things will go wrong. So that is a financial statement level risk. We don't know exactly where things will go wrong. If there is a financial statement level risk, what is the response? Overall response. What do you mean by overall response? Make team strong. More people in the team. Increase number of seniors. More seniors in the team. More experts in the team. Call everyone and tell them. Increase level of professional skepticism and alertness. Tell them. Include surprise elements in checking. Don't inform anyone what you are going to do. All this is called overall response. Why we are dividing risk at two levels? Because there is different way of tackling it. If there is a financial statement level risk, what we give? Overall response. Next is assertion level risk. What a beautiful word. There is a lot of all suspense with respect to assertion all the time. What do you mean by assertion? Yes? Prone to risk. So assertion means risk, is it? What do you mean by assertion? Yes. So if you come to page number 30, first column. Now, guys, always try to understand the simplest meaning and then you can build on that. Simplest meaning. Assert means to say. Assert means to say something. Who prepares financial statement? Management. So what is assertion? Whatever information management wants to give directly or indirectly through financial statements, that is called assertions, that is called management assertions. It can be direct, it can be indirect. For example, they have written we have land and building and they are not talking about charges. That means there are no charges. That is indirect. It can be positive, it can be negative. They say we have this, that is positive. They say that we don't have this, that is negative. This is general meaning. It's very simple. All the information given by management through financial statement, directly or indirectly, positively or negatively, that is called as assertions. And technically they called as representations. That is again, that means simply information given. Now, this is general meaning. Now, what is the specific meaning? In financial statement, you will have three type of data. T, B, D. Transaction, balances and disclosures. Transaction, balances and disclosures. And you will have specific information coming from them. So, let's talk about transaction. If we talk about transaction, see there is a transaction example is given. Sale is of 1000 crore. 1000 crore. So if in PL it is written 1000 crore, directly, indirectly they are saying this is a real sale. This is real, this has happened. So they will say occurrence is the assertion. Then they will say, that means directly, indirectly they are saying this sale is complete, nothing is left out. Nothing is left out. That is completeness. And the amount given is reliable, it is proper, that is accurate. These are three common assertions. This is real, occurrence, nothing is left out, completeness, amount is correct, accuracy. Then they are too special with respect to transaction. They want to say that this is properly classified, capital versus revenue. In revenue also, we are showing it in proper heading, in proper business, in proper department, classification and cutoff. Cutoff means this year transaction not going to next year transaction not coming to current year. That is called as cutoff. These are assertion. This is specific meaning of assertion for transactions. Quickly, what? Occurrence, completeness, accuracy, classification, cutoff. On the same lines, balance. Suppose we have land and building 100 crore. So directly, indirectly, they are saying, it is real. So instead of occurrence, they use existence, because balances, that is assets and liability, they remain as on balance sheet date. Existence. Nothing is left out. No flat, no plot is left out. Completeness. Amount is appropriate. Valuation. Then last special is rights and obligation. Written in our balance sheet, that means we are the owners. For assets, it is right. For liability, it is obligation. And on the same lines, we have for disclosures, that means notes to accounts. Notes to accounts. Suppose it is said lease rent 20 crore. Lease rent 20 crore. If lease rent is 20 crore, that means we are saying this information is real and belongs to company. See, first one, they will use occurrence right. It's a combined occurrence rights and obligation. That means this information is real, realistic, and it belongs to the entity. It is a combined thing they have written. Occurrence rights and obligation. Nothing is left out. Completeness. Amount is proper. Valuation and accuracy. Because it notes to accounts can be for balances also. It can be for transaction also. And lastly, what is the basic purpose of notes to accounts? Proper understanding. Is proper classification, proper understanding. Let's freeze, guys. Three are common everywhere. First assertion is for that this is real. Second is for completeness. Third is the amount. And then there are special. In transaction, what is special? Classification and cutoff. In balances, what is special? Rights and obligation. In notes to account, what is special? Classification and understanding. Now, when we know exactly that there is a problem with ownership of the property, so there is a risk at rights and obligation, it is called as assertion level. We know exactly that inventory may become obsolete. There is a risk at valuation level. We know exactly things will go wrong. That is assertion level. When you know exactly things will go wrong, why are you wondering here and there? Just go and target it directly. Call management. There is a risk in valuation of inventory. Inventory may go become obsolete. Sit here. Tell me what system you have to ensure proper valuation. Directly go and perform further audit procedures. When we talk about further audit procedure in response to risk, it means two things. Number one, test of controls. And second, substantive procedures. Directly go and perform test of controls for valuation of inventory. Directly go and perform substantive procedure for valuation of inventory. What is difference between test of control and substantive audit procedure? Because there is a lot of similarity between both. In both we can use inquiry. In both we can use inspection. In both we can use observation. In both we see vouchers. What is the difference? There is a lot of similarity between both. In both we go for inquiry, inspections, reperformances, recomputations. In both we see vouchers and documents. What is difference? Future prevention. Okay. Hello. 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 Okay. Listen, guys, very simple. Test of control is a intermediary step. Intention is to check whether controls are working properly whether systems are working properly, intention is different. Whether senior manager is putting signature, whether senior manager is putting stamps, whether 5 documents are prepared when purchase happens, intention is to check whether systems are there to prevent misstatements, or even after if they happen, detect and correct misstatements. When we perform substantive procedure, intention is to check whether that financial item in balance sheet and P&L is that proper, because ultimately we have to comment on financial statements. So we need to check all materials, income, expense, asset, whether that item is reliable. I have gone and checked how they value inventory. What is their system? Are they using Excel or they are using software? Who is involved? Is he knowledgeable? Fine. But whether actual valuation is appropriate or not, whether inventory of 5,000 crore is appropriate or not, that we need to go and check. That is substantive procedure. Substantiate means to confirm whether financial item is appropriate or not. That is substantive procedure. There are 2 ways of substantiating. One is simply sit in air conditioned chamber, collect lot of data and compare with previous year, compare with others. That is analytical procedures. Go in the market, go in the practical life situation, go talk to people, see document. That is called test of details. So intention is different. Anyways, let's come back to our topic. If there is a risk at assertion level, so we have discussed this, that the risk at assertion level, we go risk at financial statement level, we go for overall response, and there is a risk at assertion level, we go for further audit procedures, that is TOC, and substantive procedures. Let's see. Now, let's see one thing which student will find it little difficult maybe, and that is test of controls. So if question comes, first, what do you mean by test of controls? You take 2 things. Number 1, whether controls are properly designed. What do you mean by designed? Made. Are they made properly? Are they designed properly? Are they able to prevent misstatement? And if not prevent, are they able to detect and correct material misstatement? If they are designed properly, next, are they operating effectively? When we take information about employees, there is no column to take PAN details. How will you deduct TDS then? How will you deduct TDS and pay if there is no PAN card details? That means there is a problem with design. There is a form, but people don't fill it up properly. There is a operation problem. So go and check whether systems are made and are they operating effectively. That is definition. Now this is very crucial. Which controls to be tested? Are we supposed to go and check all controls? We will become internal auditor then. This is not for internal audit. This is for statutory auditors, financial statements auditor. No, we don't go and check all controls. Company may be having 1,000 controls. We go and check only 100. We go and check only relevant controls. We go and check only relevant controls. What do you mean by relevant controls? You must be aware, in 315 we go and assess, we go and identify and assess risk. Yes, no. In that you must be aware. If you are aware, it's a very simple discussion. Let's cover that discussion here itself now. We go to any business and initially we assume there are no systems, controls, and we think what can go wrong. We assume there is no system, no internal controls, and assume what can go wrong because of nature of business, nature of people, nature of financial item. When we assume no controls, then only we find out the truth. For example, when you are in your study room and no one is there, what you do exactly, that is your real nature. that is your real nature, when no one is watching you, what you do, correct? And if that is not good enough, you should ensure someone is there with you, who is studying all the time. That a small step will increase your efficiency like anything. Anyways, so you assume there are no controls and you think where things can go wrong, and you get inherent risk. You get inherent risk. So for example, in retail shops, if you assume there are no controls, a lot of misstatements will happen in stock and cash. So there is an inherent risk in stock and cash. Then you call management, come beta sit. There is an inherent risk in these items. You tell me, are you having any internal control system to compensate the risk? They will give the list. We'll go through the list and we'll take a prima facie view. Are these controls really capable of compensating the risk? And we were very happy to see their cash controls. There are two cashiers. So shift wise, there are two cashiers. When they come, they are supposed to keep all the cash they have in a locker. All the cash, their mobile phone itself also, in the locker, and someone checks whether they are having any cash. Then they go and sit on the counter with CCTV. Each and every receipt should be accounted for. There is a notice on the counter. If asked for bill is mandatory for each and every transaction. Great. Once his shift gets over, he will tally cash with the system, make an envelope, sign it, staple it, and then the next cashier comes and he repeats the same, and two envelopes are deposited next day in the bank. Cashier 1 deposit, cashier 2 deposit. What a wonderful system. It will ensure that there is no misstatement in cash. We take a prima facie overview. All the controls which are capable of compensating risk, they are called as relevant controls. So what they say, at the time of assessing risk. Okay, one more thing, final. When you combine inherent risk and control risk, when we combine these two risks, we will understand whether financial statement will reach, whether misstatement will reach financial statement. Whether misstatement will reach financial statement. See, what is one thing in between inherent risk and financial statement is controls. You take inherent risk, you combine control risk, we will understand whether misstatement will reach financial statement. Chances that financial statements are misstated, that is called RMM, risk of material misstatement. Now after this background, we will be able to understand what are relevant controls. At the time of assessing risk of material misstatement, if auditor has marked any control capable of compensating inherent risk, those controls are called as relevant controls, and we test them. Out of 1000 controls, there will be hardly 40-50 controls, even that is high, 40-50 controls which are called relevant, and they will be tested. So relevant controls means at the time of assessing risk of material misstatement, which auditor think prima facie that they will be able to compensate the risk. Next, we live in world of automation today. Some areas are highly automated. For example, share market, capital markets, highly automated. A system making the trades all the time. Punch it, everything else will be done by system. Your IRCTC bookings, system will do it. E-commerce, system will do it. Banks, everything system will do it. Okay. So in highly automated areas, we can never ever ignore TOC, test of control. In highly automated area, test of control is mandatory. You cannot ignore them because control is doing everything. It is a significant part. If controls are going good, then only everything is going good. So they are technically called areas where substantive procedure alone cannot provide sufficient appropriate evidence. Listen guys, in highly automated areas, substantive procedure alone can never give you sufficient appropriate evidence. In other areas, you can go and fire TOC. It's okay. In small business, no need to perform TOC. Directly go and perform substantive procedures. See, TOC is good if you feel prima facie controls are good. Why we do TOC? It is an intermediary step. If TOC controls are good, it reduces substantive procedure. If controls are bad, it increases substantive procedures. Listen, whole standards of auditing are designed with only one objective. If you understand well, you understand everything. To make auditor efficient and effective. How in less time he can achieve more. That's the ultimate objective of standards on auditing. With that objective, we perform TOC. But that means we can go and ignore TOC in a lot of areas, but you cannot ignore which are highly automated, and there they call substantive procedure alone cannot provide sufficient appropriate evidence. Let's freeze, guys. We are studying 330. At financial statement level risk, we have overall response, make team strong. At assertion level risk, we have further audit procedures. We perform first test of control, then we go for substantive procedure. In test of control, what is first? Definition. Focus on two things. Design should be appropriate, and next, it should be operating effectively. Next point is which controls? Only relevant controls which were useful at the time of assessing RMM. And secondly, highly automated areas where substantive procedure alone cannot give sufficient appropriate evidence. Now you keep on listening this thing again, NTE, 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 NTE. NT stand for nature, timing and extent. And it's wonderful to understand this with respect to TOC. Nature of testing means two things. How to check and what to check. How to check and what to check. So first they explain how to check. How to ensure controls are there and they are operating effectively. First thing is questioning and cross questioning. Inquiry. Ask same question to 3 different people. If they are giving same answer, that means controls are real. They are operating effectively. So most easiest way is inquiry. But don't be a fool. Don't just rely on inquiry. Don't just rely on inquiry. Okay. Apart from inquiry, you are supposed to do some more things. So what you can go for? Inquiry plus inspection. When you see documents for assets, that's called inspection. When you go and again do the same thing, you generate the report, you generate the ledger, that is called reperformance, recomputations, reperformances. And there's one more thing, you go and see how people are working, that is called observation. Listen, documents are the truth, very good thing. Reperformance is the good truth, very good thing. Inquiry plus inspection or reperformance is more effective. Because documents are the truth, reperformance is the truth. Inquiry plus observation is why? Because observation is momentary. That moment people were doing everything. We don't know what before that and what after that. And the fact that people are being observed changes their behavior. So here I am observing you. Correct? It changes your behavior. And when no one is observing, it changes your behavior. Correct? So observation may not again bring the truth, how sincere you are in studies. Yes, everyone is sitting sincerely in the class. We don't know the truth. Correct? Okay, I'm just, Now, so nature of testing, how to check. So this thing is how. And this now thing is what. Okay, now when it comes to what, we check 4 things. How control is applied, by whom and by what means. By whom and by what means. Okay, there's a senior manager who puts signature and stamp. Okay. By senior manager, a manual control by putting signature and stamp. Then there is a software. There is a software which checks, which compare prices with the agreement price and past 3 months average. Okay, by software, it is automated control. And how it does it? By comparison and by comparison and putting transactions on hold whenever there is a big difference. Okay. Software is doing it. It is comparing and putting on hold the transaction where difference is huge. By whom and by what means? Then is it applied consistently to each and every transaction? It doesn't matter who is entering it, whether employee or assistant manager or senior manager or CFO. Everyone has to go through the same process. Whether there is a consistency in applying controls to all types of transactions. Is it applied throughout the year, all 12 months? What we check, by whom and by what means? Is it applied consistently to all the type of transaction? Is it operating effectively throughout the year? And last, we also check indirect controls. So what do you mean indirect controls? Systems. Now, sometimes our controls are dependent on some other controls, which are for the whole organization, not for any department or not for any process. They are called as indirect control. For example, if our controls are dependent on lot of individuals, then we need people with good character, good skills. HR department will become important. HR is an indirect control. If you are dependent on softwares a lot, IT department is indirect control. If you are more dependent on machines, then maintenance department of the machine will become indirect control. So nature means two things: what, how we check it, and what we check. Then timing is very simple. Timing, there are two things that can happen. That depends on nature of control. Listen guys, either you will check something at the end of the year or you will check something throughout the year. That's called timing. If management perform physical counting of inventory once in a year at the end of the year, we will go and perform test of control at end of the year. Depends on nature of control. If something is performed only at year end, physical verification, year end, depreciation, year end, provision for doubtful debt, year end, inventory valuation, year end, provision for tax, year end. So you are going to go and check it at year end. And there are some control which are applied on daily basis. Sales, daily basis, purchase, daily basis. So you are going to check it for across the year. You will check few transactions in 1 month, next. You will check transaction all the 12 months. So there is only two ways. At a particular time or throughout the period. Stock count at a particular time, sales throughout the year. And next, very interesting, when questions are asked, extent of checking. Extent means okay. So automatically Hindi will come up. Now what do you mean by extent? Extent means depth. How much? It's very simple. It all depends on audit strategy. If in audit strategy you have decided that controls are much more important than substantive, if it's a highly automated thing, controls are much more important, what will happen automatically? You will focus more on test of controls and you will need more and more evidence about controls. Extent of checking depends on audit strategy. If you want to make a lot of reliance on control, you are going to increase extent of checking. Apart from that, it depends on following factors. See right and left. So what should be the extent of checking? See right and left and then decide. R stand for relevance and reliability of audit evidence. Listen, if you want lot of relevant and reliable evidence in any area, increase extent. If you want a lot of relevant and reliable evidence in particular area, that is your target, you should increase extent of checking. L stand for length of time period. For example, manager was working throughout the year, but software was installed from 1st of Jan. Software is for Jan, Feb, March. Which control is working for longer period of time? Manager. You are going to check it more. Control which is applied for longer length of time, it will be checked more. Length of time period. Expected rate of deviation. What is expected rates? Listen, it's very simple. Before we do sampling, we simply think, what are the chances that controls will fail? Controls fail, that is called as deviation. When controls fail, that means standard things are not followed, that is called as deviation. And when in substantive procedure we get something wrong, that is called misstatement. That is called as misstatement. Are you getting this point? Very simple. A mistake of TOC is called deviation, and mistake of TOD is called substantive is called misstatement. Now listen. What is expected? Just before sampling, we, as per the past experiences and present circumstances, we try to estimate at what rate controls will fail. We'll get 5% as rate of deviation, or 10% of rate of deviation, or 15% or 20%. It's a very important thing. It is very important thing because depending on expectations, we take further decisions. For example, you are aware about tolerable rate of deviation. What is tolerable? Maximum allowed rate of deviation. What's going to happen is expected. What is maximum allowed is tolerable. It's a very important. Let me give you example. Suppose you expect that rate of deviation is 10%, and tolerable rate of deviation is 20%. Okay. My expectation is 10% the rate of deviation, maximum allowed is 20%. Let me go and check the controls, because I know that controls will be effective. My initial expectation is control will be effective. But if I get expected rate of deviation 40% and tolerable is 20%. Before performing test of control, I know controls are going to fail miserably. Dump TOC. I will not perform TOC. I will directly jump on substantive procedure. Same thing you do na. See, I give important list. First you ask, sir, what was last time? What happened, sir? If things are going to come, we will rely on it. Else directly go and read complete question bank, isn't it? See, try to understand. It's very all these are bottlenecks in the audit. Once you understand these small concepts, you'll understand overall thing. So now you know the concept of expected rate of deviation, and on the same lines we have expected level of misstatement. Now what they are saying, if expected rate of deviation is high, that means there are chances that control may fail. Be extra careful. Check them more before relying on them. So just before checking, you compute expected levels. If you get high expected levels, test them more. Then F is for frequency. These controls are performed throughout the year 1000 times. Check them more. If something is performed only one or twice, check them less. Test of other control. Listen, can we have multiple controls for one assertion? Yes. We can have a senior manager for price. We can have a software for the price. We can appoint an agency, third party for price. So for price, we have 3 controls. If you find that all other controls have failed, now we are dependent only on one control. We should not miss the opportunity. We should test it more. Let's freeze, guys. Right and left. R stand for we want relevant and reliable evidence. Increase the extent. L for length of time period. It is operating for longer length of time period. Increase extent. E stand for expected rate of deviation. It may fail. Increase extent. For very high frequency it is applied for. Increase extent. T for test of other controls. Other controls have failed. Increase extent. There's one more trick. I spoke all the factors in one direction. Always essays are full of factors. You want to take decision? Factors. It should not be standards on auditing. It should be factors on auditing. So, but then key to proper understanding and retention is I spoke about all the factors in such a manner that it will increase extent of checking. Then it leads to less confusion. So always when it comes to factors, talk it in one direction. So guys, this was test of controls and NTE, nature, timing and extent. Quickly. Okay. As I said, a lot of things are covered in the Q&A session also. So you will study from there. Now, so congratulations, we are through with 200 series. We are through with 300 series. See, feel should come. And the objective is every moment we should discuss things. And okay. And I cannot increase speed beyond a particular limit because we have to survive till evening. Otherwise, people won't survive only. Now, see, if you want to survive for 9 hours, we have to ensure a particular, you need to take something in between, little bit of time pass, breaks, and so on. All of them are required. Okay, guys, let's go ahead. And we have 400 series. There are two standards in it. It is 402 and 450. Okay. Now, 402 is all about outsourcing, BPOs and KPOs. So you went to the client and you see that some of the functions they have outsourced to a third party. That means they are taking services from third party. So we have developed one example that will be critical. So you see that your client is taking salary processing services from the third party. So your client will be called as user entity. Your client will be called as user entity. And the other party which is giving is called as a service organization, salary processing. Now, you are a user entity auditor and you will have to apply SA 402. And the other auditor will be called as service organization, SO auditor, and he will have to apply SAE 3402, standards on assurance engagement. Listen, in 402, we expect some reports from the service organization auditor, and those reports are not on financial statements. They are not on financial statements. That's why that person is not supposed to follow SAE. He is not supposed to follow SA. He is supposed to follow SAE 3402. It's not a only coincidence that the name is 3402 because that standard is made. It's made to help make the reports required in 402. That's why it is written 3402. So that auditor needs to make some reports other than financial statements, and those reports will be made as per 3402. So let's freeze. It was very simple. User entity, user auditor follow 402. So SO auditor follow SA 3402. Let's go ahead and let's further understand the case. So what used to happen? We used to have a salary processing department. 200 square feet of place, 5 employees, 1 manager. So lot of rent cost, lot of salary cost, and we used to have a software of 20 lakh rupees subscription per year, and they used to process it. Problem was it was very costly. Second problem was lot of information used to get leaked directly or indirectly. So we did one thing. Simply this department should be closed, shut, transfer them to other departments, and now salary processing will be done by the third party service organization. They are giving us salary processing services. Now what will happen? Now there is only one clerk. He prepares all documents in triplicate. Appointment, promotions, transfers, terminations, retirements in triplicate. He will make those documents, put his signature. Then it will go to HR head. They will review it and put their stamps. Then it goes to CFO. CFO office will review it and put their stamps. So now this is a segregation of duty. Maker is clerk, checker is HR, checker is CFO. One copy is given to employee. One copy is kept in a master file with the company itself, and one original copy with other data is sent to service organization. Now these 4 steps are extremely crucial. If these 4 steps happen properly, who will get accurate information to process? Service organization. So they are technically called as 1 to 4 is technically called as complementary user entity control. These are the controls at user entity which are supporting, which is complementing whom? Service organization. So that is called as 1 to 4 is called as CUEC, that is complementary user entity control. User entity controls which are going to help service organization. Now, so guys, this is internal controls. You can also call it quality control. Controls and quality controls are generally same for understanding. So these are internal control systems at user entity which help service organization, complementary user entity control. Now what happens at service organization? Naresh, he receives the documents, opens it, makes a list of it and calls the clerk. Clerk, these were the only documents? Yes. So he confirms, communicates, that's called interaction. If there is more and more interaction with service organization, that means there is more and more dependency on service organization. Then Mahesh types it and converts it into electronic form. Okay. Then Vignesh uploads it in the software and starts processing. Ganesh evaluates the final output and sends email. Okay, now what is this 5 to 9? These are internal controls at service organization. This is how these are internal control system at service organization. Finally, so initially Naresh is involved, then Mahesh, then Jignesh, then Ganesh. One receives, one types, one processes, one evaluates and sends email. Now finally, step number 10, once information comes, user entity is not going to rely blindly on it. They are not fools. First, they will match total number of employees with the master file. As per Excel sheet, 350 employees. Here, 350. It is matching. Okay. Randomly select 10 employees. Randomly select 10 employees. Randomly select 10 employees and do one thing. You recompute it. Done. Then make a 5-month graph and see why there are ups and downs. Are they justified? After performing 3 things, they finally make payments. Okay, this is called internal control system at user entity. Nothing should go wrong in outsourcing. So controls are designed at user entity to check the output. Are you getting this point? Input should be good, there are some controls. Output is good, there are more controls. Now, after this background, you will be able to understand what is written in the standard. Now, quickly, the most famous question from this standard is, they will ask that this is the situation, company has outsourced this, company has outsourced that. As auditor, what should you do? What should you do means there is a complete force you to apply. So sometimes they will ask open-ended. You have to write this answer which we are going to discuss. Or they may ask, what understanding you should obtain? Okay. This understanding will obtain. Or they will ask, what will you do in risk assessment procedure? Listen, what do you mean by risk assessment procedure? Simple meaning of risk assessment procedure is collecting information and obtaining understanding. Collecting information and obtaining understanding so that we can find out the risk in the next step. After risk assessment procedure, we perform the next step, that is called identifying and assessing risk. Listen guys, so in standards and auditing, the first step is to take the knowledge and next to think what can go wrong, that is identifying and assessing risk. Why we collect knowledge? So we want to know a lot of complicated areas, lot of calculation. Okay. This can be risky. Where a lot of judgment is required. Okay. This can be risky. In which areas there is a lot of pressure. Okay. This can be risky. Where systems are bad. Okay. This can be the risk. We first collect information, obtain understanding, then we think what can go wrong. What can go wrong means identifying and assessing risk. Now listen, many times they have two separate terminology in essays, that first we perform RAP and then we perform identifying IAR, identifying and assessing risk. Sometimes they don't refer to these two separate steps separately. They only talk about risk assessment procedure. Okay, that means they are combining both, collecting information and identifying and assessing risk in the name of risk assessment procedure. See, that's why a lot of common sense is required. Interpretation of the terminology changes with respect to context. So learning and understanding theory is art, and you need a different approach. You know, those people will be very successful who understand how to change the gears every point. Those who don't apply same principles everywhere. When you study practical, you give importance to each and every line, because line changes, whole problem changes, application changes. If the rate is given per labor hour, it's a different question. If it is given per unit, it is a different question altogether. That is practical. Do that, it will be wonderful. But if you apply same thing here, you are gone. You will go mad. And you will become so confused in life, you will not understand what to do. Listen guys, these are conceptual discussions, and they more important than words is what they want to say. That is much more important. Sometimes students will be stuck. Sir, what do you mean by further audit procedure? If you are talking in context of risk, it means TOC and substantive. Sometimes it simply means do more work. Further audit procedure. You cannot stick to one meaning. So sometimes RAP is one thing, collecting information, obtaining, understanding, and then IR. Sometimes RAP will include both. Context is more important. And when it comes to audit, after standards on auditing, there is a lot of theory. It's all conceptual discussion. There is no law, there is no standard. One unit is framed by one author of one foreign author. Second is by another foreign author. They may contradict with each other, or they may cover same point in at both the places. When you are acquiring a company, you need to check it. That is called due diligence. Same concept will be covered in investigation also. Listen, sometimes you need to simply have overview. Okay. Broadly, this is the concept. These are the points I am supposed to focus on. Next, don't overanalyze. You'll go mad. And that's problem with people who are good at practical. And those who know, listen, person who wrote it, he didn't think so much. Why are you thinking? So what I'm saying, to interpret standards properly, you need some kind of art. You know that meaning of the words is going to change. You should know broadly what concept wants to say. You'll always interpret words properly and you'll get correct answer. Now, let's freeze. Why I'm saying this? Because you'll get the same question. See, in how many ways questions can be framed here? What to do? There is outsourcing. This is the answer. What understanding should be obtained? This is the answer. What are the risk assessment procedure if there is outsourcing? This is the answer. Answer remains same. Okay, so finally, see, Q&A videos are very important. How questions are drafted is extremely important. Go through that video for sure. That may be uploaded maybe today or tomorrow. On Auditguru Telegram channel, we'll share the link. For English lectures, we have prepared a separate YouTube channel itself. Okay, so it will be uploaded there and link will be shared. Now, so if the question is about outsourcing, we understand 8 things. 4 is with respect to services. With respect to services, and 4 is with respect to service organization. So divide and rule. Don't try to remember all points together. 4 things. First, understand nature of services. Is it related to purchase? Is it related to production? Is it related to marketing? Is it related to distribution? Is it related to sales? Is it related to accounting? Is it related to finances, recovery? Understand the nature. Then understand its significance. We have outsourced security services. Not that significant. We have outsourced cleaning services. Not that significant. We have outsourced soft skill training. Not that significant. How significant it is for business? Is it affecting production? Is it affecting sales? Then it becomes significant. You have outsourced some of the production, significant. Outsourced some of the sales, significant. Some part of the accounting, significant. Understand is significant. Next, what was the effect? Earlier there used to be a whole department and now there is only one clerk. This is the effect on internal control systems. Okay. Then, very important, nature and materiality of TBD it affects. It affects salary account, bonus account. What it affects, what kind of TBD it affects? Salary account, bonus account, commission account, leave encashment, gratuity, pension. These are the accounts which are getting affected. What is the materiality? It accounts for 65% of the cost of the entity. It is affecting big accounts. So 4 things: nature of services, its significance, its effect on internal control system, and nature and materiality of TBD. Next you go and understand. Is service organization. Next go and understand is service organization. What kind of relationship we have with them? Is it an independent third party? Is it a group company? Is it a subsidiary company? Is it an associate company? Understand what kind of relationship you have with them. Understand terms of contract, extremely important. Get the agreement. What you are supposed to do, what they are supposed to do. What you are supposed to do, what they are supposed to do, obtain that. Okay, after that, what kind of interaction you have? Are we excessively dependent on them? Are we having a lot of interaction with them? Understand interaction. And next, have we designed any control to check the output? Like we had step number 10, relevant control. So 4 things. What kind of relationship we have with them? What kind of terms we have with them? Contracts or MOU we have with them. Correct? Then what kind of interaction after this? What kind of interaction we have with service organization? Lastly, have we designed any relevant control to check their output? So 4 things for services and 4 things for service organization. So for memorization and every chart you will find something or the other. Now what they are saying that you spend a lot of time at user entity, you saw a lot of documents, but you are not able to understand what is done at user entity and what is done at service organization. You tried very hard. You are unable to obtain proper understanding. What should you do? Go for more procedures, that is additional procedures. So let's go for additional audit procedures. What is that? So again, it's everywhere will be some sequence. Easiest part is draft a mail and send it to SO. Listen, SO, you explain what you do. That is the easiest. Contacting SO. More efforts are required. More efforts are required. Do one thing. Listen, we want report from your auditor. SO auditor should make type 1, type 2 report. Okay. More efforts, don't worry. We have our firm in Mumbai, we have our associates. We are sending our associates to SO. Go and check on our behalf how they work. Okay, more efforts, we are coming. We will visit Mumbai and we will see how you work. See, efforts are increasing. Easiest, put a mail to SO, that is contacting. More efforts, we want report from SO auditor. More efforts, appoint someone on our behalf. More efforts, we ourselves will go and visit service organization and perform procedure. Are you getting this point? So question in exam will be, what as the auditor you should understand and what you should do if you are unable to understand. Okay, now I've explained in detail type 1, type 2 report in Q&A video and explained what is SSO, subservice organization. Okay, now come to page number 11. This, what is SA 450 all about? Misstatement and what auditor should do if he comes across misstatement. Okay, so what he should do? 5-mark question. Modify. One thing will student will jump on. Modify. Ultimate answer of every question is modify. So 5-mark question, what will you do if you come across misstatement? Yes, substantive procedure. We have performed substantive procedure and then we got misstatement. Check whether it is material or not. So if material, modify. Check is it intentional or unintentional. Yes. Communicate to the management that we have come across misstatement. Okay. Let's see. There are 10 steps. And if you write these 10 steps, you will get good marks. And there are 10 words to remember. Let's see, I have highlighted them. Very simple, straightforward. First thing is accumulate. As soon as team gets misstatement, all the misstatements should be accumulated at one place. Unless they are clearly trivial, very small. Very small. If they repeat a number of times, then also it won't have any effect. For example, that some calculator expense is debit to office expense, 250 rupees, and turnover is 5,000 crore. Clearly trivial. First year article will fight. Asset gives benefit more than 1 year. It should be capitalized. Open calculator account. Nonsense. So everyone has gone through the first year. I was there the first year article. All nonsense questions are asked. And moment you ask, he understand first year article. Okay. So I remember I went to a shop and I asked, okay, so what is the cash price? And what is the credit price? Huh? There's only cash. There's no credit. And there's only one thing called price. There is nothing called cash price and credit price. Okay. I thought you must be having, I just studied cash price, credit price. Anyways, so accumulate everything at one place unless it's clearly trivial. Then getting a misstatement is a big thing in audit. Very big thing. You should understand nature of that misstatement. Is it intentional or unintentional? Is it repetitive or not? You should also understand whether you are expecting it or not. And depending on this, it may impact your strategy. You are not expecting it. Increase risk of the area, increase audit procedure, increase efforts, more things. So whenever you get misstatement, analyze its nature and whether you're expecting or not, and revise your strategy if required. Okay, fine. So we have taken the effect. Now you go to the management. So first you accumulate, then you sit in your cabin and think, are we supposed to revise our existing audit strategy? And next then you go to the cabin of client and you communicate. Dear client, these are the misstatements and we are requesting you to rectify them. Communicate on timely basis all the misstatements, all, whatever, material or immaterial. Communicate that, rectify them. If they rectify, additional audit procedure to go and check the rectification. If they have made all the corrections, good. If they refuse, though, we won't do these corrections. Go and understand the reasons. And also understand whether it is going to have material impact on financial statements. Now, once you are doing this step, do one more thing. Listen, we went to management and asked them for rectification. If they do it, we perform additional procedure. If they don't, we go for reasons. And is it a material misstatement? But before, how will you understand is it a material misstatement? How will you understand is a material misstatement? We compare with materiality level. We have to compare with materiality level. Before we compare, reassess materiality level. Because take into consideration what has recently happened, a big impact that we got misstatement. Misstatement is considered very big thing. It's like an accident. It's like a big thing. So rethink, am I supposed to change my materiality level in some areas? If yes, do that and then make comparison and then declare whether it is a material or immaterial. Then when you are considering the impact, one more thing, consider impact individually also and then in aggregate also. Whether individually it is material or in aggregate it is material. Also do one more thing. What, sir? We have list of prior period misstatement also. add them also. These were misstatement which were not corrected in the previous year. These are the misstatement which are not corrected in the current year. Add them and consider the effect. Finally, with this, go to again make communication to whom? TCWG. Listen, TCWG. We have done all the analysis. We have reassessed our levels. We have taken into consider prior period estimates, prior period misstatement, and these are fine analysis. These are material misstatement, these are immaterial misstatement. Do one thing. Material, if they are material, we want rectification, correction. If they are immaterial, we expect a WR from you, written representation, that these misstatements are immaterial. We request two things from you. We want rectification, we want WR. If you give it to us, if you do these two things, we give clean opinion. If you don't do these two things, we modify opinion. Okay, so these are the 10 steps. Quickly, as soon as you get it, first is accumulate. First word is accumulate. Then think about it, whether we are supposed to revise our existing overall audit strategy and plan. Revision. Then you go to management and communicate. Once they communicated, they may rectify, then go for additional. If not, if they refuse, understand the reason and whether it's a material misstatement. But when you do that, keep in mind two things: reassess materiality level, and when you take impact, also consider prior period misstatements. Once you have considered it, you go and communicate to TCWG and you ask for rectification as well as WR. And depending on whether they give it to us or not, there will be finally opinion. Guys, we are through with 400 series also. So we are trying to focus on the critical matters, tricky matters which generally trouble us. And now we have very small series, that is 500, correct? Very small. Okay, before we go on break, let's finish off two standards. I think it will be done. 500 and 501. 500, see, we have discussed this when we discuss question. 500, leave it. 501 also we discussed when we discuss questions. Let's directly come to maybe this part. Page number 13. Okay. Tell me, in 501, how many areas you cover? 3. One is inventory. Next is litigation and claims. And third is segment information. Okay. First part is discussed when we discuss Q&A. So in that video you will get it, and it will be there on YouTube, so you can increase the speed and watch it. Now here, how to deal with litigation and claim. It's a very risky area because you never know how many litigations they are hiding from us, how many litigations and claims they are hiding. So there is a big challenge in completeness, whether things are complete. Okay. So what will you do as auditor? First thing is, we need to perform risk assessment procedure. That means we need to collect information, obtain understanding. See that once that background is created, because the way question is asked, you should be able to understand. So step number one is you design and perform risk assessment audit procedure. That also means you go and understand, you go and collect information, obtain understanding about litigations and claims. Listen, it's very simple. First, 4 things you should do. Generally they say, if you want information about litigation and claims, you go to legal department and ask legal department guys to, okay, let's do inquiry. I want to know what are the present number of litigations and claims on the company. I want to further understand what are the additions during the year and what are the deletions during the year. I want to understand whether additions look proper and why deletions were done. We also want to know what are the complicated and critical cases where a lot of compensation need to be paid. So we first go and do inquiry with whom? Internal legal counsel. Internal legal counsel means internal legal department. So we are doing inquiry from them, trying to understand cases, additions, deletions, and complicated cases. After doing inquiry from them and understanding things, next we want to see some documents. Two documents we want to see, very important. First, the most important document is minutes. We want minutes of board of directors. Why? Board of directors are going to discuss all important cases. So we will see whatever cases are there, whether they are in your list, and whatever cases are discussed, all of them are very important. Material misstatement can happen there. Next, we want to see the next document. We want to see correspondence. We want to see letters and emails exchanged between you and external legal counsel. So we did inquiry and we saw two important documents, minutes and correspondence with external legal counsel. And the last thing is very intelligent. Open your legal expense account. We want to understand for which cases you have paid. So whatever cases you have paid, it should appear in the list. And wherever you have paid a lot of amount, that means all those cases are very big and risky. So that is how you remember. So yeah, 10 o'clock we went and we spoke to them. When we got two documents, minutes, and next document was correspondence. Then we came back in our cabin. We opened the legal expense account and we asked the queries for which particular case these are paid. So we do four things to obtain understanding about this area. Once we understand this area, we perform step number 2. We perform step number 2. If we get RMM, risk of material misstatement. After performing step number 1, you may get risk of material misstatement. You may come across some instances you feel that cases are hidden, or you may come across some that cases are very risky. Lot of compensation may be required. What you should do if you get the risk? Increase audit procedure. If there is RMM, we go for increase direct communication with external legal counsel, and that's technically called letter of inquiry. We want direct communication. We want letter of inquiry. Letter of inquiry is designed by auditor. It is printed or made by client on their letterhead. Designed by us, printed by them, sent by us. We send them, and replies received directly to us. We will design it, you will make it, we will send it, we will receive it. We'll do all the inquiry with the external counsel. We will ask them whether this list is complete. What is status of this case? What are the chances we are going to lose? How much are we supposed to pay? And in that, suppose there are some cases which are very complex, risky, or there's a disagreement. These both are fighting with each other, client and external legal counsel. There's a new thing we came to know. You are saying one thing, they are saying one thing. CSD, if there is a lot of complexity, there is significant risk or disagreement, increase audit process. We want to meet. How we want to meet? We want to meet external legal counsel, make all the arrangements, and we'll meet in the presence of representative of management. That will be targeted in the MCQ. We meet in the presence of representative of the management, that is written in the standard. That representative will be present. It is absolutely fine. Ask whatever you want to ask. See, wonderful thing is we got risk, audit procedure increased, direct communication in the form of letter of inquiry. Further risk increased, we increase the audit procedure. Now we are going to meet the other person in person. Now, step number 3. Even after doing all these things, you may feel little uneasy. You are not sure whether all the cases are covered or not, whether provision for litigation will be adequate or not. So get written representation that management has disclosed all known or possible litigations or claims. Everything is disclosed, everything is properly accounted for, and everything is disclosed properly in financial statements. So we perform 3 steps. Step number 1, risk assessment procedure, collecting information, obtaining understanding. 4 things. Step number 2, if there is RMM, we go for letter of inquiry. If we find that there are complexities, significant risk, disagreement, we go for meeting. And step number 3, we get WR. Give it to us in writing. You have disclosed everything to us. Then you have properly accounted for it and you have put everything in notes to accounts. And one thing is written there. You will find this in everywhere across the standards. If law prohibits, if law prohibits, if law prohibits. Nonsense. See, these standards are 99.99% copy of international standards on auditing. So these standards are framed keeping in mind hundreds of countries in what hundreds of countries have. Some countries may make different type of prohibitions, especially European countries. So if law prohibits that auditor cannot talk to, he cannot talk to external legal counsel. Simple, go for alternative procedures. A majority of places they write this. If law prohibits, alternative. If law prohibits, alternative. And majority of such laws are not there in India. So whenever you get this statement, don't worry much about it. They are useless statements. Okay. So guys, we are through with 501. See, standards on auditing are going to contribute for 45 marks. So paper is of 120. 45 marks come from standards on auditing. 35 marks come from other chapters, and 30 marks is professional ethics, company audit, CARO, and related things. Okay, this roughly. So let's see. I think it will be great if by day end we finish off 1, 2, 3, chapter 1, 2, 3, that full of standards on auditing, and we finish off company audit. In company audit, I am going to focus only on one thing, CARO. I don't want to give time on something which you already know generally. So CARO, I am going to teach you how to remember clauses, 21 clauses. There is a shortcut, and then I will quickly cover all the tricky clauses. The student find it them challenging how to remember or what things are given there. So if we finish this much, it's good enough. And then next day we will plan corporate governance, tax audit, then IMO, investigation, due diligence, and other topics. So we will have feel of the complete chart book. If we'll try to cover maximum of the chapters, feel of maximum of the chapters, because these sessions are planned to boost. So once you get the feeling, okay, I know something about all the chapters, or at least I know critical concepts of all the chapters. And as I said, CA final preparation is always incremental. I was talking just now. We have to cover our base. First base in audit is catch hold of all critical concepts from the chart book and catch hold of 250 important questions. We have made 2 files, 250 and 350. So it depends on how much time you have. I will suggest 350. If you have less time, 250. Once you do that, that is good enough to cover 50%, maybe more. But make it quality. That okay, I have command over these things. Yeah, some of the big questions, very big questions, maybe you can have an overview and leave them. I keep on telling it in the video also. Do only this much and be confident and give exams. Apart from that, something which doesn't need to be said, present attempt, MTPs and RTPs, extremely important, correct? So first this base needs to be covered, and if anyone gets time after this, which generally people won't get, it's very simple guys, you don't have to think much about it. Add 2-3 questions of the each chapter. Okay everyone, let's go ahead. Page number 13. Now SA 505, if we want external confirmation from the third parties, then we need to send them request, EC request. Whose responsibility is to design EC request? Auditor. Now if you want to design a request, what things he should keep in mind? That is a question. Factors to be kept in mind while designing EC request, external confirmation request. It's very simple. So you imagine the letter. You should imagine the EC request. So first of all, there will be a letterhead of the company. Then only people will respond, because they know company, they don't know auditor. So generally there will be letterhead of the company or a blank page. Then to customer, if it's a debtors confirmation request, to customer, address of the customer, request, and then they will write that our audit is being conducted for financial year so and so by so and so auditor, and is there regular audit procedure to ask for external confirmation. So your account is selected for external confirmation, please reply to it. It will not have any impact on our understanding on discounts or any scheme. It is simply audit procedure. It is not part of the business process. Then detail will be given as per our records. So whatever is the detail as per our records, they will be given, like balance as per our book, number of transactions as per our book, and so on. Finally, there will be a signature from CEO, signature from the CEO or CFO, signatures will be there, and then there will be a final request. Either they may say that if balance don't match, reply, or they will say that reply irrespective of balance matches or doesn't match, you reply for that. So this is the letter. Why I am giving this letter? Moment you catch hold of this letter, you will remember all the factors. That is the way to remember. So looking at letterhead, the first point which comes to mind is layout and presentation. Auditor is designing external confirmation request. First thing which comes to mind is what should be the layout of the letterhead, plain, how many pages, how many paragraphs, and what should be written in the each paragraph. Next is then, so first thing is you look at the layout and presentation. Moment you look at the heading, what should be the layout, what should be the presentation. Then the main body of the letter, main message, very simple. If there is more management encouragement, don't worry, reply, the thing will happen, there will be more replies. So need to keep in mind there should be more and more management encouragement when we design the letter. Next is, from the information given, it depends on assertion. If we are targeting existence, we'll give balance as per our books. If we are targeting completeness, we'll give number of transactions as per our books. If we are targeting cutoff, we'll give last transaction or last check as per our books. So what information will be written depends on assertion. Then ability to confirm. Always when you design the letter, keep in mind what is their ability, what is their knowledge level. For example, we know that branch head can give us quantity of goods. He can never comment on what are the ingredients of the goods. Don't ask him. He can never comment on cost of the goods or their breakup, how much was labor, material and overhead. So always keep in mind ability to confirm of the third party. Then see, there are 2 points which is coming from the information: assertion to be kept, assertion which you want to target, and ability. Then from signature, management authorization. If CEO, CFO signs, more people will reply. They will give importance to the letter. Then finally, the type of request will depend on risk. So there are 2 types of requests we all know: positive confirmation request and negative confirmation request. Positive confirmation request can be in 2 forms. Number 1, you send a blank letter, give balance as per our books. That is a positive confirmation request. Or second, you give balance as per your books and then they say, irrespective of whether it matches or not, you reply. In both the cases, they are asked to reply. Negative confirmation request means you specify the balance, reply only when things don't match. It is a disagreement. So depending on the risk, we will give the final statement. If it risk is low, we want less evidence, we will go for negative confirmation request. If risk is high, we go for positive confirmation request. Once letter is framed, then decide method of communication, whether it will be a letter, physical letter or an email, everything is acceptable. Then prior period experience. From prior period, we understood that if we send 200 letters, we get 20 reply. So if this time we want 400 reply, 440 reply, we should send for 400 letters and so on. Let's freeze, guys. Looking at heading, layout and presentation. Looking at body of the letter, how management encouragement is the point which comes from there. Then looking at the information, 2 points, that is assertions and ability to confirm. Looking at signature, management authorization. Final statement depends on risk of material misstatement. We can go for positive or negative. After all this, letter is ready. Think about the method and think about prior period experience. See, out of these 8 points, even if you can remember 6 to 7 points, it is good enough. Correct? Now, next is you come to page number 14. We have discussed this, okay. To 520, what do you mean by analytical procedures? What do you mean by analytical procedures? Okay. I know you know, but okay, you're not framing it just. Now, what do you mean by analytical procedures? It is one of the technique to evaluate financial information. It is one of the technique to evaluate financial information. You broadly do 4 things in it. Number 1, you think what are the probable, that means plausible. What are probable, plausible relationships? Probable, plausible relationship of financial data with other financial data and non-financial data. For example, if we talk about sales, sales is having plausible, probable relationships with GST, then it is having with sales commission, quantity of goods sold. It may also depend on number of dispatches happening. It is also connected to maybe freight outward. So it is having strong, plausible, probable relationships with many items. So step number 1 is to understand these relationships. Then step number 2 is collect reliable data. Suppose we are planning to check sales with the help of GST data. So step number 2 will be collecting GST data, collecting actual sales data. Step number 3, after collecting data, you predict, compute expected values, predict with the help of GST data, reverse calculation. If this is the GST for a month, this is the GST for the month, do reverse calculation, what will be the sales for the month. You compute expected values. Suppose for 5 to 6 months you compute expected values, and after that, very simple, you have to compare expected values and actual values. Compare expected values and actual values. After comparison, if there is a big difference, you go and investigate. If there is a big difference, you go and investigate. Very simple. And you may come across, if it is justified, good enough. If it is not justified, you may come across material misstatement. So it's very simple. It is a way to evaluate financial data. First, you understand probable strong relationship of financial data with non-financial data. Then you collect reliable data. After collecting data, you compute, you predict expected values, ratios, and finally you compare and you investigate the differences. Okay. Now, analytical procedures are used at 3 places. What are they? Planning phase, execution phase, and finalization phase. You can use it at planning phase. Very simple. Just an overview. Just collect lot of financial, non-financial data of the entity. What are the number of factories, production capacity, number of employees, number of shops, square feet areas. Simply compare with the previous year. You will understand what are the changes which has happened during the year. So while planning, you will keep those changes in mind. Next, compare with others in the industry. You will understand what are the strong points and what are the weak points of the entity. How they are different from the industry. Wherever they are different, go and check them. Is it all good, all appropriate, or there is some manipulation? It is very helpful at planning phase. Comparing with previous year and comparing with others, you will understand what are the risky areas and you can make more plans for them. It is very good for execution. You can simply make graph, monthly graph of salary. How should be monthly graph of salary? Horizontal. If there are changes, go and check the changes. There's change because of bonus, go and check it. There's a change because compensation was paid for VRS, go and check it. So it will be helpful in collecting evidence also. That is execution. And finally, it is very good to check whether the overall conclusion of audit team is appropriate or not. So it is useful at 3 phases: planning phase, execution phase, and overall conclusion phase. If you use it properly at planning, execution, and conclusion phase, then it will drastically reduce detection risk. What is detection risk? Chances that auditor will not be able to identify material misstatements. That is called as detection risk. So now we know what do you mean by analytical procedure. Now we know that it can be used at 3 stages. Let's discuss something which is not covered there. Okay. How it will be useful, page number 15. How it will be useful for whether to check overall conclusion of the auditor is appropriate or not. Very simple. So I can recall our boss whenever this point comes. Our boss used to need one special file for him. Once audit is completed, so you need to make a file. First column, account headings, all big accounts, income, expense, asset, liability, and then previous year balance and current year audited balance. previous year audited balance, current year audited balance, then you need to show percentage change. And whenever percentage change is 5% or more, he wants remarks from the team. It was a very simple thing. And logic was very simple. If my team is able to explain why there is an increase or decrease and it is corroborated with the audit files, my team can explain why sales have increased and that data is there in the audit files. If everything can be answered and there is a corresponding data in the audit files, that means my team understands this entity. That means they have collected good evidence, sufficient evidence. I am happy, I am satisfied with their work. I can go ahead and ask the partner to sign it. But if my team is not able to explain why there is a percentage change even now, that means their audit work is not sufficient. Their conclusions are yet not supported with enough of evidence. They should perform more audit procedure, find out the truth, and then go ahead. So it's wonderful. This is called using analytical procedure to check whether the overall conclusion is appropriate or not, whether the overall conclusion is correct or not. Are you getting this point? So it's very simple, guys. First thing to be kept in mind, it is mandatory. It is mandatory to design analytical procedures to check overall conclusion of the audit. In this, a very simple thing is done. We compare current year audited data with previous year audited data, and then we check whether this analysis can be corroborated with the audit evidence available. If this analysis can be corroborated, supported, explained with the help of audit evidence available with us, correct, then in this case we will say that our team has worked properly. This assists auditor to draw conclusion and form opinion. Either auditor is going to feel very confident, very good, my team can explain everything. So he will be very confident, or he may feel that something is wrong. There is some risk in this area which we were not aware about. We should increase the risk level and perform more audit procedures. Okay, two things may come up. Either everything is all good, let's finish off the audit, or revise risk level, perform more audit procedures. It is similar to what we do at planning stage. At planning stage also we compare current year data with previous year, and finalization stage also we compare current year data with previous year. What is the change? At planning stage we compare unaudited data, and at conclusion stage we compare audited data. That is the big change, but then it is similar to what we do at planning phase. Let's freeze, guys. So you are supposed to explain a very simple thing, that yes, analytical procedure can be used at which phase? Conclusion phase. And a simple thing happens, we compare current year with previous year audit data, and we try to corroborate whatever change is there with the help of audit evidence available with us. If we are able to corroborate, then auditor can conclude that evidence is sufficient and appropriate. If not able to corroborate, then we will say that revise risk level and perform further audit procedures. Listen, that's why it is not advisable to cram everything. Sometimes students cram mindlessly because they are frightened, they are not getting marks. So sometimes in fear you may do something which is not required. If you understand this concept well, you can explain little bit of background, you explain what happens, you explain what if it is corroborated, what it is not corroborated, you will get marks. The person who is checking your paper, he will understand, oh great, by reading this answer even I got to know what is the real meaning. Correct? So don't mindlessly cram things. Correct. And yeah, see, some people are, you need to understand one more thing. Some people are gifted. Like I have my cousin who is a gold medalist in law. He remembers law with comma. Here there was comma, where there is semicolon, and he will write every damn thing as it is. He says, as it is, I will write everything. Means if someone takes the bare act and he has that kind of memory. So on birthday we'll meet, he will tell me what we did 10 years back. What nonsense. I don't remember what we did 1 or 2 years back. You give me depression. You don't talk all this nonsense. You don't show off your memory to me. See, his planning of studies will be different and my planning will be different. He will target things in different manner and I will target in different manner. I will see as per what I can do. He will plan as per what he can do. It's absolutely fine, guys. Very good marks or uh, rank C. If you get it, it's wonderful. Correct? But then practical life is a different thing altogether. Not everything is dependent on marks and ranks. I've seen n number of chartered accountants excelling and doing very well and then employing rank holder chartered accountants. Correct? So don't worry if your memory capacity, your ability to memorize or ability to absorb or writing is little different from others. I will not say less. You are good at something better, they are good at something else. But then plan carefully. Sometimes what people do, people copy paste one plan to another and then they suffer miserably. So you may have a different plan, correct? So be careful. So you may not remember line by line, but if you know the concept, you will write the good answers. Now next is sampling. SA 530 is all about sampling. We need to know the process. How many steps are there in sampling? 7. 7 steps are there. Number 1 is sample designing. Number 1 is sample designing. So what do you mean by sample designing? At the start of the planning, we take some initial very important decisions. Sample designing is a preliminary step, is an initial step where a lot of important decisions are taken with respect to sampling. For example, we decide what population we are targeting. Are we targeting credit sales, cash sales, total sales? Then we define what are the characteristics of the population. Is it homogeneous or heterogeneous? So we'll understand whether to stratify or not. In sample designing, first we decide population, then we see the characteristics. After doing this, next we think, what is the objective? What exactly we want to check? Okay, we want to check occurrence of the sale. Okay, fine. This is the objective, purpose. How are you going to check? You define audit procedure. I am going to see dispatch records of the sales. Okay, dispatch records of the sale. Then what kind of evidence I will obtain? I will get documentary audit evidence. Okay. What do you mean by misstatement? If documents are missing, that is misstatement. If delivery is done within 2-3 days, a week, it's fine. That is not a misstatement. If documents are missing or delivery is done after 1 month, 2 months, then that will raise question. That may become misstatement. You explain to him this is misstatement. Okay. So all these things you decide in which step? Designing. Designing means to decide. At some place it will milk to make. At some place it will make to decide. Be flexible. So first step is to decide. First step is sample designing. You take all critical and important decisions here. Once you have taken this decision, you go ahead and you see sample size. Now you have decided important thing. Now next important thing is what should be the sample size? Whether it should be 100 items, 200, 300. Then you decide. Then next is you decide selection. Next is, how will you select the items? Simple random, stratified random, multi-unit sampling, systematic sampling, then cluster sampling, judgmental, or so on, block sampling, and so on. Method, I think food is having impact on me also. Selection, and after selection, next is you perform audit procedures. Whatever you decide at sample designing phase, you apply, and you apply audit procedures. After applying audit procedure, what are you going to get? In test of control, you are going to get deviation, and test of detail, you are going to get misstatement. After getting this, analyze them. Analyze what kind of deviation misstatement you have. After analyzing, is it intentional, unintentional, repetitive, non-repetitive, and then you make projection. If this much in sampling, then how much in population? And finally, you sit with the results and study them in depth. That is called evaluating results, and you may come to different conclusions. You may come to conclusion controls are weak. You may come to controls are weak, controls are strong, or you may come to a conclusion, I am confused, I am supposed to perform resampling. All these things are done in last step, step number 7. Quickly, first is to design the sampling flow, all the important decisions are taken. Then decide size, then decide selection method. After selection, apply audit procedures. Apply performing audit procedure. From performing audit procedure, what do you get? Deviation message. Understand nature and cause, and then projections. Once projection is done, then final evaluation. Now, do one thing, I think. This comparison is part of step 1. By mistake, it is here. Step 1 is sample designing. Step 1 is sample designing. Okay. Quickly, let me explain this concept. It's very simple. So, students ask, sir, what is difference between identifying and assessing risk of material misstatement, and what is difference between expected deviation and expected misstatement? Listen, it's very simple. RMM is computed at initial stages. So first difference is timing. RMM is computed at initial stages, and expected deviations and misstatement is computed just before sampling. Okay, one is happening at initial stage of audit, and one is happening just before sampling happens. So basis, if we talk about RMM, that is on the base of initial information collected. But when we talk about expected level of deviation or misstatement, what was the past data? What is the current data? We do some checking. We check 3 to 4 transactions, and then we compute expected level. So I can say that expected levels are based on more profound knowledge. They are latest and on the base of some level of checking. It is not just on the base of hypothetical understanding. It is based on actual checking. You got the difference? Very simple. RMM is computed at initial stages on the base of the information available that point of time. An expected level of deviation or expected level of misstatement is computed on the base of all the data and in fact some checking. Now, why it is so useful? As I said, this can come in MCQ. Just before we are going to do sampling, what we do is we compare expected levels with tolerable level. So what is the expected level? How much deviation can happen? Deviation is generally in percentage or rate. I expect deviation of 10%. That means out of 100, senior manager will not put signature on 10 documents. So deviation is in percentage rate. Okay, so expected level of deviation as per my analysis is 10%. What is the tolerable level? 40%. Great. That means it's hardly 10% and what is my tolerable level? Maximum acceptable level. Even if problems reach level, even if problems reach particular level, we'll assume that things are all fine, all good, no need to worry. Listen guys, if after comparison we come to know that, my goodness, expected level is 40%, chances that control fail is 40% and tolerable level is 15%. Even before performing sampling, I know things are going to fail miserably. Let's open eyes. Things are going to fail miserably. It is going to cross tolerable level. Don't waste time in testing controls. Drop it. Don't waste time in testing controls. Drop it. Directly focus more on substantive procedures. See, this comparison is very important to take important calls. This comparison is required to decide whether to cancel sampling and test of control and directly jump on substantive procedure. On the same lines, before performing sampling for test of details, we compare expected level of misstatement and tolerable misstatement. Suppose I got expected misstatement 50 lakhs. I am expecting misstatements of 50 lakh and tolerable level is nothing but performance materiality. Tolerable level of misstatement is nothing but maximum acceptable limit, that is called nothing but performance materiality only. My analysis telling me that 50 lakh is the expected level and what is tolerable? 30 lakhs. I can say before performing sampling there are material misstatements in the population. Why are you wasting time in sampling? Directly go and perform 100% checking. That's what you are going to do. After sampling, if you come to know that there is material misstatement, what will you do? You will go and perform check whole population. Why are you wasting time? Go and focus on 100% checking. Is this point clear? Let's freeze guys. This can come in this can come in MCQs. Comparison of expected levels with tolerable levels. So what is the broad principle? Compare these two things and before sampling, if you know that things are going to fail miserably, then test of control, you drop cancel test of control and go for substantive. In test of details, drop test of details in sample basis and directly go for 100% checking. Now, I don't want to cover these methods because, okay, come to this. Now, when you do sampling and perform audit procedures, what are you going to get? Deviations and misstatements. In TOC, you are going to get deviations and test of details, you are going to get misstatements. So they ask a question. Don't just look at the quantitative aspect. Also look at qualitative aspect. So what do you mean by qualitative aspect? Don't just look at the quantitative aspect, look at the qualitative aspect. Qualitative aspect means look at two things. What is the nature of deviation, misstatement and what is their cause? Focus on nature and cause. What do you mean by nature? See, this is how it is, things are framed. What do you mean by nature? In nature, go and understand, is it an anomaly? What is the anomaly? Yes. Okay. So, correct. Anomaly means deviation or a misstatement which is not expected to occur again. They are not of recurring nature. So, it is a mistake. Anomaly means we got the deviation, we got misstatement, but we know that it is of non-recurring nature, it is not going to repeat. So sir, what we'll do? When we do the projections, we will exclude anomaly. For example, we saw that some of the high value purchase or purchase orders were signed by a junior manager, and that's not in line with the internal control systems because it was supposed to be signed by senior manager. So we went on doing inquiry and we came to know that senior manager was suffering from COVID for a month. He didn't attend office, and that's why junior manager have signed it. Apart from that, across the month, it never happened that junior manager ever signed the purchase order. Okay, so we understand that in that month, 10 purchase orders were signed. We got this deviation, but this is not of repetitive nature. This is not of recurring nature. So when I project, I will not take this into consideration because I know that this is not going to repeat again and again. Are you getting this point? Yes, no. So it's very simple. When you get deviation or misstatement, understand nature. And when I say that understand nature, you go and check whether there is a anomaly. Next, also see whether there is any common feature. Oh, all the misstatements are there in sale transaction, and that too online sale transaction. Okay, we can see the pattern. See common feature means see the pattern. Whether there is only on online sale or in location. Oh, everything is from Mumbai branch. Okay, there is only new product and everything is during the year end only, December ending. Go and check, are you able to find any pattern in the mistake deviations or misstatements? If that is the case, go and check all the items. I want to check all online items. I want to check all transaction of this branch. I want to check all transaction of this particular product or this time period. Let's freeze, guys. What we are discussing? Nature and cause of deviation and misstatement. Just don't focus on quantitative aspect, focus on qualitative aspects as well. Qualitative aspect means focus on nature and cause. When we talk about nature, there are two things. See whether it is an anomaly and confirm it that it is definitely anomaly, it is not of repeating nature. Next is to see whether there are common features. And if you get common feature, go and check all items. Next is cause. Is it intentional or unintentional? Go and see cause, it is intentional or unintentional. And finally, once you get this, okay, now we know that what is the nature, what is the cause, great. We can make conclusion about that financial, we can make conclusion about that control, or we can make conclusion about that financial item misstatement. But apart from that, don't stop here. Apart from that, consider possible effect. So on defined objective, that means okay, you know whether controls are effective or not, whether there is a material mistake, but don't stop there. Effect, consider effect on other areas also. If this mistake is in branch A, it can be in branch B also. This is called consider effect on other aspects. You may conclude that don't rely on employee A, B, C. They are not good. They are doing it intentionally. Don't rely on this particular manager. Don't rely on this particular part of the software and so on. Let's freeze, guys. At last they are saying, okay, you draw conclusion about controls, you draw conclusion about the financial item, but also consider effect on other aspects. Where else the misstatement will be there? And again mark the people or documents or system which are not reliable or which need corroborative evidences. Let's freeze, guys. Qualitative aspect means two things. What? Nature and cause. In nature, 2 points, anomaly and common areas. Cause intentional, unintentional. After analyzing this, consider effect on the audit objective, whether things are reliable or not. But consider effect on other aspects also. Okay. We have discussed this particular part in Q&A. So leave that. Come to essay 550 now. 540 is in chapter number 2. Now, in essay 550, you may come across so after lunch there's always a different type of silence. In fact, there's a different level of peace altogether. That's again, our body needs a lot of energy to digest food. So automatically it has less energy to do other things. I am a person, I have limited diet. So I hesitate to order any rice dish here because it will happen that two people like me can have it. Every time I ordered, I was not able to finish it off, and I don't like to waste food. So nowadays, I see what I can eat, what I can finish, and accordingly I order. Anyways, now, and sometimes okay, there's something called zehar also. Huh. They're nothing but PJs. See, in life, it's very simple. If you want to get rid of a frustration, you need one more. Yes, it's very simple. Right? And if you want to get rid of one problem, you need one more. And in life, you'll always have problems. Sooner you understand it and accept it, you will have a peaceful life. Then you won't take problems too seriously. Because you know that if this problem gets over, there will be one more, and there will be one more, and there will be one more. So you sleep peacefully. Correct? Okay. So I will think of giving one zehar also maybe later on. Now come back. I say 550. So I say 550 is for related parties. Okay. Related parties. Even this famous question that if you are having transactions with related party and that to which transaction outside normal course of business, this combination is always considered significant risk. Always. So if related parties are involved and we are having transaction outside normal course of business, this is always considered significant risk, and SA 550 specifically gives audit procedure for it. What do you mean by outside normal course of business? Transaction which generally doesn't happen in industry. Generally doesn't happen in industry. Generally not done such thing. Generally such things don't happen. They are called as outside normal course of business. Again, you need to make a judgment whether it is outside normal course of business, and they have given examples. Outside normal course of business. Example, giving asset for use without any charge. Normal course, outside normal course of business. Giving 90% discount, outside normal course of business. Doing lot of transactions with entities who are in tax haven, Mauritius, Switzerland, Luxembourg, Dubai, correct? Doing lot of transaction with them, tax havens, which is not required. It is outside normal course of business. Having loan which is 50 times the equity, that is outside normal course of business. It simply means you are rotating black money. You must be aware, you must have seen in practice, very simple thing. Suppose you are having 25 lakh rupees cash. It's a black money. You have not paid indirect taxes on it, and you have not paid income tax also on it. And now you want this money in your business to buy a machine. So what you do? It's a very simple thing. So there are people who do it. Give 25 lakh rupees cash and you get a check and it is shown as loan. You get a check, it is shown as loan, you pay regular interest, and you get deduction also. That's why income tax department is so much worried about the loans you take and loans you repay, because they know that all these loans is simple rotation of black money. Correct. Anyways, so I was explaining what is outside normal course of business. Now consider only one example in mind, and keeping that example we will see all the points. So we have our subsidiaries. Subsidiaries are our related parties. Subsidiaries in Mauritius and Dubai, and to our surprise 100% export is done to them. Quite unusual. And from there goods are sent across the world. So first of all, subsidiaries involved, that is related parties, and that too 100% export happens to two companies only, and then they are sent to rest of the world. It is something unusual outside normal course of business. What we'll do? So we'll call the management, sit. For any related party transaction to happen, authorization is required. Whether this particular contract and this particular transaction was authorized by audit committee or board of directors or shareholders, tell us and give us authorization. Simple thing is, I want to know whether it was authorized, whether people in this company are aware about all this nonsense which is happening. First thing is, it's a logical sequence. Before transaction take place, there should be authorization, whether authorization was there. Next thing is that you must have made contracts, agreements, or you must have made a deal for this transaction. Get that? Give me contract. Give me contract, and I will read this contract completely, and I would like to understand the business rationale, why this is done. I would like to understand the business rationale, why it is done, why you are selling everything to your subsidiaries, and then through reading the documents. If I am not able to get the rationale, if there is no logic behind it, it can be a fraudulent financial reporting, or this can be a misappropriation of assets, if I am not able to get any logic or proper rationale. Then next is, I call them and I ask them, you give explanations to me, what this is all about. So they say, sir, we are saving taxes and we are saving transportation cost also. Is it? Okay, prove it to me. Whatever explanation you are giving, prove it. And whatever you say should match with the documents. If they are able to prove it, it's good. But when we saw, I think you are paying more taxes. And I think transportation charges are higher. So what you are saying and what your documents are showing they are not consistent with each other. Something is wrong, accept it, and we rectify things, rectify financial statement. These are fake sales, tell us. Or goods are misappropriated, tell us. We'll change, we'll do the rectifications. Finally, last thing, if it's all fine, whether it is accounted properly, and you all know that related party transaction needs to be disclosed in notes to accounts. So check that. So it's very simple, guys. So you should remember this example, and the first thing is, we'll ask whether it is authorized, whether seniors know about all these transactions. They say yes, okay. get the contracts, we read them thoroughly and we try to understand what is the business rationale. If business rationale is not there, it can be FFR, fraudulent financial reporting or misappropriation. Then we tell them, you give me explanation now why you're doing all these things, and your explanation and document should be consistent with each other. And finally, last thing, we see whether it is properly accounted and disclosed in notes to accounts. 3 steps. First, check for authorization. Next is contracts. Get the contracts, read it, understand it, try to make sense of it, and then ask for the explanation and look for consistency. And third is proper accounting and disclosure. If you focus on these 3 things and write it, then you get the marks. Is this point clear? Okay. Now, favorite SA 560. See, there are few things we have covered in important questions, so you will cover it there. Now, subsequent events. So you should know subsequent events as per AS Indias also, and subsequent events as per SA 560 also. Quickly, what do you mean by subsequent events as per AS Indias? All the events happening after balance sheet date till the date of approval of financial statements by board of directors, that is till the time financial statements are finalized, all those events are subsequent events. They are divided into 2 parts, adjusting and non-adjusting. What do you mean by adjusting? If they are giving you more clarity, more information about contingencies existing as on balance sheet date, if they are giving more information about litigation as on balance sheet date, about doubtful debtor as on balance sheet date, about pending government order as on balance sheet date, and that clarity, if it's giving you more clarity, then you can go and adjust amount of income, expense, asset or liability. It can be on the higher side also, it can be on the lower side also. That is called as adjusting event. All others are called non-adjusting event. We don't pass accounting entry. But then good thing is, India's 10 says one more thing. Even if transaction of non-adjusting nature, but if they are big transaction, material transaction, okay, don't do accounting, it's absolutely fine, but show them in notes to accounts. Disclose it in notes to accounts. Okay, fine. Now we know there are subsequent events as per AS and Ind AS, and now we know they are converted into adjusting and non-adjusting, and we know that even if things are non-adjusting, if they are big enough, they should be disclosed in notes to accounts. That's what FRF says. Now, what do you mean by subsequent events as per SA 560? It includes 2 things. All the events which are happening after balance sheet date till the, as per balance sheet date, till the time audit report is signed, that is called as subsequent events. Okay. So last day of auditing is till the time audit report is signed. So till that date, whatever happens, that is subsequent event. But one more thing. Even after signing, if you come to know facts with means information. Even if you come to know any facts of the earlier period, that is before signing and at the time of signing, facts which existed even at the time of signing, but you came to know about it right now. If you have known this earlier, you would have changed your opinion. If you come to know any facts of the earlier period, if you would have known this before, you would have changed your opinion. Even they are covered in definition of subsequent events. Okay. So AS India's definition is narrow. And SA 560 definition is broader. It is a broad definition. It covers events also and it covers facts also. Facts after signing. Facts known after signing. These facts you may come to know before financial statements are issued to published to public, or after it is published. So why they have distinguished it? Because there is little bit of change. Because there is little bit of change in the audit procedures. Let's freeze, guys. As per SA 560, subsequent events include events, fill the date of signing, and include facts which are known after signing, which if known before would have changed opinion. You may come to know about these facts before publishing financial statements or after publishing financial statements. Now the most famous question is, one we'll cover here and one is covered in Q&A. What are the audit procedures for subsequent events? What are the audit procedures? Okay. Again, now focus on words. First is duty. Yes. Even if year has ended, it is duty of auditor to check whether management has analyzed all the subsequent events properly and segregated it into adjusting and non-adjusting, and they have done proper accounting for adjusting events. If you have performed checking of subsequent events, if you have performed checking of subsequent events while checking some areas, no need to perform again. So that means, suppose you have already checked subsequent payments of creditors, you have already checked subsequent receipts of debtors. If you have already checked subsequent events while checking individual area, no need to check again as per SA 560. Let's freeze, guys. We are studying audit procedures for subsequent events. And the first thing is, yes, even if year has ended, it is your duty to perform audit procedures on the subsequent events and analyze whether it's properly accounted. If you already checked it while checking individual area, then no need to perform it again in that area. Okay, we understood our duty. What audit procedure should be performed? See, there are 4 points. I have divided into 2 parts, interaction and documents. So first is interaction. Call management. Dear sir, we want to meet you for subsequent events. Okay, tomorrow come 10 o'clock. So we sat in the front of CFO and asked them, I would like to understand your procedure to analyze subsequent event and identify adjusting event and do its accounting. What is your procedure? Will you please explain? Yes. Yes, I will explain. How? See, we have appointed 2 chartered accountants. We appoint 2 chartered accountant Ram Rain, and independently they fill up checklist of subsequent event every week. So they only analyze subsequent things, identify adjusting events, and independently they come to me separately and propose accounting entries. I am the one who study it, analyze it, and approve it. Oh, great. So how many weeks have passed after year end? It's 2 months, 8 weeks. So you must be having the file where there are submissions by Ram for 8 weeks and submissions of Rahim of 8 weeks. Yes, these are good. Very happy. We are very happy to understand your method to identify, analyze and account for adjusting events. Great. Next, so we understood things. Next is inquiry. We have our own list. As per past data, we know what kind of adjusting events are expected in this industry, in your organization. So we were expecting, as per recent circumstances, we have prepared our own list. So I am going to ask you questions and you reply me. what has happened in litigation, what has happened in data, what has happened this, that, and give answers. So in audit procedure, 2 points of interaction. First, understand their system and then do inquiry as per your agenda. Enough of interaction with you. Next is documents. I want minutes of board of directors after year end. Why? Because I will get information about adjusting, I will get important information from there also, like proposed dividend. Proposed dividend meeting happens after year end. Proposed dividend meeting happens after year end. Dividend is proposed after year end. Is it accounted for? No. But it disclosed in notes to accounts. We want to see the highest document in the company minutes what board of directors have decided. Okay, we'll give minutes. What else we'll get? We may come to know about the bonus issue. You know bonus issue after year end? Bonus issue after year end. Yes, no. You know effect on EPS? If bonus issue happens after year end, but before financial statements are finalized, you have to consider its effect on diluted EPS. Effect on diluted EPS. So you give me minutes, I will get information about dividend and bonus issue. One more thing, I want one more document. Let subsequent interim financial statement. That means interim means in between monthly, financial, quarterly. After year end, have you issued any latest interim financial statement? Why? I will read those financial. What are the major income, expense, asset? What are the major transaction? They may be adjusting events. They are subsequent events. They may be of adjusting nature. Okay, let's freeze, guys. What are we studying? Audit procedures for events happening between balance sheet date and date of signing. First point is it is our duty to check these events, and if you already checked, don't do it. Next is audit procedures. Two interactions, understanding and inquiry. Two documents, minutes and latest interim subsequent financial statements. Next is treatment. We will go and see whether adjusting events are properly accounted for and disclosed. If yes, great. If not, we will modify the opinion. Finally, we want WR. WR is return representations. Dear management, please management assure that you have properly analyzed all the subsequent events and you have identified adjusting events and you have accounted it properly. You have analyzed and then accounted. Let's see. So broadly, you should remember 4 points. Explain duty. To execute the duty, explain audit procedure, 2 interactions and 2 documents. Then check the accounting treatment and finally obtain written representation. So if you write these points, get marks. Okay. Rest I have discussed in that questionnaire discussion. Okay, guys. So some entertainment is required. I think AC should be switched off first thing. Great. That AC is never switched off. Huh? We don't have remote, otherwise we would have switched off. Last bench. Okay. Now, so some entertainment. Now my Zahar, many of them are in Hindi. Okay, so explain them is again a challenge. But then let me think about it. What I can explain, what I can. It's so bad, but so there's statutory warning, disclaimers. Okay, I will explain one of them, which students liked in Hyderabad also. So we'll listen the same in that video also. Okay. So statutory warning is don't so in India kamzor dil wale nahi sunenge. With weak heart don't listen, otherwise you get a shock. Don't damage the property of the institute. Don't go back home and explain these zahar to your friends, relatives, otherwise they will say it's okay, leave CA course. Don't go and explain this in any hostel, they will beat you. Being a professor, no one has done that to me. Okay, so after these statutory warnings, so let's take someone as an example. Yes sir, last bench sir, what's your name? Suresh. So in India say honhar, buddhiman, shaktiman, so you should say all the praises before. So we're talking about Suresh when he was uh, baby, few months old baby, maybe 1 or 2 year old. So he used to roam around in home with nappy. He used to like sweet things a lot, and that specifically used to like Bonvita. So he used to have a Bonvita bottle all the time and to trying to eat everything from there. Everything was fine. He was playing with the bottle, but one day suddenly, while playing, that bottle slips from the window and it falls down. So Suresh, he didn't understand what to do, so he came back. That bottle was there for 2 3 hours. Listen. After 2 3 hours, there's a black cat with golden eyes. She sees that bottle. She comes, analyzes, examines. After some time, after checking it out, so she pushes the bottle behind a tree. Again, 2 3 hours are involved. Then she digs up a hole for that bottle, puts it there, puts again covers it, and then sits over it for 2 3 hours, analyzing if anyone is watching. No one. And then she goes away. What nonsense, sir. Okay, but the question is now if someone is aware, don't make don't open the suspense. The question is why she's doing all this? What is so special? Suresh is crying there and she is doing all these things here. Revenge? What revenge? Some are thinking, what the hell is he talking? What the hell is he talking? What nonsense from where Suresh came? And he is in nappy and roaming around. There is no connection. Okay. It's very simple. See, please control yourself. I said to kill one frustration, you did one more. But the kind of shock you get and the instant relief you get from one frustration because you have a new one. This was bound to happen. Huh? This was bound to happen. See, everywhere it is written, Cadbury's Bonvita. Cadbury's Bonvita. It's okay. Some people will understand after some time. Some will laugh looking at others. Okay. Ho, 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 ho. Some are not able to understand how can someone laugh on this. So then some will smile after going home. Oh, it was that. We will go and see what was Bonvita. Okay. So this is the next level of frustration. So kill study frustration. You need one more. Okay. Come back. Some are still not able to digest. What the hell was? Sir, here is in shock. Suddenly, I don't give this Zahar on first day. Our batch is of 2 days. Otherwise, people will make opinion. He's not a normal guy. It's nonsense. Okay. Bye. Now let's finish up this chapter, guys. Last two standards, and the biggest portion of standards and auditing is over then. SA 570, that is going concern. Now SA 570 talks about 3 steps. Step number 1. Step number 1, when you understand entity and its environment, when you go and understand the business, as per SA 570, you look for, are there any events, or condition which create significant doubt over going concern? Are there financial events or condition, losses? Are there operational events and conditions, shortage of raw material supply, labor strikes, cancellation of license? Are there other events and conditions like this ban from the government, they are losing a litigation? Always look for, are there events or condition which create significant doubt over going concern? If you get such events and condition, you go and perform step number 2, that is additional audit procedures, and then you go in depth, collect more and more information about the financial troubles, collect more and more information about the operational issues, collect more and more information about the legal issues, collect loads of information, enough information to make conclusions. And step number 3, you make conclusions. You make first conclusion about MU, that is material uncertainty. When going concern depends on happening or non-happening of future events, that is called as material uncertainty. For example, we will survive if shareholders give us more money. We will survive if we get loan from holding company. We will survive if we get a new order. We will survive if we win the case. Go and see whether really going concern depends on happening or non-happening of future events. If it does, declare it is a material uncertainty. Call management, sit. Now this is not a joke, there is a MU in your company. Go to notes to account, put a separate section, MU on going concern. Explain all the financial problems, operational problems, or other legal problems, whatever you have. Tell people how you are going to compensate this problem, what are your plans, and issue warning. Because of MU, it may happen that assets are not realized in normal course of business and liabilities are not paid in normal course of business. Assets won't be there in normal course of business, and it may happen that we are not able to pay off all the liabilities. Issue the warning, okay, because there is a material uncertainty. So that is the first conclusion, that is about material uncertainty. Next conclusion is about going concern. Listen, sometimes students find it confusing, sir. How come? See, we can have MU, but still going concern may be appropriate. So how can that happen? Simple. Probability is less than 50%. There is MU, but probability is only 20%. Probability is only 30%. 20-30% is much below 50%. That means there is a MU, but going concern is appropriate. Are you getting this point? Yes, no. So you can get first conclusion, going concern is appropriate with MU or without MU. Situation I am saying. Going concern is appropriate with MU or without MU. There can be a situation where there is no MU. There can be a situation when there is MU. Second conclusion, going concern is inappropriate. They cannot survive next 12 months. There are no financial resources. There are no operational resources. There is no legal solution to this. They won't be able to survive. Or third is, I am not getting sufficient appropriate evidence. I am doubtful. I cannot comment about going concern. Yes, no. See, I have explained broadly. This essay is all about these 3 steps. Step number 1. Step number 1, look for events or condition which create significant doubt or going concern. Step number 2, perform additional procedure. Step number 3, you perform conclusion. First conclusion about MU. Second conclusion about going concern, and then make the reports. I have discussed step number 3 in detail in Q&A video, and I have also discussed questions. So if this is the question, how to tackle this, this is the question, how to tackle this, and so on. And there are a lot of questions about one thing only, MU, material uncertainty. I have not discussed one thing which I will discuss here. What additional procedures should be performed? Now listen carefully. What additional procedures need to be performed? Okay. Number 1, see, additional procedures are of 2 types, compulsory and one is mandatory compulsory and next is optional. More important are mandatory ones, and there are 5. You should know. It's very simple. Management comes at when to perform additional procedure. First, it is management's responsibility to assess whether going concern is appropriate and do accounting accordingly. So, if you have not yet prepared, I want the assessment from your side. I want management's assessment about going concern, and you should cover the financial problems which we have identified. You should cover operational problems we have identified. You should cover legal problems we have identified. Listen, management, we are performing additional procedures to take decisions. So we want management assessment from your side. And while preparing it, ensure whatever issues we have explained, they should be covered. You should explain how are you going to overcome financial problems, operational problems, legal problems. Fine, and we are very happy to read it. After reading management's assessment quickly, the most important thing is management's plan to save themselves. What is your plan for financial resources? What is your plan for operational resources? What are your legal remedies? Go and understand the plan and understand 2 things. Understand 2 things. Number 1, whether plans are adequate. Are they capable of saving you? Are they really adequate? Are these plans really adequate? Point number 1. And point number 2, whether these plans are feasible? Are they realistic? You are saying you are going to get more loans from outside India. Recent month, your rating was reduced. Who will invest in you? 2 things, whether the plans are adequate and are they feasible, practical. After that, okay, fine. Prepare cash flow forecast. Prepare cash flow forecast, P&L forecast for next 12 months. We want to understand what kind of year you are going to have in future, next 12 months. We want to understand there will be surplus, there will be shortage, and how you are going to cover the shortage. We will check 2 things very carefully. Basic data used and assumptions applied, isn't it? You need to basic data and you need to apply assumptions. Then they are going to get 12-month forecast. We want to understand your forecast, we want to analyze it, we want to understand the data and assumption. Okay. Now, see, I obtained 3 documents from you. First is management's assessment about going concern. And in that, I further went and analyzed one more important thing, that is management's plan. Then I asked you to prepare forecast of cash flow and P&L. When were these documents prepared? These documents were prepared as on 31st December. And what is the date today? It is 30th of June. So this document is 6 months old. I want to understand what has happened after preparing these statements until this time. What has happened in between? I want to know about both things, positive and negative. I want to understand whether the situation has deteriorated in this 6 months or it has improved. Finally, I want WR, written representation. Confirm your plan. Confirm your plan. Whatever is your plan, confirm that. Okay. That this plan is adequate and feasible. You will be able to pull out company from the danger. 5 steps, guys. 5 points. First, management's assessment. Go and read it. Then their plan in detail. On that basis, ask for cash flow forecast. Then when they were prepared, then give for additional information. What happened these 6 months, and finally we want a written representation. Okay. Quickly, SA 580, that is WR, that is finally written representation. What do you mean by WR? Written representation. What is it taken for? What is it taken for? Two things. Two things. Written representation is a written statement from management and sometimes from TCWG confirming certain matters. What matters, sir? Start of the audit they promised. Start of the audit they promised. What did they promise? That we will prepare financial statements as per applicable financial reporting framework and give you all the information what we have prepared. Confirm it to us end of the year. Start of the year, you promised you will prepare it and share all the information. Confirm it end of the year that you have prepared financial statements as per applicable framework, and after preparing you have shared all the information. Are you getting this point? And this is called written representation about management's responsibility, and it is mandatory in each and every audit. You have to take it. It is going to save you in front of CBI, courts, government, any authority. Whenever people will come and make you responsible and ask for punishment, you will say that, listen guys, this is WR. It clearly specifies it was management's responsibility to prepare financial statement. They have prepared it. They have signed it. So if something is wrong with the financial statement, go screw them first. Send them to jail first. And then you come to me. And then I will tell you what I did, whether I am answerable, accountable, whether I should be punished or not. It is the biggest savior and it is mandatory in each and every audit. And second, in many areas, even after getting all the evidence, you want something as a supporting evidence. WR is also evidence, but is never a primary evidence. It is a supporting evidence, and we have seen examples. In 550 you may need WR, 560 you will need WR, 570 you need WR, litigation you need WR. Written representation is a written statement from management or TCWG and is taken for two things: either to confirm certain matters which were promised at the start of the year regarding management responsibility, and second to support other evidences. So now we know the meaning. It is for two things, and one is mandatory and other is as and when required. Then very famous question. Okay, let's quickly cover this only then. So we know definition. We know it is done for two things: to confirm certain matters and to support. So very smart and intelligent management will come. Financial statements are signed by us. Vouchers are signed by us. Contracts are signed by us. So many documents are signed by us. So consider them as written representation. Don't act smart over smart. In essay, it is written financial statement and supporting documents which are signed by the management will not be considered as written representation. We want something which supports financial statement. How come financial statement itself become WR? We want something which supports it, which confirms it, and which is specifically prepared for us, which is specifically prepared for us. It is the evidence for us. How can we treat financial statement as written representation? So they clearly say financial statements and supporting documents having management signature will not be considered as written representation. So let's freeze, guys. Now we know it includes two things, and it doesn't include financial statement and supporting documents. What is the advantage? When you ask anything in writing, it improves quality of information. Suppose you ask me, sir, please give it to us in writing that 50% of the paper will come from these sessions. And after exam is over, you prove it to us that 50% was from this session we have taken. Correct? So if you ask it in writing, so I'll have to think 100 times, okay. And then you say also that if it doesn't come, this is your legal liability. Okay. So if you ask anything in writing, it will improve quality of information. There are two types. One is compulsory with respect to management responsibility to prepare financial statement. Other is voluntary as and when required. Other written representation. And the most famous question is, it can never substitute any audit procedure or any audit evidence. It is a last resort. After all the audit procedures are performed, after all the evidences are taken, still we feel that there is lack of assurance, there is lack of confidence. To increase our confidence, we take written representation. So if short note comes, you explain definition, what it includes, what it excludes. Then you explain advantage. Then you explain there are two types, one is mandatory, other is voluntary. And finally explain it doesn't have power to substitute any audit procedure, any audit evidence. It is a last resort. It is never a primary evidence. It is always a supporting evidence. It is a corroborative evidence. Always. Okay. Now, guys, so congratulations. 200, 300, 400, 500. We are through with them. And it's almost 6 hours in between breaks. Okay. Now, so as I said, the fact that you are being observed changes your behavior. So you know that someone is watching, looking at you. So you don't have any option. You feel like studying, you don't feel like studying. You feel like sleeping, 5 minutes you can sleep also. It's okay. Fine. As I said, it's absolutely fine. If it refreshes you for next uh, next 1 hour, 2, 3 hours, it's absolutely fine to sleep for 5 hours. Some say that, sir, we have developed expertise. We can sleep with eyes open. Okay. Now, chapter number 2 is special. It has essay 540 in it, which generally students don't like estimates because they don't understand what the hell is written and why it is written. What do they want from us? And then it includes 600 series. Yeah. So all these standards have Zahir in itself. 300 is a Bacha standard. We have been studying since long. In Inter also, we have studied many times. Rajnikant sir stays in Chennai, correct? Nearby only, 1 kilometer. Oh, so he comes and he meets. Any timing is something like that, no? Like Amitabh Bachchan, it's fixed. Sunday evening. Sunday evening, if he is there, so evening time he will come at the gate. He wave hands and we'll meet. Shahrukh Bhai doesn't know. So Rajnikant sir, nothing like this. No, sir. Fine, fine. What? Yes? What? What? Didn't understand. Abscond. Is it? What? He's absconding? Arey, it will become big news if something like this happens. Person of that stature, that honesty, and I don't know. He's raised a lot. How come he's absconding? Okay. Now come to SA 540. So let me see. But that's a fact that to understand you need a rough idea, and then only you go in detail. So let me explain what this. In fact, I have focused on this standard when it comes to 250 question also. But still, I should again focus because it is little tricky. Now, SA 540 first explains that there are two types of estimates. One is fair value accounting estimate and other accounting estimates. In any estimate, if you are predicting selling price of anything, market price of anything, that is called as fair value accounting estimates. Like residual value is a fair value. Then at what price is stock option? What is the cost of stock option? That's a fair value. Financial instruments, fair value. So all these are fair value. Anything apart from this, they are called other accounting estimate. Other accounting estimate, useful life is a other accounting estimate. Then chances of losing litigation is other accounting estimate. Percentage completion of WIP is a other accounting estimate. So first they explain what are different types of estimate. Then they explain there are steps. Step number 1 is risk assessment procedure for estimate. See, this is step number 1. Most crucial important step. Step number 1 is risk assessment procedure. Sir, what do you mean by this? It simply means collecting information and obtaining understanding about estimates. So you need to collect loads of information about estimate. After collecting information, step number 2, identify and assess risk of material misstatement. They need to think which estimates are less risky and which estimates are high risk, which are low risk estimates, which are high risk estimate. You need to segregate. So in step number 1, you understand estimates. In step number 2, you divide them in two parts, high risk and low risk. So when it comes to high risk, you respond. You respond to risk. That means you perform examinations. After examination of estimates, step number 4, the most important thing in estimate is you need to make people understand how these estimates were prepared and what are the chances that actual outcome will be different from estimate amount. Chances that actual outcome is different from estimated amount, that is called as estimation uncertainty. How much will be? You need to explain notes to accounts. 50-60% chance that outcome will be different, and by what amount it will be different. By what amount it will be different, you need to explain that. So disclosure is critical. After disclosure, then finally we take written representation. We take written representation about the estimates. And then, okay, so guys, there are 6 steps, and when you perform 6 steps, that then you get moksha from estimates. Okay, and because in practical life, that's the most sensitive area. Maximum manipulations, fraudulent financial reporting happens with the help of estimates. So it's always a big challenge to check them. And so you must have observed in practical life, this thing is always given to seniors. First year article won't get to check estimates. Now, let's quickly go through few things. It is mandatory to see the first step, because this first step is so powerful. Lot of things come from the first step only. Okay, so what they are saying in step number 1, you perform risk assessment procedure for estimates. That means you collect information, obtain understanding for estimates. And now many students have this doubt, sir, why this 315 comes everywhere? So they think, okay, wherever there is RMM, 315. It's not like that. So wherever there is a RMM, 315 comes, it's not like that. Listen, 315 explains what overall information should be collected about the entity and its environment. What overall information you should understand with respect to that entity. So it explains, understand industry, regulatory environment, then governance and etc. So it gives overall information to be collected and understood. Specific essays tell you, individual essays tell you what specific information should be collected. Like 550 will tell you what information should be collected for related party. 570 will tell you what information should be collected for going concern, and so on. So in many times they say that, like here they are writing, when you are understanding entity in its environment under essay 315, also collect information about estimates as per essay 540. Okay. So many times they give reference that while understanding entity and its environment, you understand more things as per individual essays. Getting this point? That's why many times they refer to 315. Then rarely this thing also happens. One more, they give this reference in one more thing. They say that always take into consideration understanding of entity and its environment as per SA 315. Okay. They want to say always keep in mind business of the entity when you are interpreting things, when you are making judgments, when you are taking decisions in audit. So again they will give reference of 315. Are you getting this point? So why they again refer 315 again and again? So they want you to do, while understanding entity and environment and 315, follow individual essays also. So again they refer it, and sometimes they want you to use that information. So again they are referring it. Is that point clear? Yes, no? Okay. So in short, there are two things. Sometimes they want you to collect additional information, so refer it. And sometimes they are saying use that information. So again they refer it. Now, see, these are small bottlenecks. Moment this bottleneck is broken, lot of clarity, simplicity and flow comes in. Now quickly, step number 1. So they are saying when you are understanding entity and its environment under 315, collect information as per SA 540 about estimates. Okay. So that is one thing. Fine. While applying 315, apply 540 also. Then they explain you have to collect two information. overall information and specific information. Okay. What is overall information? LIC. For overall information about economy, understand LIC. L stand for list. Obtain list of the estimates which are made in the entity. List of the estimates. So whether it is residual value, whether it is investment, financial instruments, inventory, WIP completion, provision for doubtful debt, litigations, content liability, obtain list of the estimates which are made in the entity along with which financial reporting framework is applicable and their key requirements. Okay, got it. We got the complete list. This is where estimates are made. Which of them are big estimates, significant estimates, and what FRF is applicable and what it says. First, obtain that list. So this is the overall information. I stand for identification. Understand how they identify transaction balance and disclosures where estimates are required. Where estimates are required and where revision of estimate is required. So they'll explain. Oh, listen. We have a IITian who keeps monitoring all the machines and technical things. Okay. We have a company secretary who keeps on reading all legal documents. Okay. We have a chartered accountant who keeps analyzing financing and investment decisions. So these three people on quarterly basis tell us in which TBD estimates are required and in which TBD revision of estimate is required. And they give quarterly presentation to board of directors. Great. Show those presentations. Fantastic. We are very happy you guys identify TBD with estimates properly. C stand for changes. Whether there is any drastic change as compared to previous year. Majority of the estimates will be coming from last year. Majority of the estimates are continued from the last year. Is there any major change in circumstances? For example, you have shifted from one shift of working to triple shift of working. Is a major change in circumstances. It will need change in estimates also. The way you compute depreciation. Is there major change in operations, major change in law, or major change in business, something like that, major change in the employee contracts? Tell those things also. So step number 1, we are applying 540. We are understanding two things. What is overall? In overall, shortcut is LIC. We got the list with FRF. We know now how you identify things, and now we know whether there are changes in the circumstances. Okay, now we will deep dive into each estimate separately now. So we'll call what is the biggest estimate? Provision for pension. Okay. What are the terms of provision of pension? We have promised 2% of the salary for each year completed as per last drawn salary. Okay, so that means if any person retires after 20 years of service, 20 into 2, 40% of the last drawn salary will be given as pension. In how many years? Till that person or spouse is alive. Okay, what else? We will bear all the medical expenses also. You have made huge commitments. It's going to be very costly. We know that. That's why the biggest provision we have, biggest estimate we have is provision for pension. Fine. Now, what we are going to do is common sense. Again, it's in sequence. What is the internal control system you follow for computing provision for pension? We want to understand ICS. Some people will say we have an Excel sheet. Some people will say we have a software. Some of them will say that we have a third party service who computes things for us. Okay. First, understand internal control system. Every computation needs data. From where you extract data. See, we are collecting information. Okay. What is your internal control system? Done. From where you get data? See, this is the module, ERP module of employees. From here we generate the data. Okay. Assumptions. Assumptions, our CFO is a champion. He makes assumption. Okay. He makes assumption. Fine. Give the assumptions. Which method or model you follow? See, you must have heard, I think one of them you must have heard. Earlier there used to be corridor method, and now very famous is PUC method, project unit credit method. That simply means project how much outflow is involved, and then compute its present value. Compute its present value. Yes, no? Compute it present value, and as per that accounting happens. Understand the method or model used, and whether you have appointed any expert. Okay. So what is the specific information? We want to understand internal control system used. We want to understand from where data comes, from where assumptions come, correct? Then we want to understand you feed this thing in which method or model. Data and assumption are fed in particular any method formula where you feed it. And finally, are you having any expert? 5 things are there. These things keep on repeating throughout the standard. Okay, we want to understand, do you compute in any manner estimation uncertainty in your estimates? Are you having any method of computing estimation uncertainty? Means whenever actual outcome comes, do you compare with the estimation which you made? Do you have you made any analysis? This was the difference. This was the difference between estimation and actual. And with the help of that analysis, have you computed any sensitivity or any estimation uncertainty data, like in this estimate it is 20% uncertainty, in this it is 30%, 40%, 50%, 100%. If you have done, then please give it to us. It will be a big source of information for us. If you have done all this hard work, it will be very helpful to find out, okay, these are the estimates with high uncertainty. Mark them as high risk of material misstatement. Estimates with high uncertainty, higher are the chances of misstatement. Mark them as high RMM. And last is, we want to review prior period estimates. What? We want to check what were the estimates of previous year. What is the actual outcome? What is the actual outcome? We want to check actual outcome. We also want to check whether re-estimation was done. See, if that thing has happened during the year, you will get actual outcome. If that thing is yet to happen, it may continue as it is from the previous year, or there will be re-estimation. We want to check whatever happened in the previous year, whatever was the estimate in the previous, what happened in the current year. That will be a big learning. You will understand how good their processes are. You will understand a lot of things. Let's freeze, guys. Step number 1, risk assessment procedure about estimate, that is collecting information, obtaining understanding. So first thing is very clear. When you're understanding entity and its environment under 315, you also apply SA 540 about estimates. First correct overall information LIC, then correct specific information 5 points. Then do 2 things. Try to understand their process of computing estimation uncertainty and what is their results, where uncertainty high and where uncertainty is low. And next is review prior period estimates. What is the actual outcome? It is mandatory process. Now, guys, I have explained these steps in the Q&A video, but then, okay, come to this one. This was a popular question. So now we know SA 540. Now we know there are 6 steps. We know the most important step, step number 1. And next step is we have to divide estimates in 2 parts. Estimates with high uncertainty and estimates with low uncertainty. Wherever uncertainty is high, it may become high RMM, and wherever uncertainty is low, it will become low RMM. So you get a popular question. Give examples of estimates with high uncertainty and estimates with low uncertainty. DFL. So DFL used to be one of the sponsors of IPL. DFL, when IPL was launched, big infrastructure giant, construction giant, even it's there. Delhi is the Delhi Financing and Leasing. So DLF or DFL, whatever. DLF, okay. DLF. Now, Delhi Leasing and Finance, whatever it is. Now, D is for derivatives. We all know derivatives. Derivatives, cash inflows, outflow, profit, loss are highly uncertain. Anything can happen. So they are smiles, sir. We have done that. So there must be some of you, sir. In one day, I got 50,000, 60,000 positive, and then few days it was 2 lakhs negative, and capital went everything. Then I stopped trading. So that is derivatives. So derivatives example is D is very famous is derivative. In derivative contract, cash inflow, outflow, profits are highly uncertain. So its valuation has huge estimation uncertainty. Then L stand for litigation. Litigations are always complicated. That's why they go to the court. If they would have been simple, they won't be going to court. Litigations are highly complex. Anything can happen. High estimation uncertainty. F stand for fair value estimation by highly specialized entity developed model where inputs are not observable. So, one very big scam is happening with you. It happened with me also from 11th class. When you're 11th class, people told you, what is the value of share? Then you, after some days or months, maybe, no, it's not face value, it is paid up value. Okay. Then you came into foundation, no, it is issue price. What is the value of share? Issue price. Okay. Then you came to FM, then you came to accounts, no, it is net asset divided by number of shares. Then you came to FM, no, it is dividend upon KE. Then you said, no, it is dividend upon KE minus G. Then you said, no, it is earning per share into P ratio. Then no, when you came to final earning based valuation and so on. When you ask what happens in practical market, no, that is different. That depends on demand and supply. Okay, that's again different. Demand and supply. So, it's just for fun, but then that's how complicated share valuation is. And to make an estimate about the share valuation, and it keeps on changing. So you went mad after seeing all this thing. You said, I will develop my own formula. Share value is equal to alpha into internal efficiency index plus beta into competitive index plus gamma into economics index. I will compute it as per my efficiency, as per computers efficiency, and as per economy. A new formula. And you are using that formula to value shares. And you are presenting it to auditor. Auditor is, what the hell is this? From where you get this alpha, beta, gamma? And from where you got this data of different indexes? You don't get this from market. They are estimated by our expert team. Something which we don't get from market, it is called not observable. So if you are computing fair value by highly specialized model, which only you guys know, there is high chances that actual outcome will be different from the estimated outcome. So again, high estimation uncertainty. D stand for derivative contract. L stand for litigation. F stand for fair value with the help of highly specialized entity developed model with not observable inputs. Now, give examples of the estimates where there is low estimation uncertainty. FMCG report. FMCG is a very good industry, fast moving consumer goods. Whatever happens in AI doesn't matter. You are going to need a soap, hair oil, correct? So it is a fast moving consumer goods. Now, F stand for frequently. If you're making some estimates frequently, like inventory value, you sell inventory day in, day out, you know exactly at what price it will be sold. Low estimation uncertainty. Method. Method of measurement is as per financial reporting framework, and it is very popular across. When a company is getting closed, use net asset method. It is well known in FRF. Okay. See, there is no complexity, low complexity. It's a very simple trading business. You place 5 orders in a month to purchase and 25 to sell. Nothing else. Very low complexity business. Generally accepted or well known model you are using for computing fair value. Either it is as per FRF or it is very well known. Okay, low estimation uncertainty. Readily available data, you are computing it on the basis of average P ratio, average P price, average P of the industry. It is observable. As per EPS, it is observable. FMCG, F stand for frequently making, low estimation uncertainty. M for method measurement as per FRF. C stand for complexity is low. G stand for generally accepted method, well known method. R stand for readily available data. Correct. Now, rest guys I have discussed a lot in detail, so you'll understand that in the that. So 540 we got the overview, we got step number 1, we got step number 2, example of high estimation uncertainty and low estimation uncertainty. Then we have 3 standards. 600 is for 600 is for other auditor. Other auditor means branch auditors, subsidiary auditors, associate company auditors, and so on. Okay, 610 internal audit and 620 experts. Okay, now listen, let's see this crucial step. That's a big one. Again, generally students ignore this particular point. So you may get a question or you may get an MCQ on what is the role of principal auditor, or wait a minute, look into this one first. If you are offered role of principal auditor, what things you should consider before accepting the assignment? So this question may come. What things should be considered accepting or acceptance of work as principal auditor? The most important thing is you should accept the position of principal auditor, HO auditor, only when you feel confident that you are doing the major work. You are sufficient, your participation is sufficient. Suppose you are offered post of principal auditor and then you ask, how much turnover am I going to audit? It's 5%. 5%? And I am principal auditor? Doesn't make sense. So whenever people come and offer you post of principal auditor, you should ensure that you have sufficient participation in the work. Now, you should always see what are the areas you are going to cover. And then you should know materiality of the portion. You should always take into consideration what is the materiality of the portion you are covering. You should cover the major portion. You should cover 50-60% of the portion. Then only you justify the post of principal auditor. Next, for areas covered by, what is this? Is areas covered by principal auditor. For areas covered by other auditors, you should know What is the risk of those areas? What is it? They are covering very risky areas. What am I? Why have you appointed me then if he is covering all the risky areas? He is covering the most risky areas. R&D he is taking. Impairment he is taking. Goodwill valuation he is taking. He is covering all the risky areas. Then what is my knowledge? I don't know that business. He is taking exports. I doesn't know anything about it. You should give areas which are very simple and which I know to branch auditors. For example, I know how manufacturing happens in your industry. If you are giving one of the manufacturing unit to the branch, I know how manufacturing happens. Just by overview, I will be able to understand his work. You are giving areas to him where my knowledge level are extremely weak. How will I understand his work? You are giving risky areas. You are giving areas where my degree of knowledge is not there. How I will evaluate his work? Will I be able to perform additional audit procedure? The other auditor says that I am not going to cooperate. In agreement, it is said that I will answer only 2 questions during the year. I don't want such restrictions. Let's freeze, guys. You may get a question that you are offered position of principal auditor. What things will you consider? You will say that, okay, first of all, let me see what area I am covering. I will see maturity of that portion. I should be covering major area. Next, I will see what areas he is covering. Risk, I will see risk of material misstatement. Major area should, all the risky areas should be covered by me. Next, I will see what kind of degree of knowledge I have of those businesses. If they are altogether new businesses, it should be done by me. Next is that, is the other person ready for additional procedure? If answer is yes, then only I will go for position of principal auditor. Then only I am comfortable. So we have divided it into 2 parts. C areas covered by me and C areas covered by them. Okay. Now, I think this question is fine because from importance level, I have covered one. I would like to focus more on the next essay. Come to next essay. Okay. Cover these 2. Let's see these 2 things also. So, first in essay 600, first we saw points to be considered while accepting the position of principal auditor. Next is reporting. Two situations can arise. You are not happy with the report of other auditor. You are not at all happy with other auditor. After reading his report, after performing audit procedures, you feel that report and work performed by other auditor is not reliable. He completed audit in simply 2 hours without even visiting branch, which is having turnover of 500 crores. We are not happy. We don't feel his report, his document, his communication is reliable. What you should do? You should try to perform additional procedures on your own. Go and try to check all material, income, expense, asset, liability on your own. Try to get documents. Try to send a team. Try to do that. If still it is not possible, qualify or give disclaimer. So first situation is you are not happy with the reports and documents. So you go and perform additional audit procedures on your own. Still you are not able to collect sufficient appropriate evidence because of lack of time, whatever it is, you are not able to do it. Qualify or give disclaimer. Yes, no? Yes, no? Very good. And then next situation, this guy modified his audit report. Other auditor modified his report. Understand the reason why he modified it. What is the amount of misstatement? What is the amount of problem? See quantitative details. Apart from that, also see qualitative aspects. Whether it is due to fraud, whether non-compliance of law is involved, is it affecting going concern? If you feel that it is material at company level, it's very important, then you include that modification. But it is not the case always. If it is immaterial, we will not include it. Are you getting this point? Let's freeze, guys. Reporting two situations can arise. You are not happy with the evidences. You go qualify and disclaimer. Next, you may come across modifications. If you feel on quantitative aspect and qualitative aspect they are big thing, you include them. It is not mandatory to include them. You may get an MCQ, you should always modify when branch auditor modifies. Answer is no. You'll have to evaluate it, whether to include or not. You will get the question when subsidiary auditor modify, you should always modify. No. We'll have to evaluate it. Some people confuse it in with CARO. CARO clause number 21. That is different altogether. CARO clause 20 is different altogether. We'll study this when we do CARO. So point is, two situation can arise. Okay. So two things are enough for 600. Now comes critical 610. Okay. 610. Follow. 610 is not about how to perform internal audit. It is about how to take help of internal audit. And there are two concepts. There are two concepts. One is using work of internal auditor and other is taking direct assistance from the internal auditor. Sir, what is it? It's very simple. If internal auditor is performing some work as per management's instruction, suppose he is checking salary, transportation charges and goodwill valuation. If auditor is doing three things as per management's instruction, we can think about using his report prepared for management and using his files which were prepared to make conclusions. That is called as using work of internal auditor. And the next concept is taking direct assistance. Taking direct assistance. Okay, sir, what is taking direct assistance? I will appoint internal auditor for next 15 days, 20 days. He will work as per my instructions. He will work like my team member. That is called taking direct assistance. Okay, sir. So one is referring to his work which he has already performed as per management's instruction. That is called using. Appointing it and asking him to do what I want to do as per my instruction. Taking direct assistance. Now listen, guys. It is very general principle in audit. You can use anyone's work. You can delegate any of your responsibility. You can delegate any of your work. You can use anyone's work. You can delegate any of your work, but you cannot delegate responsibility. You cannot delegate responsibility. That means tomorrow you take help of branch auditor, you take help of internal auditor, you take help of expert, or you give some of your work to them, they do it for you. But if something goes wrong, you will be answerable, you will be accountable, and you will be punished. That time you cannot say that, okay, it's not my mistake, it is their mistake. No. Like, this class is my responsibility. I may take help of Tarun sir, I may take help of some printer, some courier, this, that, everything. But then if something goes wrong, I am answerable. I cannot say it's not my mistake. It's my responsibility. Yes, no. Now, so in all these three standards, there's a common principle, and that's why these standards are framed. Hence, we have 600 who tells whether to rely on branch auditor and how to rely on them. We have 610 whether to rely on internal auditor, how to use their work. 620 whether to rely on expert, how to use their work. Now let's read. 610, it gives 3 steps if you want to use work of internal auditor, and similar steps if you want to take direct assistance of internal auditor. Okay, let's see what are these 3 steps. Number 1, carefully evaluate internal auditor and its team. Are they good people? Whether we should rely on them? Will they work properly? That is step number 1. Step number 2. If we have decided that okay, internal audit team is reliable, step number 2 is which work to be used. I cannot use all the work. I have to be very selective. I can use only some selected work. And third, how to use the work. See, in exam you need to, internal audit means 610 applied, you need to identify which step you have to write. Question can be how to evaluate internal audit function. That means the question is step number 1, whether to rely on internal auditor. Then the question will be select the area in which we should rely on internal auditor. That is step number 2. Question will be, okay, internal auditor has worked and come to you to show his work. How will you evaluate his work? That is step number 3. Now let's see, guys. See, there are 2 things involved: using the work and taking direct assistance. Step number 1, whether internal audit function in the audit team, internal audit department is a reliable department. Step number 2, which work, if we think about relying on them, in which area we are going to show faith on them. And step number 3 is how to use the work, means how to evaluate their work. On same lines, you have 3 steps here. Step number 1, whether to take direct assistance from internal auditor. If yes, in which area, in where I can take direct assistance. And third, how to take direct assistance. Let's see step number 1. Step number 1, if you want to evaluate, first evaluate the internal audit function. That means whether the internal audit team is reliable. Number 1 we are going to see is competence, level of competence. Competence means what is the knowledge and skill level. What is the qualification of these auditors? Are they CAs, CMA, certified internal auditors, ACCA, CPA? What are the qualifications? After qualification, what is the training? Their qualifications, their training, their skill, their experience. We want to know about these things. So most important thing is level of competence. Are they having adequate knowledge and skills to perform such kind of assignments? Or they are simply graduates from some commerce college? They're good commerce college also, but some are some only. Then next is, what is the level of objectivity? What is the level of objectivity? Whether this department or team can function without any bias? Can they function without any bias? Without any pressure? What? No, we need to analyze. We need to analyze. For example, if they are not having any shareholding, great. You are not relatives of the management, great. You don't have any financial relation, you don't have any personal relation. And most importantly, what is your status in the organization? We report directly to the directors. Fantastic. That means you can work without any pressure. You report directly to the director. You can go and fire any person, any HOD, any employee, anything. You can write anything about anyone. No one can stop you. Great. Your status is very good. And what about scope? Scope means two things: what you are covering and how you are covering, what you are checking and how you are checking. What is scope? No restrictions on scope. Once area is finalized, I decide how to check it. No management can restrict me. Wonderful. You guys can work without any pressure and without any issues. Your organizational status is very strong and your scope is also very strong. We are confident on you. You can work without any pressure. See, mark that by mistake that two lines have gone to third point. And this is third point. Okay, internal auditor, we are very happy to deal with you. You got tremendous level of competence. What knowledge, what skills. We envy you, even we don't have this much of knowledge and skills. Second, you guys are highly unbiased, super level of objectivity. What status in the organization? Super. There are no restriction on scope. We are very happy with you. Next is, we want to understand your approach. What is your approach to internal audit? Sir, we have 3 volumes. Okay. 3 volumes of internal audit manual. First manual explains what are the different concepts of internal audit. Our team continuously follows it. Then volume number 2, what are different type of issues which happen in various industries. We read that also. Great. Volume number 3, how to make a good report. You got a very systematic and disciplined approach. All the 3 are mandatory. You should be people of competence. You should be people with objectivity. And you should have a systematic and disciplined approach. If these 3 factors are there, we should not use work even if single factor is missing. If there is a lack of competence, don't accept. Not objective, don't accept. Not having systematic and disciplined approach, don't accept. So step number 1, how many factors are there? 3. Competence, objectivity and an approach, systematic and disciplined approach. Is this point clear? Now, if I get these things as positive, I go for step number 2. I go for step number 2. I'll quickly explain step number 2. Step number 3 is covered in Q&A. Step number 2 is crucial. You must have done 5 areas for management. How many areas? 5. It is not necessary I will use all those 5 areas. It is not necessary I will use all those 5 areas. Okay. Okay, not necessary to use all those 5 areas, fine. There are some factors which I need to consider to decide which area I can use. See, if I'm using internal auditor's work, that means if I'm using internal auditor's work, that means I'm relying on him. That means, in short, I have delegated that work to internal auditor. He is doing 90% of the work and I am doing 10% of the work. I should be extremely careful in selecting the area which will be delegated to internal auditor. I need to see some factors. So I have given this most important part A. What factors? Point number 1. And good thing is similar 90% same points are there in direct assistance. So when you cover using the work, you automatically cover direct assistance also. Now listen carefully. So see, what is my contribution? I am going to do a lot of grouping in charts. So what I am going to do, I am going to write area related points. So you go and focus what kind of areas he is covering. If he is covering area where lot of judgment is required, For example, he is checking goodwill valuation. My God. Lot of judgment is required. How to plan the checking, how to perform the checking, how to evaluate the evidence. Lot of judgment is required. It is not a very simple and standard area which everyone checks n number of times. It is a goodwill valuation which is very tricky. Lot of judgment is required. How to check, how to examine it, how to perform it, how to evaluate it. There is no standard way, there is no standard approach. Such areas should not be delegated, where a lot of judgment is required in planning, performing and evaluation of evidence. Next, areas with high risk of material misstatement with significant risk should never be delegated. So what they are saying, very simple. Which points I have said? Area related points. What points? Area related points. And the first is whether a lot of judgment is involved, and second is whether a lot of risk is involved. Such areas should never be delegated to internal auditor. Next is internal auditor related points. Sir, what is that? He is having low level of competence in that area. There are objectivity issues in that area. That HOD is his relative. How I can delegate work to him? No, I don't want to. There are competence issues. There are objectivity issues. If I see that there are competence issues, lower level of competence in that area, lower level of objectivity in that area, I should not use his work. Then third, when management allotted work to him, work related points, nature and scope is so weak. Management has given him limited time, limited resources, limited fees to cover our area. We are not happy with nature. We are not happy with nature and scope of the work he's given. He's given very narrow scope. He's supposed to check only 3 salary slips. That is not sufficient. We are not happy with the nature and scope of work which is given by management to the internal auditor. That is not sufficient checking. His work is not relevant for me. He is covering all low risk areas, which as such I am not supposed to check. Okay, quickly. Which essay? 610. Which area, using work or taking direct assistance? Which step? Step number 2. That means selecting the area, whether I can delegate or not. We have divided into 3 parts. Points are divided into 3 parts. First is area related points with a lot of judgments and a lot of risk. Then internal auditor related points, whether the competence and objectivity is all fine. And you can simply add one more, whether the approach is all good. And third is Work related point. What kind of work was given by management to internal auditor? What is the nature and scope? And is it relevant for me? These points need to be considered before delegating work to internal auditor, before using work of internal auditor. Point B, whatever you decide, you should be sufficiently involved. Whatever you decide, just keep in mind one thing at the end of, keep just one thing in mind. Your involvement should be sufficient. Majority work should be done by you only. That is the basic principle. You consider above points and then you decide where you will be using work of internal auditor, but whatever it is, you should be always be sufficiently involved. And C point, whatever you have decided, inform in writing to TCWG. Dear TCWG, you have a lot of high expectation from us and we understand. We will never let you down. Let me explain you that we are using work of internal auditor. In some areas, we will not be doing primary checking. Primary checking will be done by internal auditor. We will be evaluating his work. I hope you are comfortable with this. Your favorite statutory auditor. So, the step number 2 is critical and a lot of questions are targeted on step number 2. And finally, what will happen? Step number 3. Step number 3, that is step number 3, that is using work of internal auditor. That's covered in Q&A. Now listen, quickly, direct assistance. Now because it is same exactly, listen carefully. Listen, we had 3 points in step number 1, competence, objectivity, approach. So it is -1 point and +1 point. -1 point, third one, we are least bothered how you perform internal audit. Why? Because I am going to give you DSR, direction, supervision, review, how you will work when I take you for direct assistance. So 1 point is minused and that is logical. I am not bothered about your approach because I am going to give you approach. But 1 point is, it should not be prohibited by law. In India, internal auditor cannot become statutory auditor. But nowhere it is written that we cannot take help of internal auditor. In some countries, it may be banned that you cannot take help from internal auditor. India, it's not like that. So 1 point is minus, that is approach. 1 point is plus, that is it prohibited by law? Is this point clear? Step number 2 is copy paste same. Area related points. No high judgment areas, no high risk areas. Internal audit related points. No areas where his competence is low, no areas where his objectivity is low. Same points, copy paste. Okay. This was a very famous question asked in RTP also. So, our statutory auditor is planning to perform external confirmation and is planning to take direct assistance of internal auditor, that you come and you only do external confirmation for us. Is that allowed? So you need to give reference of 2 essays. One is essay 505 and one is essay 610. So what they say, listen. First of all, we have 505, which says that external confirmation is one of the most reliable evidences. And second, it says that statutory auditor, external auditor should have full control over external confirmation procedure. That means every small thing should happen as per instruction of statutory auditor. Every small thing should happen. He should have his full control over external confirmation. Okay. Then you will apply SA 610. You will say that all the important areas will be done by statutory auditor. He should not delegate his work to internal auditor. An institute has given final conclusion that external confirmation is a very important step of the audit process. Very important step of the audit process, and you should not delegate it to internal auditor. That means external confirmation procedure cannot be delegated to internal auditor. See, this will open your thought process towards, okay. 6:20, should we take break? Sir, ये भी कोई पूछने की बात है? Okay, listen guys, we are left with one standard, that is 6:20. We'll be through with this also. And quickly we'll go through 3. And then we will go through CARO. Okay guys, now let's see SA 6:20. There are 6 steps. Now many of you must be thinking, how will remember so much? Now, this video will be available to, it will be given to you, YouTube access. It will take some days to process and it will be given. So what you can do is, now we are covering these important concepts. Then as I said, we will be covering important questions. Only way to remember is when you have those key points marked. Okay, this is the concept. I am supposed to focus on these 4 points. Moment you reach that level that I know these 4 points need to be highlighted, these 5 points need to be explained. And in charts, you will find that everywhere we give those points, or I mark those points. So you need that level of marking first to retain. See, there is no simple, straightforward answer. Do this and you will remember everything. If that would have been the case, it would have been a cakewalk. It's not like that. So first is, you need very strong marking in your notes. These are the 3 points, these are the 4 points, this is the thing I am supposed to focus on. And next thing is, you need to revise it 1-2 times. Everyone will have a different memory. For someone, even once will be sufficient. For someone, 2 times will be sufficient. And then you revise it the same thing as it is on last day before the exam. Then you retain it. So generally what I say with the students is, I read, one reading is done. So I ask him, what do you mean by reading? What do you mean? I read. I had an overview. Such kind of 2-3 readings won't be sufficient. Because you are fearing it a lot, you are simply overview. Such 2-3 overviews won't be sufficient. Please just spend more time, take that concept to the level of 3-4 points, and then you revise it, and then it will become part of your memory. See, even I used to watch, even I have to watch my own videos sometimes. Now CA Institute is coming up with a new course, 800 series. 800 series, 2000 series, 4000 series, and it's very small. They are the smallest of the standards. And that was there in the course earlier. They wanted to reduce course, so that's why they deleted those things. And in new course, they're again reintroducing them. But they're deleting 5 chapters also. Yes. They're deleting company audit. They are deleting corporate governance. Company audit covered in law, deleted. Corporate governance to be covered in law, deleted. They're deleting tax audit. Hmm. New course, not this course. This course, everything will be asked. They're saying that tax audit will be covered with DT. Hmm. Then, then they are deleting. They are deleting insurance. It is very industry specific. We want broader knowledge. Great. Delete that also. When they are deleting peer review and quality review. So some of you, new course is good. You never know what are the devils there. Don't think about it. You have opportunity, crack it whenever you are getting this opportunity. Anyways, what I was saying is, so our team was making notes. So I said, fine. I was trying to recollect and I was tired. So I started my own videos. Ah, that's how I used to teach. Correct, correct, correct. These are the examples. See, memories like that. You are tend to forget. There is nothing wrong with this. Nothing wrong. Most important is you should know how you will revise. Students who are absolutely clear, these are the markings, these are the audios, these are the videos with the help of which I am going to recall things. They have a perfect strategy of revising things again. They have perfect strategy. So it's absolutely fine to forget, but you should have good markings, good techniques, audios and videos with the help of which in less time you are able to revise and recall things. If you are able to do that, it is absolutely fine. Absolutely fine. You go and meet any high scorer, he will say the same thing, that you tend to forget, but you should know how to again recall things. Correct. So you will be getting this marked file. As I said, go to Audit Group Telegram channel. There will get a small link, 2 minutes video, how to get this thing. You will be getting this file also. And then I'll be providing on Telegram channel. We have made a separate YouTube channel for English videos. Okay. So we will share the link of this also. As their process, we'll share that also. Now, 620, it talks about 6 steps. Again, very simple, logical 6 steps. Number 1, every auditor needs to decide whether he needs expert. See, if you want to rely on management expert, you have to apply SA 500. If management has appointed expert for accountancy, you have to follow SA 500. If auditor has appointed expert, you have to follow SA 620. So first step, auditor needs to decide whether auditor's external expert is required. Whether expert is required. Step number 2, selecting appropriate expert. Step number 3, understanding the field of expert. You should have some understanding, otherwise people will fool you left, right and center. Step number 4, once you have some understanding, make an agreement with the expert. Make agreement with the expert. Step number 5, when he does the work and he comes to you with the work, read his report and see his documents. That is called evaluating work of expert. And last step, step number 6, whether when you make audit report, whether you should make reference to expert's report. That is step number 6. So there are 6 steps. There are 6 questions which can be drafted on this particular essay. Now, I am going to cover this thing, and this will automatically cover step number 1 also. Point are same. So crucial question, whether auditor should appoint expert. whether auditor should appoint expert. And this can be asked in one more manner. What are the factors? See, they are two different concepts but having similar points. What are the factors to be considered whether to have extensive NTE in the area of expert or less nature time extent in the area of expert? Which factor influences auditors' work in the area of expert? Let's see, guys. So these are very important factors which influences auditors' efforts in the area of expert. If these factors are there, he will have to work really hard in some areas. Now the situation is simple. So we have a company and it is having a oil well. It is having a oil well and the balance sheet size is 10,000 crore. Balance sheet size is 10,000 crore and out of that 80% is value of the oil well. Okay, so let's see, guys. If you see shortcut, there are 5 factors need to be considered. SNARK. S stand for significance of work of expert. How significant is work of expert? How significant, how important is work of expert? Now it's very simple. How important is the work? That depends on how important is that financial item. It is 8,000 crore. It is contributing 80% of the balance sheet. It is extremely important for financial statement. It is extremely significant financial item. And that's why, because it is a very important item, it has its big significance. Auditor should pay more attention to this particular area. He should carefully perform NTE, nature, timing, extent of audit procedures will increase. So first factor is SNARK, significance. If area is significant, auditor need to increase NTE of this area. Then N stands for nature of matter, very complicated. Very complicated. We need to find out width of the oil well, depth of the oil well, quality of the oil, cost of extracting the oil, future prices of the oil, and accordingly valuation will be done. Nature of the matter is extremely complicated. We need to increase NTE of our audit procedures in this area. And next is SNARK. A stand for auditors' knowledge and experience with expert. Audit team is not having any knowledge of oil wells, then don't know this area. First time they are doing this, first time they are covering it, they have very low level of knowledge in this area. They should be more careful with ND. And this is the first time they are working with this expert. They don't know how this expert works. They don't know how is he going to perform, whether he is going to follow all our instructions or not. Again, auditor should be alert. He should increase his NT, nature timing extent. Then R stand for risk of material misstatement. Last year valuation was 2,000 crore. This time it has increased to 8,000 crore, 4-time increase. And company is not having any committee to decide valuation. They don't have any fixed policy for valuation. It's a big challenge how they are working. There are high chances that things get misstated, high risk. Finally, Q, quality control policies. Quality control policies. See, further auditor's expert can be further divided into 2 parts. One, he is employed by the CA firm. It is called auditor's internal expert. And next, he can be appointed. That is called auditor's external expert. If he is auditor's internal expert, he is bound by quality control policies and procedures of CA firm. He will have to follow quality control procedures. He will have to follow standard procedures. But if he is an external person, he is not bound by our quality control policies. We don't know whether he will follow proper process or not. Again, we should increase our NTE. Let's freeze, guys. Whether a statutory auditor should increase his nature, timing, extent of audit procedures in area of expert will depend on SNARK factors. As for significance, if matter is extremely significant, extremely big, important for the financial statement audit, increase NT. And for nature of the matter, very complicated, increase NT. A for auditor's knowledge and his past experience with the expert, no knowledge, no experience, increase NTE. R for risk of material misstatement, increase NTE. Q for quality control procedures, whether he is bound by our quality control systems, he is not bound by our quality control system, increase NTE. These are the 5 points. This will increase nature, timing of extent of auditor when he is dealing with expert. Now, same lines exactly, same things. So if you get a question, how will you decide whether auditor's expert is required? See, it is written point 1 to 4, similar to factors affecting NTE. SNARK, S for significance, N for nature, A for auditor's knowledge, R for risk. Except that the last point, there was quality control, that is different. See, it's very important in audit to understand if there are similar things. You compare them, okay, 4 points are almost same. Additional point, whether management has used management expert. Before we appoint our expert, we should know whether management has appointed their expert. We should also know whether there is any alternative source of evidence, whether expert is the only way to check it or there is some alternative way to check it. Okay, so instead of quality point, there are additional points whether management expert is there and whether alternative any audit procedure is there. So step number 1, so factors affecting NTE, and step number 1 is prepared. Okay, you can draw line because then other points start. Other thing is there. Now step number 2, selection we want to go in. Step number 3, obtaining understanding. Step number 4. Step number 4 is already covered in Q&A. What is step number 4? When you make agreement, what things should be written in the agreement? When you write agreement, what things should be covered in the agreement? What matter should be there? Step number 5. We'll see step number 6. Okay. Should you refer, suppose we have heavily relied on the auditor's expert. We read his report, we saw his document. Whether we should give reference in our audit report? Whether we should give reference in our audit report? Yes, no. Yes, no. Depends. If we are giving a unmodified report. If we are giving unmodified report. If we are giving unmodified report, clean report, we don't need to give justification why we are giving clean report. If we are giving clean report, everything is fine, financial statement give true and fair view, we don't need to specifically highlight why we are giving true and fair view. No need to give reference to experts report unless required by law. Even if required, there is no such law in India. Even if it is required by law, we have to write specifically. We are referring to the work of expert, but there is no reduction in responsibility of the statutory auditor. He is fully responsible for his opinion on financial statement. Responsibility has not been delegated in any manner. no reduction in responsibility of auditor. Next is modified opinion. Okay, if you are giving modified opinion, if you are giving modified opinion, then we all know that we have to give reasons in basis of modification paragraph. We all have to give reason in basis of modification, that why modification is done. And if you think this reference is going to give more information to users, it is going to increase their confidence, their understanding, then you should refer to the work, you should refer to the report of expert. Okay, so it's very simple. If it is unmodified, no need to give reference. If it is modified and you feel that it is going to be useful, give reference to the work of expert. Again, if you refer, write that no reduction in the responsibility of statutory auditor. We are through with chapter number 2. Okay. So guys, we are through with chapter number 1, different standards, and the chapter number 2, 540 and 600 series. We have chapter number 3. Chapter number 3 talks about one essay only, 315, and it is divided into 2 parts. We have divided 315 into 2 parts. Part 1 discusses different types of risk and what is relationship between the risks. Listen. So first is explain what are different types of risk. Now we have discussed this again. If you want to find out the risk, you want to know what are the complicated areas, what are judgment areas, what are pressure areas. And how will you come to know about it? That will be only when you collect information about entity and its environment. So part 1 says, okay, these are the risks. To find out the risk, you need to collect information. So they are going to explain how to collect information. Then they are going to explain what information should be collected, how to collect information, and then what information should be collected, and what to do after collecting information. After collecting information, you are supposed to identify and assess risk of material misstatement. And after you have assessed risk, you have to think, is it a significant risk? Is it a significant risk? Is it a big risk? Is it such a big risk that we are supposed to discuss with the engagement partner? Correct. So this is all about part 1. Quickly, we saw this in the morning. First, go and assume there are no internal control system and think in which areas material misstatement can happen. That is called inherent risk. For example, in retail, cash and stock, there is a inherent risk. In jewelry, purity of gold and diamond valuation, inherent risk. In telecom, billing is complicated, inherent risk. In coaching classes, registration of students, correct? There can be errors. So there is an inherent risk. So you go to any business, for some time assume no systems and think where material misstatement can occur, you will get inherent risk. It can happen that out of 400 items in balance sheet, P&L, notes to accounts, only 50 items you get inherent risk. After that, you talk to management. Are there internal controls to compensate these risks? And you are very happy to know that there are 30 controls, super strong, and we feel in preliminary analysis they will compensate the risk. If controls are good, that is low control risk, chances that controls will not be able to prevent or they will not be able to detect and correct material misstatement, that is called control risk. If we combine them, we will understand whether misstatement will reach financial statements, will get risk of material misstatement. Out of 50, 30 controls are super good. Controls will, misstatements will not reach financial statement, low RMM. But 20, there is inherent risk as well as controls are weak. There is control risk as well. If you combine them, you will understand that misstatements will reach financial statement. There is a high risk of material misstatement. Let's freeze, guys. First we find out inherent risk, then we find out control risk. Then we combine and we get risk of material misstatement. Low risk means less chances that financial statements will be misstated. High risk means more chance that financial statement will be misstated. Now, this complete 3 risk is in the hand of management. We cannot increase or decrease it. We can only identify and assess it. What is in our hand? Detection risk. What is detection risk? Chances that we will not be able to identify. We will not be able to identify material misstatements. That is called detection risk. That is called detection risk. It depends on 2 risks, sampling and non-sampling risk. What is it? Sampling and non-sampling risk. Chances that our conclusions go wrong because of the sampling process. Our conclusions are not depicting reality, depicting population. That is called as sampling risk. Chances that our conclusion go wrong not because of sampling but because we are applying inappropriate audit procedures. We are careless in applying audit procedures. We are not evaluating evidences properly. That is called non-sampling risk. What will auditor do? He will see areas of high RMM. He will see areas of high RMM and he will work hard and reduce detection risk. He will inversely adjust detection risk. He will inversely adjust detection risk. Wherever his risk is high, he will work hard and reduce detection risk. Inversely adjust. Wherever risk is low, he can afford to relax. He can afford to relax. He can keep detection risk high. Yes, I don't need to work hard because highly there is any risk in this area. That is the only way he can become efficient and effective. As I said, you should know areas where to work hard and you should know where not. Then only you will be able to become efficient and effective. If you are giving equal importance to everything, you are not changing your gears. That's what is written here. If there is high RMM, work hard, reduce detection risk. If it is low RMM, relax, no need to perform any more procedures. You can afford to keep detection risk high. Inverse relationship. And when you combine both, you get audit risk. What is audit risk? Chances that final opinion goes wrong. That is called as audit risk. So, there is a very famous equation. Audit risk is equal to RMM into detection risk. And RMM is IR into CR into DR. So, in one of the questions, you have to compute detection risk as a balancing figure. Good question. The way they have drafted is good. So, that is covered. Now, we know that risk is divided into 2 levels, that is financial statement level and assertion level. Now, listen, you may be asked question how to collect for finding out the risk. You need information. You will be asked how to collect information, and that is called risk assessment procedure. So you should be extremely careful. If you are asked risk assessment procedure with respect to the whole entity, you need to explain Yes, the risk assessment procedure is an important step. It is all about collecting information, obtaining understanding. On this basis, we perform the next step, that is identifying and assessing risk. Identifying and assessing risk. First, we'll collect information, obtain understanding. Then we'll think what can go wrong. For example, we came to know that there is a recession in the industry, that is collecting information. Then we thought what will happen? Debtors will default. Oh ho, there's a problem with provision for doubtful debts. Then what will happen? Inventory will become obsolete. Okay, there's a problem with valuation of inventory. So collecting information is one thing. So how will you collect information? Three things they have explained. So easiest, again I will do my own mark. Easiest is inquiry. Simply keep questioning. Talk to all the directors and senior management and collect loads and loads of information. If you want to increase efforts, do analytical procedure. Compare with previous year, compare with others. You want to increase your efforts, go for it. Inspection and observation. Inspect documents and assets. Observe how people are working. Easiest, inquiry. More efforts, analytical. More efforts where you have to go in the field, inspection and observation. Then next information you will get, what information should be collected. See, we have created a sequence. What information should be collected? The whole sequence is important. First, go and understand economy. Below economy, go and understand industry. State of economy, nature of industry. Then in industry comes regulatory authority. Who is regulatory authority and what are the requirements of regulatory authority? Then below that, understand the company, ownership and governance. Understand entity, ownership and governance. Below that, understand from where are they getting money. Is it equity, preference or debt? Then understand after getting money, where are they investing? In which businesses? Startups or very stable businesses, where are they investing? In India or outside India? Then what are the operations? Is it centralized or decentralized? Is it manual or automated? What are the kind of operations? Then what is FRF for doing accounting? Are they following AS or Ind AS or US GAAP? Then who is selecting and applying accounting policy? Are they conservative or aggressive? Then after applying policy, what does their financial statement say? Are they doing well? What is their performance? Then next, are they achieving their objectives? And finally, from all these things, whether their strategies are working, are they keeping business risk under control? See, there are so many points, but because it is in a flow, you may be able to remember a lot of them. First is economy. Below that, industry. When it's come to company, industry. In industry, regulatory authority. Then it comes to company, ownership and governance, who take decisions. Then from where they get finance. When they invest. What are the kind of operations? Then for doing accounting, what is financial reporting framework? Who selects and apply accounting policy, conservative or aggressive? After applying policy, what is their financial statement say about financial performance? Are they achieving their objectives and whether their strategies and working with with limited business risk? Again, in every concept there is way of remembering, and one of the most effective way is flow. Mnemonics, sometimes there will be so many mnemonics, you will go mad with the mnemonics. You will need one more mnemonic to remember mnemonic. But this, if you catch hold of the flow, see, one more thing about memorization is you cannot apply same technique everywhere. Sometimes you have to get the practical flow. If practical flow is not that great, then you have to go, like at some places I have used that letter. You associate with some letter. Then sometimes you associate with balance sheet and P&L. Then sometimes you make a story. There are different ways of memorizing. You cannot apply same technique everywhere. Now, Very interesting is part 2. Part 2. Part 2. If you recall, what is the name of the essay? Understanding entity and its environment, including internal control systems. Understanding entity in itself is when we understand entity, it's very important to understand its internal control systems. See, all the big companies are based on internal controls. If internal controls go weak, whole entity can come down crumbling. A lot of losses they may incur. So internal control systems are extremely important. Now, first thing is, what do you mean by internal control? What do you mean by internal control? All the policies, procedures which are made by management, TCWG and management to ensure that work is happening smoothly without fraud and error, that is internal control. Is it? Yes. That's a very general meaning. Okay. Now they have given specific definition. It is very logical and simple. They say that all the policies, procedures, system designed by TCWG and management to achieve 4 objectives will be considered by us as internal control. There are some 4 areas which are extremely critical for us. So if you have framed something for those 4 areas, we will consider it as internal controls. What are those 4 areas? Number 1, most important is law. Whatever company has designed for the compliance of law, they have a department, they have a head, they have a team, they have a software, they know what to be done monthly, quarterly basis. That is internal control for us. Next, second most important thing for any organization is assets. Whatever you have done to safeguard assets, you have kept them in lock and key, you have a security for that, you need permission to access, authorization to access the assets, to keep record of who went inside, who came outside, what was taken inside, what was brought outside, records, you regularly reconcile records and an actual stock. Superb. All of them will be considered as a internal control for us. Next, by using assets, are how you are doing operations, all the things which are framed to make operations efficient and effective. You have set reorder level, that is internal controls for us. I'm not saying we are going to test all the controls. I'm saying they will be considered as internal control by us. And lastly, the most important thing, whatever you have done to ensure financial reporting is complete accurate, all the systems and procedures, design of the vouchers, primary books, posting in ledger, trial balance, consolidation of trial balance of all the branches, preparation of financial statement, whatever steps you have developed for financial reporting, they will be also considered as internal control. So let's freeze, guys. All the systems, policies and procedure which are framed to achieve 4 objectives. Most important, law compliance, then asset safeguarding, then efficient effective operations, and lastly ensuring proper financial reporting. Now, okay, so these are considered as internal. So interesting, this is definition of control. This is only called objectives of control. This is only called general purpose of controls. And interesting again, this is the definition you apply for IFC, Internal Financial Controls as per Companies Act. It is same. Only one point is different, you can ignore. Even if you write 4 points, you will be happy. Yes, don't take a lot of tension. Now, that is internal control. As I said, you need to feel that all the big organizations are based on controls. Something goes wrong, everything goes wrong. Now, so like There is a recent news that source code of Twitter is leaked online. So whole Twitter is based on a source code. There's a background coding how it works that is leaked, and now that leak may cost Twitter billions of dollars. As such, it is a sinking ship valuation wise. Valuation wise, so if companies like Twitter are not able to perform, okay, there is a serious question about sustainability of all the startups. If after so many years they are not able to perform. Anyways, point is their internal controls went bad, their source code was released, and they may incur huge losses and it may become fatal for them. They may not survive. Okay. But then time will tell what will happen. So controls are very important, I want to say. And as an auditor, we need to find out whether controls are good. So we have to study 5 components. If these components are good, controls are good. What are these 5 components? Number 1, control environment. What do you mean by control environment? What do you mean by control environment? What is attitude of TCWG and management towards internal control system? Are they serious about it? Are they serious? Are they having ability? Are they having enough human and hardware software infrastructure for it? What is the attitude? What is the ability? What is the action they are taking? Are they rewarding people following controls? Are they punishing people not following controls? That is called control environment. The most important thing is attitude, ability and action of TCWG and management towards internal control. If the control environment is good, even a single line written in any manual will be followed. And if controls are not good, do anything, nothing will function properly. Just like studies, most important is whether here there is a study environment, correct? So I don't want to say that I feel out of 100 students want to study and excel, but sometimes mindset goes wrong. They take a lot of pressure. We must have observed very during these times. You love to watch even Test cricket. You love to read Google News a lot. You want to read all political news, and you know that it's of no use to you. Then only you love to. You know what is happening? A very simple thing is happening. You are running away from pressure. Moment you are under pressure, you want relief from that pressure. That few minutes of mobile phone is a relief, where you stop thinking about your problem and you smile at others' problem. And in the process you start resolving Ukraine-Russia conflict also. So what is solution, sir? Understand one thing. You only have one thing in your hand. You can use your next 1 hour properly. Use that. Nothing else. Don't take pressure. Taking any kind of pressure is going to deteriorate everything you have. Just understand one thing. Let's enjoy next 1 hour in studies. If you do that, let's make day better. Let's make week better. Let's make month better. Let's make exam better. And let's hope everything falls in place and you get marks, those were required, and you pass. It's as simple as that. Don't complicate things. Use your time effectively with lot of hope. Nothing else. Automatically it reduces pressure. Automatically it gives you more energy. And automatically it reduces urge to go towards distraction. Correct? And it happens with everyone. It happens with me also. If I take a lot of pressure, I have to cover this much course in this, so many pages in R and this and that. That day will be the worst day. And moment I say, I will enjoy the lecture, I will cover much more than what was targeted. Right? Okay, come back. So most important is control environment, and accordingly most important is study environment. But that alone is not sufficient. That is the base. That is not the end. That is the base. That is the start. Next you need is, you need to understand entities, not our entities risk assessment process. Are they identifying assessing risk? It's your organization. You are supposed to protect them. So are you having your own risk assessment process? If yes, please tell us where are the risks. It will be useful to get risk of material misstatement. Then have you designed control activities? So best is, if there is a risk in purchase, segregation of duty is a control activity. Segregation of duty is a control activity. Authorization is a control activity. There should be segregation, there will be authorization, you should keep record of all the purchases, control activity. You should make weekly, monthly purchase reports, control activity. Some manager should analyze it, control activity. End of the month, you should match stock available and stock in records, control activity. Once you know where there are risks, you should design control activities. We live in a dynamic world. Things designed one are not sufficient. You need to monitor as per changing laws, changing business, whether control activities are adequate. Are they working? Are they operating effectively? And the last is, you should know everything about your business, financial and non-financial, information system and information technology. For 5 components, a good internal control system will have good 5 controls, 5 components. Number 1, environment. If it's good environment, next they should know what can go wrong. Entities, risk assessment process. After knowing the risk, they should design control activities. Once designed, they should regularly monitor controls, and they should cover the whole organization in good information system and information technology. So they are aware what is happening across the company. Now, next interesting thing is, which can be targeted, what are the components, what are the elements of control environment? Now that first, what was it what we studied just now? Components of internal control. How to check whether there is a good control environment? How to check whether there is a good control environment? Okay, listen, it's simple. How to check whether there is good control environment? So again, what we have done, again catch the flow. We divided the points. Some points are related to TCWG. Okay, so TCWG is the bigger one. Then some point related to management. Then some points are related to human resource. Okay, see, such kind of grouping will help. Some points of TCWG, some point of management, some points of HR. Let's understand. If you want to understand whether entity is having good control environment, go and understand TCWG first. What to understand, sir? What are their attributes? That means what are their important features? Important attributes means qualities. What are their qualities? 2 points. And are they participating? Second point. Sir, qualities means, are they experienced? Are they experienced? Are they knowledgeable? Are they reputed? For good control environment, we need TCWG, that they are experienced, they are knowledgeable, and uh, reputed, independent. Then next, are they participating? Are they asking tough questions to the management? Are they involved in functioning of the company? Are they asking tough questions? Why management has done such decisions? Are they asking tough questions? Are they interacting with auditors? That is called participation of TCWG. TCWG with good qualities and TCWG which is actively participating in functional and communicating with auditor will lead to good control environment. Then next is, are we having good management? How are we going to have good management? Simple. Whether management, whenever management take big decisions, do they consider business risk? Are they aware that business risk is very important thing and they should be considered while taking decision making? Good management. Next, what is the importance they are giving to? What is the importance they are giving to information processing? Are they giving importance? Are they having adequate staff? Are they having adequate softwares, infrastructure for information processing, financial, non-financial? How much importance they are giving to financial reporting? Are they serious about selecting policies, making estimates, making disclosures? Quality of financial statements means three things. AED. Quality of finance. I'm not saying quality of audit. Quality of financial statements. Quality of accounting means three things. AED. Accounting policy, estimates, and disclosures. Are they concerned about it? So you need good TCWG with qualities and involvement. You need good management who take business risk properly and give importance to information processing and financial reporting accounting. Then you need good human resource. There should be policies and procedures for what? Recruitment. After recruitment, there should be policies and procedures for recruitment of people. After recruitment, orientation. After orientation, training. After training, when they start working, evaluation. When they are stuck, counseling. When they work good, promotion. Are you having proper policies and procedure for HR? If you're not having enough people, you cannot have good controls. So are you having policies and procedures for HR? After having adequate number of people, are you giving people work as per their competence? Now you have recruited good number of people. After recruitment, are you giving their work as per the competence? Are you making proper structure where proper reporting happens? You know who is going to report whom. Are you giving people authority in organization structure? Then only they will be able to run plant and factories and branch properly. They need authority. And finally, are they continuously communicating to people what are ethical values? People should be told what is correct and what is not. They should be told what will be the consequences. Then only they will behave properly. Let's freeze, guys. Good PCWG, good management, good human resource, good policies from recruitment to compensation. Once you have recruited, you should give them work as per competence. Once you have given them work, you should make organization structure for reporting. Once you make your structure, give them authority to perform. Finally, when they are performing, then next is good communication. Inform them what is good and what is bad. Having satisfactory control environment is good. It's a positive factor. All other components will work properly. But only control environment is not sufficient. You need other factors also if you want to prevent and detect and correct material misstatements. Okay. Quickly, one more thing. So we focus on one. Next is monitoring control. What do you mean monitoring? To go and study and evaluate existing internal control systems. Are they operating effectively? Are they operating effectively? That is called monitoring of control. Auditor should go and understand how good is monitoring of controls in any organization. What are the ways of monitoring? Number one, monitoring can happen through ongoing activities. Sir, what do you mean by that? Companies may prepare weekly reports or monthly reports like MIS. Many of these reports are superb. They tell you whether everything is all right in the company. They are superb to understand whether controls are operating effectively. Monitoring can happen through ongoing activities, means through ongoing processes already there, like monthly information system, monthly reports are best way to monitor. What else? Separate evaluation. You can appoint person to do audit of systems. Internal audit is an example of separate evaluation. You can appoint a cyber security expert to check whether cyber security is proper. You can use combination of above. And fourth, you can use information from external parties. Feedbacks given by suppliers, feedbacks given by customers is a best source of information whether your systems are operating properly. First, explain definition. Auditor should understand there are different ways. First is ongoing activities can give you very lot of information for monitoring. Next, separate evaluations can be there. You can appoint people, management. Then next, combination. Fourth is feedbacks from the external parties. It is good to know whether systems are working properly. What will happen in small entities? Small entities, not so many things are not there. It is very simple monitoring, owner and manager. Owner or manager, a small shop, owner and manager supervision is the only control, and that is only monitoring. They only see whether controls are operating properly. They only see whether financial data is appropriate, income, expense, asset, liability. Everything is done by managers. You won't find anything very extraordinary in small businesses. Okay. Quickly, Asset 265, lot we have covered in the Q&A question. Okay, you know about 265's communicating deficiency. It is about communicating deficiency. Now, there is a very interesting MCQ that was asked. When to communicate deficiency? When? We are not talking about which communication. When to communicate deficiencies? Very interesting. Let's understand. When to communicate deficiencies, and there was a proper MCQ on this with date, with the companies, with the dates. It was there in the, I think it was asked in one of the MTPs or RTPs. In case of listed companies, if you come to know about significant, see, deficiencies are divided into two parts, that is significant and other. If it can lead to material misstatements, huge misstatements, such deficiencies are called significant, and then remaining are called other. For example, companies buying coal of 800 crores every year, and they are buying wood of 5 crores every year. If deficiency is connected to coal, that will be a significant deficiency. Connected to wood, it will be a other deficiency. When to communicate it? If it is a listed company, it should be communicated before date of approval of financial statement. Before date of approval. Listed company is a very sensitive thing. Don't delay communication. Communicate before entity finalizes their financial statement. Maybe because of your communication, they may go in depth in some of the areas, and they may rectify financial statements and make them better. So communicate it before they finalize their financial statements. When it comes to other entities, you can relax. They are not very sensitive. They are not listed. They are family businesses. You have to communicate before you assemble your audit file. You are aware about assembly? When you simply arrange your documents systematically at one place in proper files, that is called as assembly of audit file. It should be done within 60 days from the date of signing audit report. In case of other entities, communication should be done before assembly of audit file. So they made wonderful MCQs. They gave companies names. They said these are listed, these are public, these are private, and then they said nature of deficiency and when it was communicated. And you decide as an auditor whether the communication is appropriate or not. For listed, before approval, and for other, before assembly. Of course, if it's a significant deficiency, you can first communicate orally and then you back it up with the written communication. Written communication is mandatory, but as a precaution, first give oral communication because it's very sensitive area, and then you go for written. Okay. So we have framed something called, we have image recognition technique for three things. To remember 21 clauses of CARO. Then to remember 50 clauses of tax audit. Counting number wise it is 44, but counting wise it is 50. And third, to remember 34 clauses of professional ethics. Quickly, listen. See, the whole thing is we can remember images in much better manner. Don't focus on the text. Okay. So, very simple thing. Student has become CA. So, after becoming CA, 21 clauses we have divided into three parts, 777. Just see the first image, that is Flipkart. Yellow icon, that is Flipkart. He goes on Flipkart for shopping. Now he says, I am a CA, I will fly. He books ticket to all the metros. I will go and explore the job opportunities there. Then next, he goes to LinkedIn, whom to talk to in these metros, whom to contact. Blue color logo, LinkedIn. Then he goes to, after getting the contacts, live.com is an email service. He goes and starts drafting mail to be sent to everyone. He wanted to attach some documents, so you must be aware Dropbox is a cloud service. Finally, he has sent mail. CA course teaches you everything except one thing, current affairs. If there would have been a subject in current affairs, you would have read newspapers daily. Those students who are appearing for IS, they do it because that is their subject. So to update, he goes to CNN written in red, CNN website to get the current affairs, and finally, after everything is done, he is sitting in aircraft and listening to music, Spotify. 7 clauses done. Yellow color icon, that is Flipkart, that is fixed asset. Then we have aircraft, Indian Airlines, that is for inventory. Blue color logo, that is LinkedIn, loans given. We'll see that clause. Then we have live.com, that is loan under section 185 and 186. Then you have box, blue open box, that is deposits. Dropbox, that is deposits. Then we have CNN, that is for past records. And then we have Spotify, that is for statutory dues. See, if you get question on deposits, so you should recall the image. Dropbox 1, 2, 3, 4, 5. Number will come out. Don't try to remember numbers because numbers are very repetitive in nature. You know why it is challenging to remember audit? Because you keep getting repetitive things. It is difficult to distinguish one thing from another. If it is easy to distinguish, you will retain more. On the same line, so just don't focus on numbers, focus on images. So we have 7 websites. Then next, again focus on images. As I said, you got blue color logo, that is Tata Steel. Tata Steel. Then you got blue and yellow, that is LIC. Then you got very thin font, Infosys. Then blue and black, Finolex Cable. Quickly, first was Tata Steel, then blue and yellow, LIC, then only blue font, Infosys, blue and black, Finolex. 3 more companies, black and red, Network 18, then gold and black, Reliance, orange and blue, Indian Oil. Now, 7 companies are there. Tata Steel is for transactions, unrecorded transactions. Then we have LIC, that is for loan repayment. Then we have After loan, after LIC, we have Infosys, IPO, FPO, private placement money. Then after Infosys, we have Phenolics Cable, that is for fraud reporting. Then we have Black and Red, that is Network 18, that is for needy companies. Then we have Golden and Black, that is for Reliance, related parties. Orange and Blue, Indian Oil, that is for internal audit. Tata Steel, transaction, LIC, loan repayment, Infosys, IPFPO, Phenolics Cable, fraud, Network 18, needy company, Reliance, related party, Indian Oil is for internal audit. So we are through with 14 clauses. Next is just focus on images. Then what he is eating. So you get almonds and cashew nuts, that is nuts. Orange color, carrot. And now this Hindi word, chiku. What do you call this in Tamil? Sapota. Okay, so that is chiku. So some good things, some bad things. Rabdi, bad for health. Madira, very bad. And then chocolate, some good things, some bad things, and then superfood. Avocado. Okay, okay. Time for Madira after exam. Okay, it is injurious to health. Now, listen. Now, nuts. Nuts is non-cash transaction. Nuts is non-cash transaction. When we have carrot, that is certificate of registration. Then we have chiku, that is for cash losses. Then we have rabdi, that is for resignation of auditor. Madira is for material uncertainty. So there is a connection of SA 570 and CARO. Then after Madira, chocolate, that is for CSR, and avocado is for adverse comment. Now, okay. So we have 7 websites for shopping. We have 7 companies, and then we have 7 items to eat, food items. You recall the image, you will get the number. And at least by doing this, you have rough idea. I think it increases level of confidence that at least I know how many clauses are there and what is the name of each clause. That gives some sense of okay confidence. Now, let's focus on some important clauses. Come to clause number 3, which students generally fear. 6 things need to be reported here. Clause number 3, so you should know 1, 2, 3. LinkedIn, loans and advances given. In fact, investments made also are covered. So if company has made loans and advances, let's understand. Very simple, 6 things. Number 1, you should remember the word aggregate. So in point number 1, details need to be given with respect to aggregate amount of loans and advances given during the year and how much is outstanding at the year end. And it should be divided into 2 parts, within the group and outside group. How much money you have given on an aggregate and how much is outstanding within the group and outside the group. Within the group means subsidiaries, joint ventures and associates and other than them. Simple. So only one. See, that is the secret to memory. Don't try to remember the sentence. Just target one single word. Then after aggregate, next prejudicial. Whether any of the loan given, advance given or investment made is prejudicial. Prejudicial means harmful to the interest of the company. Okay. After you are given this, whether repayment terms are there, whether recovery is regular, whether repayment of the loan is happening on regular basis. So it's in a simple flow. First, how much is given? Is it prejudicial? Are you recovering it on regular basis? Finally, is there any overdue amount exceeding 90 days? Overdue amount more than 90 days? Then, are you fooling people? Whether during the year, word renewal is good to focus on. Whether during the year, loans have become due and you are supposed to recover the money. Loans became due and you were supposed to recover the money. But what you did instead, you extended them. Okay, pay after 1 year. You renewed them. Okay, we are going to treat it as a fresh loan, pay after 3 years. Or you have given them a fresh loan, take this loan to repay old loan. That means you are fooling everyone. That is called evergreening. So tell us, what is the percentage of evergreening? That means out of all the new loans you have given during the year, 20%, 30%, 40% is to cover up the old loans. Give the percentage. How much percentage to cover up the old loans? And finally, are you doing any foolish activity? Are there loans on demand? On demand means you will get money whenever whenever you want it. Only few people can repay in such a manner. Only big banks can do it. Have you given loan to people on terms and condition that they are repayable on demand? Or next foolishness is there are no repayment terms specified. We will mutually decide. That's also nonsense. So what is the aggregate amount and percentage of loan where they are payable on demand or no repayment terms? 6 things, guys. First, aggregate amount, then are they prejudicial, then are whether the repayment is regular, overdue amount more than 90 days, evergreening is there, amount and percentage, and lastly whether the foolishness is there, on demand or no terms, aggregate and percentage. Out of the 6 things, 2 things need not be reported if your business is giving loan. First point and fifth point. If your business is financing, no need to make report first and fifth point. So this is the clause which generally students find challenging. Quickly. Clause number 9, LIC, 7 basics were done, Tata and then LIC. We have to report 2 things. Whether there is a default in repayment of loan. Whether there is a default in repayment of loan. If there is a default in repayment or loan or interest, whoever is the lender doesn't matter. Give details. Yes, this was the nature of loan, long term or short term. Name only if government banks. See, there is sequence in that also. Big is government, below that bank, below that FI. What was the amount, whether it was principal or interest and number of days. Very simple thing. If there is default in repayment of loan or interest, all the details need to be specified. What was the nature of the loan, name of the people, if they are government banks and financial institution, what was the amount, what was the nature, and what was the number of delay. Whether company is declared as willful defaulter, you all must be aware that banks can declare corporates as willful defaulter. Whether such thing is done, comment yes, no. Then you are supposed to comment on usage also. First, whether there is a default, and next, usage. Whether term loan is used for proper purpose. If this money was there for refinery, is it used for refinery? Next, the suicidal thing, whether short-term finance is used for long-term purpose. Aircraft useful life is 20 years and you are taking loan of 5 years for it. This aircraft will give you money back in 20 years and you have committed to repay the money in 5 years. Suicidal. However good you are in business, after 5 years, it's going to be suicide. Then, what about group funding? Are you raising money for your group, subsidiaries, joint ventures and associates? And the opposite, are you pledging their shares to raise money? You report two things. Are you raising for them or you are pledging their shares to raise money? Two things it is. So when it comes to usage, there are 2 points, and then there are 2 points to group. Let's freeze, guys. We have to comment on. Defaults. You have to comment on usage, and then you have to comment on group. Are you raising money for them or using them? They are raising more money for you. Come to clause number 16. See, some clauses you are studying so many times. You have studied fixed asset, inventory, fixed asset, inventory. Many times battery goes down in first two clause only. Now, NBFC. So the first important thing is this clause is applicable only to NBFCs, not everyone. You have to comment number 1, whether this company needs registration, whether this company is a NBFC and do they need registration. If yes, whether they are having valid certificate of registration. Listen, guys, you must be aware we have NBFC chapter. Okay, there are some chapters which are not covered in this chart book. You rely on IMP list. Okay, so we were waiting for the new course to come. We thought it will come in last attempt. So we're waiting to come up with the new edition. This chart book doesn't cover chapter of CFS, NBFC. It is not covering CFS. It is not covering NBFC. It is not covering AAE. These are 3 small chapters. It is not covering 2 big chapters, bank and insurance. Rely on the important list and discussion done there. Okay. And then if you want to study, we have uploaded full lecture of bank audit also. If you have time, it is 6-hour lecture. If you have time, you can refer that. Okay. Now, so first decide whether this company is an NBFC. When a company becomes NBFC? When company becomes NBFC? When more than 50% of the income is of financial nature and more than 50% of the asset is of financial asset. So go and check whether it is an NBFC. If it is an NBFC, it will need valid certificate of registration. Are they having it? Next, if it's an NBFC or housing, whether they have done any activity without valid COR. So it's very simple. First go and see whether COR is required, and they have taken it. And next, are they doing any activity without COR? Everyone knows about core investment company. NBFC which is formed only to finance particular group, particular business group, that is called as core investment company. For only Reliance, for only Adani, for only Tata, for only Birla, for only some Reddy's. So if it is only for particular business group, that is called as core investment company. Good thing is core investment company doesn't need registration with RBI. Registration is required only when their asset size exceed 100 crores. So we are supposed to comment 3 things. Number 1, whether company fulfills criteria to be a core investment company. RBI specified condition, you can only finance one group, and that financing should be so much percent in equity, so much percent in debt, and so on. Do you fulfill criteria to be core investment company? Next, whether there are more than one core investment company. There can be. One core investment company is given job to bring finance from India. One is given job to bring finance from US. One is given job to bring finance from other parts of the world. So first, is it a CSA? Is company fulfilling requirement to become a CIC? Whether there are more than one CICs in a group. And last, whether they are exempt from registration. Till the time asset size doesn't cross 100 crore, they will be exempt. So we have to comment whether this NBFC is having certificate of registration, whether they have done anything without certificate of registration. We also have to comment whether it is a CIC, there are multiple CICs, and do they fulfill condition to be exempt. Clause number 17. Clause number 17, cash losses, Chiku. Whether there are cash losses in the current year and previous year. What do you mean by cash losses? Reverse depreciation. It is a non-cash expenditure. Cash flow was done years back. There is no cash flow involved in the current year or future year. Reverse depreciation, and after reversal also, still they are into losses. Then that is called as cash losses. So whether they are cash flow in the current year and previous year. Clause 20. Chocolate CSR. Chocolate CSR. It's very simple. We have to comment on unspent amount of CSR. Listen, we all know we have to spend 2% of the profit. So suppose 2% of the profit is 200 lakhs. How much it is? 200 lakhs. When they have spent 120 as per list given in schedule 7. List given in schedule 7. Great. We don't have to report about that. We have to report about unspent amount. Unspent amount is how much? 80 lakhs. Now you must be aware, if amount is unspent, two things can happen. Is it for ongoing project? Ongoing project means which will be completed in multiple years. That is called as ongoing project. So you have to comment so much of amount is for ongoing project. Then you have to see whether they have fulfilled the condition. If it's an ongoing project, within 30 days they have to transfer the amount to a account called unspent CSR amount. Unspent CSR amount, that account into transfer. And you have to use this money within 3 years. If you don't use it within 3 years, after end of 3 years, within 30 days, it should be transferred to one of the funds given in schedule 7. They directly funds, go and directly donate it. It's very simple. We have to comment about the unspent amount. How much is the unspent amount? Is it for ongoing project? If yes, whether it's transferred to separate account, and is it used? If not used, it should be transferred within 30 days to fund given in schedule 7. Next, we have to comment on other than ongoing project. Okay, there is no ongoing project. So bad. It should be directly transferred to the fund. We should check whether it is transferred within 6 months from the end of the financial year to the fund. See, they are given time because liquidity is also required. You are earning profit, that doesn't mean you have that much of liquidity. Now, listen. Clause number 21 is the most interesting clause. Listen. Is CARO applicable to audit report of consolidated financial statement? No. CARO is not applicable to audit report of consolidated financial statements. But there is one exception. Clause 21. All the 20 clauses you will find in standalone audit report on standalone financial statement. All 20. Only one clause you will find in audit report of consolidated financial statement, which is very simple clause. It says in consolidated financial statement audit report, in annexure, give list of all the companies in the group which are having adverse comments. Adverse only CARO comments, not adverse report. Adverse CARO comments. If yes, write the name of the company, whatever is the relationship, it's a holding company or subsidiary or whatever it is, and clause numbers. So we'll have company ABC Limited, it is a subsidiary, and next column is clause number 2, 5 and 9. There is a adverse reporting. Okay, so it's very simple. We have to give list of companies, and in front of each company we need to specify clause numbers where adverse reporting was done in CARO. So investor knows in a single page where are the adverse comments, and directly go and read that much only. In fact, that makes all the sense. Why to read other clauses if everything is fine? You getting this point? Okay. We completed 3 chapters that covered almost all the standards, 45 marks. Then we just covered CARO and some important clauses. Okay, let's do one thing. Let's study shortcut to remember 50 clauses of tax audit. It is on the same lines. Yes, no. We don't have any option left. Okay. Now, it's very easy one. You remember CARO, there were 7 what? Websites, 7 companies and 7 food items. Now, see, for majority this image recognition thing works. Majority. But if anyone is having issues with images, correct, it may happen. We all are different. So it may happen. If there is a problem with images, then it may not work. So go to page number 59. Let's see. So we have initial 10 clauses. First 4 are dedicated. First 4 clauses are dedicated for identifying assessee. Name of the assessee, then address of the assessee, then PAN card number of the assessee, PAN card or Aadhaar card number of the assessee, and then finally indirect tax registration number of the assessee. So first 4 clauses are dedicated for identifying the assessee. Name, address, PAN, IDT registration number. Next 4 are basics of tax. What is the status of the assessee? HUF, individual, HUF, etc. Then what is previous year? What is assessment year, and under which clause of section 44AB tax audit is being conducted. You have 5 subclauses A, B, C, D, E. We'll study it tomorrow. There are 5 subclauses. Then there is one clause 8A also. It is not written here because it is 8A also. You have to specify whether company is opting for concessional rate of taxation. Are they opting for concessional rate of taxation? Then next is you have to give details about the owners, who are the partners and what is their business. Owners and business, who are the partners and what business they are doing. Let's freeze guys, simple. Initial 10 clauses, first 4 are dedicated for identifying assessees, next 4 basics of tax, and next 2 owners and business. Again the magic is grouping. Because we grouped first 4 to identifying, next 4 to basic, next to the owner, you tend to remember it easily. So these are small things which helps in improving memory. Now listen, again focus on images, nothing else. So theme of this shortcut is entertainment. So for entertainment, we started watching movies, Indian movies. So first image is Bahubali. Don't read, only see the image. Next is Parmanu. You can see John Abraham. Then we can see Priyanka. That is Maricom. Then Ayushman Khurrana. That is Wicked Owner. Then we have Shahrukh Bhai. Not Deepika Ben. Deepika. Chennai Express. Okay. We are through with 5 clauses. 5 clauses. Bahubali. We have to comment on books of accounts. After Bahubali, we have Parmanu. We have to comment on presumptive basis of taxation. After Parmanu, we have Priyanka Maricom. We have to comment on method of accounting. After Priyanka, we have Wicked Owner. That is valuation of inventory, valuation of closing stock. And then we have Chennai Express, conversion of capital asset into stock in trade. Bahubali, books of account. Then go to next image, Parmanu, presumptive. Then Maricom, method of accounting. Then Wicked Owner, valuation. Then Chennai Express, conversion of capital asset into stock in trade. We want more entertainment. We again, I'm saying don't focus on text, only images. So we have a blue background and in yellow it is written Pokemon. Then we have red Tom and Jerry. Then we have flying people Doraemon, not very famous. Then we have with a cap Aladdin. Then we have with dhoti Bheem, Choda Bheem. Yes. Now again recall the image, blue with yellow font, that is Pokemon. P&L incomes not credited. So there were incomes but they were not credited to P&L. Then we have Tom and Jerry, transfer of property below Stamp Act value. Below Stamp Act value. After Tom and Jerry, next is flying Doraemon, depreciation. After Doraemon, next we have is Aladdin, that is admissible. A complete list is given whether amount is admissible under following sections. Is it deductible? Then we have Bheem, Choda Bheem, that is bonus or commission, whether bonus or commission is paid, because you are going to get payment basis deduction. Okay, listen. Sometimes people are frightened with tax audit because they have never done tax audit. Doesn't make any difference. Doesn't make it. In fact, in audit, unfortunately, those who have not done practical audit properly, they score good marks. Unfortunately. Unfortunately, that is the case. Okay. So we'll explain it after this shortcut how that happens. Now we want more entertainment. Hollywood. So Marvel and DC fans. So that is Deadpool. Then there is Iron Man. Very old movie. Arnold movie. Predator. Then we have Doctor Strange. Then we have Captain America. Let's focus. So first that was Deadpool. Then we have Iron Man. Then we have Predator. Then there is Doctor Strange. And then with the shield, Captain America. Deadpool. Debited to P&L but not allowed. What are the expenses which are debited to P&L but they are not allowed? Then after Deadpool, we have Iron Man. Interest under MSMED. Interest under MSMED, not allowed. Then after Iron Man, that is Predator. Payment to relatives. Some relatives are. Payment to relatives. Predator. Then Doctor Strange. Deemed income. If you break conditions of any exemption, it becomes chargeable under your hand as deemed income. For example, you took asset for scientific research and later on you didn't use it for adequate number of years. Then after Doctor Strange, next is Captain America, chargeable to tax under section 41. When things are reversed, bad debt, you got recovery, it gets chargeable under 41. So guys, how many initial clauses we had? 10. Then 5 Indian movies, 5 cartoons, 5 Hollywood movies. Now, see, and the complete thing is you try to retain the image. Now, next is, so we want more entertainment. So let's listen to speech of politicians. So now we don't have with us Mr. Parikar Saab. He was a very good defense minister, Mr. Parikar. Then we have Chidambaram Saab. Then woman power, Smriti Irani ji. Then Sonia ji. Politician, they should be G. You never know who feels bad. Okay. Then Hillary Clinton G won't look good. Hillary Clinton. Okay. So 5 politician. Parikar Saab. Payment basis deduction. 43B. Payment basis deduction. 43B. Chidambaram Saab. Senvat details. Smriti Irani ji. Shares received without consideration or low consideration. Sonia ji. Shares issued. Shares issued. Okay. For price more than fair value. You are getting more money than your fair value. That is a gift income. Shares issued. Hillary Clinton, hundi. If there is a hundi transaction, that is Hillary Clinton. Sir, why 2 and 3 are written? Because there is a 29A also and 29B also. Sir, why 3 is written? There is 30A, 30B, 30C. Okay, anyways. Parikar Saab, payment basis. Chidambaram Saab, Senvat. Smriti ji, shares received. Sonia ji, shares issued. First we receive and then we issue. And then Hillary Clinton, hundi. We want more entertainment. So we went to zoo. See, there is a sequence again. So our charts are the, you see the layers, their interpretations. So we go to zoo, big animal, lion, then smaller than lion, leopard, smaller than leopard, dog is jungly dog, then smaller than that, tortoise. Once you come out of the zoo, you see goat. Okay, that's you say like you remember that. So lion, we have to give details about loans and deposits taken and repaid. Leopard, losses. After leopard, dog, deduction under chapter 6A. Then tortoise, TDS. Then goats, goods, quantitative details. Then do all these things you need money. So spending in dollars. Then next is Canadian dollar. Next is euro, golden euro. Then K is for Kenya shilling. And then our rupee. Dollar, DDT, dividend distribution tax, no longer applicable. Then Canadian dollar, cost audit report. Then we have euro, excise audit report, shilling, service tax report, and then we have rupee, ratios. If these reports are having negative points, we need to mention it here. Then ratios need to be given. Finally, last four, banks. Blue color bank, it's in problem. Deutsche Bank nowadays. You never know if they will survive. People say they will do it. Then again we got a dog, syndicate bank. Then we got a new bank, two new banks, RBL and then Bandhan. So Deutsche Bank, we have to give details of demand and refund orders issued on the assessee, other than income tax and wealth tax. Then of Deutsche Bank, then we have syndicate bank. So we need to tell whether statements are submitted. Statement 61 and 61A, they are basically high value transaction statements. High value transactions, SFT, whether the high value transactions are statements are reported. Then we have RBL Bank, report under section 286. Report under section 286 need to be given. And after RBL, Bandhan Bank. Our Bandhan Bank, breakup of the expenditure, how much is paid to registered, how much is paid to unregistered, and so on. Okay.